Hello and welcome everyone to ZaranTech.
In today's fast-paced business environment, managing financial risks efficiently is crucial. That's where SAP S/4HANA Financial Supply Chain Management or FSCM Treasury and Risk Management comes into play. Let's dive into an introductory course on this essential topic. It's a vital aspect of managing financial processes within organizations, focusing on treasury operations and risk management strategies. Embrace SAP S/4HANA FSCM TRM for up to 30% cost reduction and 25% revenue increase. Mastering it enhances decision-making, streamlines processes, and boosts business outcomes across finance, IT, and management. This course covers SAP S/4HANA FSCM TRM basics, including core concepts, functionalities, and implementation strategies. Learn treasury operations, risk management, and how SAP S/4HANA transforms finance. Let's dive in.
What is FSCM and what is the importance of FSCM? Why it is required for the business, and how it is different from your ECC, and how it is different in S/4HANA. These we will have a look in session. And as I mentioned earlier, those who are not here, but FSCM comes with several modules: credit management, collections management, dispute management, biller direct, in-house cash, cash management, bank communication management, treasury and risk management. These are the main modules. However, why FSCM is required and what happened before FSCM come into the picture. FSCM stands for Financial Supply Chain Management, and it is designed simply to improve the financial parts of the supply chain. So here the financial part means nothing but your accounts receivable. Throughout our session, we will be talking about integrating credit management, collections, and dispute with the AR, accounts receivable, and some portion is also with the sales and distribution. So it's a triangle integration: accounts receivable, collections management, accounts receivable, credit management, and sales and distribution. So this module includes a range of features and modules intended to increase overall efficiency in managing the financial components of supply chain, lowering the risk and improve the financial process. Okay, so basically some of the modules, like in the collections management, it proactively tell to the users or the collection agents, like see that which customer has to pay the money and why the invoice amount was not paid. It will give you a kind of a picture in the system to show and talk to the customer who have not paid, whose invoices are overdue. So higher the overdue and longest the payment due, then the risk is high. So that's the reason this module also helps to get a proactive approach to call the customer to get the outstanding invoices. Okay, so what does the FSCM stands for? As I mentioned, Financial Supply Chain Management. Normally, supply chain management means we talk about the logistics, but this talks about purely within your finance integration, that is AR integration with your FSCM module. It emphasizes on financial operations, supply chain, like larger supply chain environment, and the management highlighted the module's functionality in effective way managing financial activities. Each component of the acronym stands for crucial components of the module. If you see here in this particular diagram, you see cash management, treasury management, credit management, invoice billing, and payment management. Well, your cash flow always depends on your incoming payments and outgoing payments, but we will talk about only the cash management. And the treasury management, it includes both external and internal treasury operations. What are the treasury external operation and internal operations? So internal operations means how the money is to be spent within the company, like once the money comes from your customers, or if the external source of a bank loans or any external financial services, once you receive the money, then how do you handle? making payments to vendors and making payments to for employees or any other ad hoc expenses within the organization. So external treasury operations means it's your company's financial exposure to external to the company, like in the market, like how you are using your stocks, how your foreign exchange operations are happening, how you are doing your deposit with the financial companies, including banks. Then you will also have a commodity market and companies risk exposure outside the organization. All those things will be considered in the treasury management. We will talk about that when we come into the treasury module. So the credit management. So why we need credit management? What is its important? How it is different compared to your standard ECC credit management? There are two credit managements. One is ECC standard credit management, and the advanced version is FSCM credit management. Some of the processes are identical, but in FSCM you have a new features and functionalities. There are limitations in ECC, and that's being addressed in FSCM credit management. So we will talk about the credit rule engine. We will also talk the concept of the business partner. We also talk about the formulas defined to do a credit check, integrating your SAP system with the external credit rating agencies, why you need external credit rating agencies, how periodically you need to check the external credit agency data referring to your customers. So when we go to the FSCM credit management, we will call the customer as a business partner. And how your customer master for credit management in ECC is different from the business partner. What are the integration point with the sales and distribution? What are the different roles those are defined within the organization relating to credit manager and accounts receivable manager, and at the same time your sales analyst. So all those integration functionalities we will be talking within the credit management. Going forward, credit management, nothing but FSCM credit management. Initially, we talk about the differences between ECC and FSCM credit management, how FSCM credit management is advanced compared to ECC. All those things we will be talking in our next few sessions on the FSCM credit management. Now, what the collections management will do. So the collection management means it is a kind of outsourced operation in most of the big companies. What they do is they will have a group of people. Okay, if an organization is huge, like if you take your Google or take an Amazon, take an Microsoft, or even take an T-Mobile, AT&T, and in India, it's not if you take a Reliance company or Airtel, the customer base for those organizations is huge. It will be in hundreds and thousands, maybe in millions customers will be there. Okay. Now, different people have to pay bills in the different timings. And within those organizations, you will have the customers differently, like end customers like you and me. And you will have companies also as a customers. Government employees also as a customers. And government employees, they may not be paying the bill. Government must be paying on behalf of them. And in the public sector, companies will pay your mobile bills rather than your own employee. Similarly, being an individual, you may have in a different plans. Like prepaid will be there, postpaid will be there, and postpaid you will have your family plan, like family connection plan. And within the family, 3 members take together, you have a different type of pricing plan. If it's a senior citizens, you have different pricing plan. If you're physically handicapped, you have different pricing plan. Okay, you are having in a different type of a plan. And in a month, if a company, from your company standpoint, you see, if you are in a mobile company you are working, think from that standpoint. You have thousands of customers, 100,000s of customers. In Indian language, you say lakhs. Lakhs of people will be there, or millions of people will be there. They are using the mobile phones, and everybody has to pay the bill. If somebody won't pay the bill, what do you do? We know that it gets disconnected, or it is on hold. You're not able to do incoming and outgoing calls. But from the company standpoint, we don't want to trouble the customer. All that what we want to do is we have to get the invoice payment. That's a bill payment. So from the organization standpoint, group of people, what they do is they will be allocated, hey, this region customer, your team will talk, and this region customer, your team will talk. So those guys, what they do, they will call the customers, and customer will find out, hey, what is the reason that you're not paid your bill? Okay, what's the reason why you're not paid a bill? Is there any issue with the bill? Do you have any concern, or do you need more time? How do you want to make the payment? So proactively, the users will be calling the customers and try to get the payment. Organization is to get the payment, not to trouble the customers. So how the whole collection process happens within the organization, that we will talk in the collections management. I'm giving very high level picture, but when we go into the details, is it really a big deal to get money from the customer? Yes. When you have millions of customers and you have a different pricing, you need to talk to the customer. If you keep on disconnecting, then you'll be losing the customers, and that customer will be switching to different company. According to the business operations and the business model and pricing mechanism, customers will always choose a new service provider. That is a different. But as an organization, if somebody have not paid the money, we need to get the money. An individual, you may be like 500, 1,000, 2,000. But in the B2B scenario, that is business to business scenario, the invoices will be outstanding for a huge amount. Then business has to talk to them. Your AR team has to talk to them. Within the AR, you have a separate team, as I mentioned, the collections team. They have to talk to the customer, find out whether they received an invoice. Yes. Then why have not paid the money? There could be any reason. You will record that reason. You take the concern of the customer and address them from the organization standpoint. Customer said that, hey, your tax is not properly charged. You charged the wrong amount. Whatever it is, I received a defective goods. Why should I pay? So those type of things needs to be addressed by the business. So those business users will talk to the customer on what basis you have to talk. Sometimes even for the good customers also, you need to talk to them. That the premium customers, they should not get affected because of our any policies, because of our any associates, business side. So those things will be discussed in the invoice management. Now, invoice and billing, this is more related to your credit management. Okay, so we will talk about it. We will not be creating any invoices, and we will not be creating any billing for understanding of the invoice and billing, but these will be created referring to the functionality of the FSCM credit management to understand. When you have a credit management, you need to do credit check. You will give a certain amount of a limit to the customer. Okay, up to this amount, you are allowed to take a credit. And where you do the check, how many invoices are already pending, how many invoices are overdue, and based on that, we will put that, hey, whether customer is having a limit to avail it. We will do that, the credit check at the time of a sales order, or at the time of a billing, or at the time of a delivery. So how that integration happens referring to credit management, we'll talk about it. Your invoices are also related to your collection management, and they are also related to your dispute management. So we will discuss when we go about the invoice and billing referring to credit management, collections, and dispute management. Now, the payment management we talk more from the AR side. So how the incoming payment comes, they will come either through a electronic bank statement. If a customer makes directly payment to the bank, and you will get that information from the electronic bank statement. If the customer pays the check directly to the organization, then company will deposit that the check and credit to the customer account. Or if you have in countries like US, you will have a logbox functionality where all the checks will be sent to the bank or logbox, and the logbox company will deposit the check in company's account, get that money, and send that information to organization through SFTP or through IDOC. Then the payments get posted. Then that will have a different type of a behavior, either partly paid or fully paid, overpaid, underpaid, whether the payment information is matching or not. If it is matching, you apply that to the customer, then it has to reflect in our collection management, it has to reflect on credit limit, and so on. So payment management is not part of our training, but we will explain it to you when we go to the whole functional type FSCM. So there is a one more that is missing here, the dispute management, but that's okay. It comes under your invoicing and payment. Do you guys have any questions so far?
No, from mine.
Okay. If I'm not hearing from anyone, means that's good. What happens if we don't have FSCM? We have been running on ECC, it's working fine. But why all of a sudden FSCM? FSCM is not directly posting a transaction within SAP to see the account balances. That is not what FSCM is meant for. FSCM tool, particularly credit collections and dispute management, is an operational convenience to the business to see how the whole AR looks like. AR means accounts receivable functionality looks like, referring to the customer payments. That's all about your why SAP FSCM, referring to the modules we talked about, credit, collections, and disputes. It is an integrative financial solutions. Financially means AR, accounts receivable solution. Your credit management, collection management, dispute management, all these three modules are integrated, and credit management is integrated with your sales and distribution. Collections and dispute management module is integrated with your customer AR. AR means customer balances, customer open items, and customer credit limit. So they are tightly integrated. So that is the reason it's mentioned as an integrated solution. Cash flow optimization. As I mentioned before this slide, our intention is to get the outstanding bills from the customer. Unless the credit limit is exceeded, customer is allowed to draw the services and goods from the organization. And once the credit limit is exceeded, we will block further orders and we will not supply any material to the customer. Rather, we will ask them to make a payment so that the whole business with that customer will go smoothly and customer is not affected. And our financial limit, that's a credit limit that we give to the customer, also won't get affected. Rather, we see the behavior of the customer. If required, we will increase the credit limit. If the customer is not at all making a payment on time, we will talk to them, we'll find out the reason and see that what other improvement steps need to be taken. Those things also be done. Cash flow optimization also indicates that we have to get the outstanding bills from the customer by talking to them proactively. Okay, so everything is a part of your cash flow from the customer. It's a more of AR, more of incoming, not your AP, not your outgoing. Now, improve customer and supplier connections. So basically, when you are in touch with the customer for one reason or the other reason, it means if it's an outstanding, good that you talk to the customer and ask the customer to make a payment. But sometimes if there are no outstanding payments, customer is making payment on time, still it is good to talk to the customer and ask them, hey, do you have any suggestions for us? Do you have any improvements? Or you can talk to the customer and explain them your new customer services and your new product that you launched. So indirectly you are talking to the customer, and canvassing means advertising your company products to the customer. In that way, existing customers, they can also explore your new goods and services. And one thing, and it also gives us supplier connections. Though we are not talking directly about your vendors, but some of the customers also your vendors. You buy material from them and they buy material from you. If there are any if there are any supplier issues, that also you note it and you can pass it on to your own supplier team. When I'm talking about your own means, I assume that you are talking everything from your organization standpoint, not your TCS. I'm talking about your end customer. When you go to an implementation, you have to see the whole business from their business perspective. Okay, so that's the reason I'm talking about your improvement customer and supplier connections are the relationship. So lower the risk. When you proactively talk to your customer and get your invoice, then obviously what happens, you are reducing the risk of losing money, reducing of a risk of waiting till the customer declares as a kind of a bankruptcy. So in that way, you know that what the customer says is the customer is trying to avoid the payment or the customer is delaying the payment that affect my financials, all those things that you'll be able to handle using FSCM. Now, working capital management, you know that working capital, right? So when you have more cash flow and more incoming payments on time, then you don't have to go for external borrowing for your day-to-day cash requirements. So for your day-to-day operations, when you have to make a payment to your suppliers or the wages or salaries, and if you don't have sufficient money, then you will think that borrowing money from external organization. It could be a quick financial service, financial loan from financial service company, or it could be a loan from the bank, or it could be an intercompany loan, anything. Those things also you will be able to manage effectively when you predict your incoming cash from your customers. So these are all several benefits that having an FSCM. Remember, each organization will have a different type of settings in the system, and depends on that they will be able to reap the benefits. So all these things that is possible in FSCM. If you ask here, these are not possible in ECC, they were possible, but they must be using some third-party systems. For your credit management standard, ECC is there. But if you want to get your credit score from external credit agency like DNB, what you used to do is you used to download the file and you upload the credit rating of your customers in the organization. Okay, so that in the organization, the users would be doing it. But whereas having an FSCM credit management integrating with your external credit agency, periodically the system will send the call to your external credit rating agencies, get that information and update in your ECC to understand how they have been rated. Are they good customers, premium customers, bad customers, are very high risk customers, or low risk customer? Those judgment you can do it taking your integration. And earlier in ECC, you can integrate your system with only one external credit rating agency. If you want to go for the multiple credit rating agencies data to be maintained, that is not possible within ECC, but FSCM will allow. Okay, so there are several things that we will be talking about here, FSCM functionality, when we get into the system. Okay, now, so we spoke about, right, the way FSCM applications. One is your credit management. The second one is in the collections management. The third one is in the dispute management. We also talk about an in-house cash management, one of the functionality, treasury and risk management. Your accounts receivable is not directly part of your FSCM application, but it is integrated. So here, risk management means your FSCM treasury and risk management is one of the separate modules, a huge module. Now, cash management means your cash inflow and cash outflow, and integrating with the bank, how your electronic bank statements are integrated with the cash management. So these are all the various modules of your FSCM. Okay, so treasury is integrated with your treasury and risk management, integrated with your external business partners. In-house cash management is predominantly used within your organization when you have an intercompanies. Your company exists in your Europe, your companies are there in Asia, your companies are there in US. They are under different laws and different currencies and a different business, but they're all part of the same management. So when you have intercompany transactions, there are different type of intercompany transactions will be there. Okay, not only buying goods and services, you will also have a buying and selling of a foreign currency within the company, and you will have an intercompany loans, and you also have a cash pooling. Those things are discussed under in-house cash. It is also complex and a huge module. Collections, I mentioned earlier, and we will be seeing them in upcoming sessions. Dispute management is a simple, relatively all other modules, and it is integrated with the. And if any of your organizations, like your clients, if they have a TPM, trade promotion management, integrated with Salesforce, that also possible using a dispute management. And treasury and cash management, credit management, we're going to talk. Accounts receivable is the one which you will be working with your incoming payments, outgoing invoices integrated to your SD modules, that is the sales and invoicing and billing. Okay, so we'll talk about the competence in data management analysis and advanced higher level position, increase your earning potential, professional network access, sharpen your problem solving skill, gain gross functional expertise. So some of the opportunities are available, but these are very high level. I don't think that you need to know about in detail all these things. These are the more of a conceptual. Okay, so we will talk about this while we are doing your practicals. Okay, so we're gonna learn SAP. There are different ways. One is your lifetime access of SAP real-time case studies, project integrated to the curriculum, lifetime video access and support from our Zara team administration. Now, so credit collection, dispute, treasury, and cash management. There are different versions of FSCM. It goes with your ECC. It goes with your S4HANA compared to ECC. So ECC, there are no more changes that SAP is doing. And in S4HANA, when you go to credit collection, dispute, treasury, and risk management, SAP keeps changing them and adding the different functions, including the Fiori apps. Okay, so you need to check what SAP has been delivering in each version. Being a consultant, customers will come to you and ask you, can you explain them what are the different new things that are coming in each of these modules? And you need to review the release notes and come up what the credit management, collection, dispute, treasury, and cash management in each area that SAP has been progressing. Okay, so it will assist the business determining and keep tracking of their clients' credit worthiness. And this is streamlining the process of managing receivables. And dispute is FSCM. It facilitates effective dispute resolution. This dispute resolution, to understand fairly, it's just like your ticketing process. When you get a ticket, even your support ticket, how do you resolve? In the same way, you will have a dispute management resolution process. Okay, so I'll explain that. If the flowchart is available within the training material, that's well and good. Otherwise, I can explain you on the Excel how the whole process works. If a customer has an invoice, once he paid, system will check whether it is overpaid or underpaid. If it's an underpaid, we need to know the reason. It is in a justified or unjustified. If it is a justified, you get all the collection, all the information that why the customer is not paid the amount. Then you will talk to the relevant. You can talk to your concerned team and find out, hey, the dispute what the customer is saying is illegitimate. Put all the relevant information, give a credit note to him, and close the invoice. And customer says that, hey, I asked you something and you provided something, it is not as my expectation. There will be different reasons why the dispute happens. So all these things will be documented. You'll be doing an investigation, whether you have to get the money from the customer or you have to give the credit note to the customer. So those things we will be talking about the dispute management. Treasury and risk management, as I mentioned earlier, it's a huge and it is a big module. Okay, so we are going to limit for one product. There are different products are there within in the money market. The two pieces of treasury management. One is a money market. The other one is a risk management. Within the money market, you will have a product. The concept of the product will explain it, and we will take one product and you see that how to set that in the system. What are the various operations that you will be running in the treasury and risk management, referring to that product. So it will give some flavor, and if any of your clients have any of the product, it will at least give an idea how the whole process looks. Cash and liquidity management, as I mentioned, it will help you to do the company's cash flow, better cash management choices, and help the business to optimize in the cash holding and the liquidity. So this we will not be talking about part of this course. Perhaps it may come up in your next course. The next training. Okay. Now, some of the benefits of FSCM, to be honest, the benefits are very high level, but each and every module have its own benefits. Okay, so when we go to that module, we will explain how it's going to help implementing that particular module, how the users get benefited, how the teams get benefited, or overall how the companies get benefited. So it helps for the better cash flow, decrease the financial risk, streamline the process, improve the decision making, and an integrated solution. Okay, so better cash flow certainly because you're proactively talking to the customer. Decrease the financial risk because you will be determining whether the customer is in a good position, or are there any rumors in the market, or are there any news on the news on the TV or anywhere on the social media that this business is getting into close. If yes, how proactively we have to act, whether to give it to legal or whether our teams have to put a pressure to talking to them and get the money. So streamline the process because it is integrated. Okay, it's an integrated and eliminating all the manual activities that business will be doing. So improved decision making, yes, in certain areas it really helps, particularly in the credit management, whether to increase the existing credit limit to the business or decrease the credit limit so that we don't give more credit facility to the customers. We also call as the business partners. Okay, or whether we have to ask the down payment. Sometimes what happens is you have been doing the business with an ex business partner. Okay, the business partner is nothing but a customer, and you give it $10,000 of a credit limit. So customer has been doing good. He does the material of $5,000 and he'll make a payment on time. But all of a sudden, his business has grown, and he says that, hey, I want to need material for $50,000 from you because I got in a good order for his business. So the credit limit is so far is an X amount, but the customer says that, hey, you want to more material and services from you, but you cannot, system will not allow to do any sales orders and do deliveries. Then you leave that decision to the higher management or the leadership. They will do the analysis and they may say that, hey, let us increase this credit limit. No, we cannot take a risk of increasing credit limit. Rather, we ask them the down payment. Down payment means advance payment. So when they get an advance payment, you will release the materials or services. So those type of decisions you can take it. Similarly, when you have a collection management, you have the concept of work list. Those work list will be derived based on the strategy. Okay, so when you define the strategy, which customers needs to be contacted, we need to talk to the customers with a high value of outstanding, but overdue is only for a few days. Okay, or then we think that no, this is for calling these customers. It is not wise because their business is in good swing. We will talk to them after their season. Then we will see how the amount is to be collected. So you are making your decisions, changing whom to call to get the money, whom to call to get the outstanding invoices. Like that, there will be a lot of decisions that you can take it when you have an integrated system with the other modules. Okay, you will, when your AR is integrated with the SD, then you yourself, you means the person who is calling the customer and trying to understand which amount is overdue, for which invoice overdue, what is the relevant debit note, what is the relevant invoice, what is the relevant credit memo, what is the delivery document, are there any notes on the delivery document. All these are tightly integrated within your FSCM credit management and collections management. If it is not integrated, if you have a third-party system, and if the third-party system is not integrated with your sales and distribution, then you need to log into two different systems and understanding it, and you need to make a note, then you have to reconcile. So it is so tedious. Particularly when you have hundreds and thousands of end custom with business partners, you cannot do that. You'll end up in downloading the Excels, applying all the algorithms, and coming up with some of the figures and data points to take decision. Those things can be redundant when you have an integrated system. Now, finally, as an integrated solution, you can get a full benefit of your S4 or ECC system integrated with the finance supply chain management. It is fully integrated. They're add-ons. They're add-ons to your existing ECC system. Any questions so far? I assume that you're all from finance background, right? Anybody is not from finance background? Finance means SAP.
We are from FIC.
Excellent. So you know that what FI is for your financial module consisting of your GL, AR, AP, asset accounting. On the CO side, you have your cost element accounting, cost center accounting, internal orders, product costing, and profitability analysis. In addition to that, there are other modules, depends upon the nature of your business. So why it is essential for ERP? is to use the organizational data. That's true. But what type of organizational data? How you go and check that? And how you can analyze your company's financial position, the balance sheet, how it looks like, how your trial balance looks like, and how your logistic data is passing into your finance. So all those things will be there within your financial system. Okay, we are not going to talk about that in the training, but this particular FSCM is related to FI, finance. So particularly on the accounts receivable modules, it's a tightly integrated. The same way your FSCM within those AR, like credit collection disputes, integrates with your accounts receivable and sales and distribution. Okay, so I'm sure that you guys have know how SD is integrated with the PP, MM, and supply chain management. Okay, so how SD is related to MM, how MM is related to PP, how PP is related to your SCM, supply chain management. You need to have an SD means, particularly you need to have your materials or services which are defined within the MM. If you're having an MM, if you're having an SAP PP means you need to have a material to produce. But all these things are depends upon your supply chain management. This supply chain management is a logistics related, not finance related. So your ERP system, these are all the common and basic modules. I'm sure that you guys must be knowing there is an integration process, and you might have worked on the integrated configuration and business process when you do your day-to-day activities. Okay, so you must be knowing these as well. You may not be well versed in each one of them. Depends upon your experience and background. You might have worked on all these areas. Remember, these are the financial components. We'll be integrating only with your accounts receivable, but not doing anything on the accounts ledger. And we would not be doing anything on the payable, asset accounting, bank accounting, financial accounting, travel, and funds management and legal consultation. I can give you a quick overview of this, but this is not the intention that we will be discussing this. If you are any one of you are having a little less experience on any of this, that explanation will help you. So general ledger accounting is useful to record all the transaction, depends upon the nature of process. It will help you to split them, the GL accounts, and store all the financial information. So this GL, you know that, right? It's split into your P&L account and balance sheet. Balance sheet will have your assets and liabilities, and P&L will have profit and loss. So those things you will be defining here, and they get integrated with your accounts receivable, accounts payable using your subledger concept. Subledger is nothing but your reconciliation account. So the GL account also, the GL accounting also integrated with the financial accounting, the similar concept of your reconciliation account, but he'll be using in a different reconciliation type. That is A. A stands for asset. Now, when we have your incoming and outgoing payments, that is an AR payments from customer, outgoing payments to the vendors, all these transactions are happening through your bank. Okay, so when you are having in your bank operations, then you will be having in a different bank accounts. Those bank accounts are integrated with your GL. There's no reconciliation as such with the bank accounting, but you will be having in a clearing accounts. Different clearing accounts will be used for your bank operations. Incoming accounts and outgoing accounts, main bank accounts, sub accounts, depends upon the payment method, which account has to hit. When you are having in your electronic bank statement, you will, if it is a BA file, you will use a BI code. And if you are using a different file format like 942, MT 942, 943, then you will be using a different tax. It will be a structured bank statement. When you do the posting, your financial bank account and GL accounts hit accordingly. And you can also integrate it with your year and AP. When you do outgoing payments and incoming payments, you can directly hit your subledger. So travel management, earlier they called it the travel management, but in the recent past, SAP recommends its customer to buy Concur. Concur is travel and expenses module that is more of a cloud and web-based, where it integrates with your GL accounts to post all the expenses. And the financial accounting, fund management. Fund management is generally used for public sector. where they will have a different fund centers, where they will have the budget, where they will have a commitment, how the budget is consumed, and how to prevent your excess consumption of the budget and rolling over to the budget to different fund centers so that they can optimize it. And then finally, you have a financial accounting legal consolidation. So it is nothing but your business BPC. Okay, so business BPC again eventually replaced with the group reporting. Initially, you will have an enterprise consolidation. Then you will have an BPC with the different versions. Now it is being turned into group reporting in S/4HANA. So these are very few. Mostly they're relating to finance, but in addition to this, there are so many other modules are also there. But it depends on nature of business, company to company. Okay, if it is a public sector, so you also have a collections and disbursement, tax and revenue management. And if it is relating to utility company, you have a contract accounting, which is identical to receivables and payables, but there you will have receivables and payables. So that is used for industry specific solution. But the entire financial operation goes in this main business process. Okay, so what is the FI? What are the benefits of an integration? Is it a good slide? So what happens if you have an integrated system? What happens if you don't have an integrated system? When ERP, SAP is, it's a integrated system, very tightly integrated system. And when you do the implementation, you need to do the implementation and go live together. Okay, or even go one after another, but business may not be able to bring all the business operations into the system. Again, they need to have a different approach if they don't go live for all the FI modules together. Particularly when you have GL, you need to have ER, AP. If you have an asset accounting, then your GL account is mandatory. I mean, general ledger accounting is mandatory. So you just can't implement asset accounting without implementing general ledger. Similarly, you can't implement AR and AP without doing a general ledger. If you're implementing sales and distribution or materials management, you need to have your AR and AP is set up. So that's how the whole integrated process works. Now, what is the benefit? So benefit is when you have this is the slide that is integrating with your tax system. Vertex is one of the widely used third-party application that integrates with the SAP. So even SAP recommends to use Vertex for all the tax purposes. Earlier, Vertex was used in the US, but now they also spread into different countries for their tax purposes. Each country will have a different taxation. Okay, so when you have an integrated approach and integrating your SAP with the third-party tools, which are kind of a mandatory when you do your day-to-day business operation. So in this, if you have an integration with your Vertex, the system will integrate and call the functions, various functions. It depends upon the nature of business. If you are doing sales, you have your sales tax based on the country that you are. And the sales tax will be collected from the customer. It depends upon the product, it depends on the location, it depends upon the nature of transaction he is doing. Then the system has to calculate the tax component. That tax component calculation happens in the Vertex, but the amount get posted within SAP. Okay, if you have $1,000 of invoice which required 5% of tax because the customer is located in so and so place and the customer is subject to tax of that material for 5%. So whatever the tax amount, the base price plus tax amount, the calculation of the tax comes from the Vertex, but the tax accounting entry happens within SAP. Of course, that information is available in the Vertex, and you also have to see how much is posted to the customer account to collect the tax. So there are different versions. The O series is there and Q series is there. Here they gave the O series, but different series are there. Your implementation, the company where you are implementing SAP, there is a separate team who will be integrating your SAP system with the tax company. There are different companies out there. Vertex is widely used in US. Okay, and this is also called a tax engine. The tax engine means it makes all your taxation. Why they do this? Vertex company exclusively do the taxing activity within their system. Okay, and they can integrate with any other ERP. Oracle can also get integrated with the Vertex. SAP can be integrated with the Vertex, and you have Workday is there. Workday also they can be integrated. If you have a legacy system, that also you can integrate. What happens? Why you need this integration? Can't we do within SAP? Within SAP also you can do it. But when you have customers, hundreds and thousands of customers, they're in different states and they are different county. In India, it's called municipality. Okay, so the county and within the county depends on the product and depends upon the nature of transaction. You have a different tax, and that tax is subject to change every year. Right, so it will become a huge huge maintenance for SAP application. So that's the reason for this type of scenarios they integrate with the third party who will take care of updating their system based on the changes that happens in the state or federal on the tax related every year. So that's the reason it will not be directly in the part of your ECC, but to do integration settings, you need to do tax codes and jurisdiction, all that stuff. So what is the advantage? So advantage is accurate tax calculation. Compliance means whatever the taxes that you do, they are complied with the government changes that happens over a period of time. And is an efficient way of doing it. You don't have to do manual calculation. It's a scalable. So, and you can sustain as well. And you also centralized management means any vendor, any customer within the country that you have taken the license. So everything is organized through that particular taxation procedure. It's a flexible. And you also save the cost because you are implementing and every year changes you have to incorporate it within the SAP means it's not possible. So by integrating with the third party like Vertex, you can save a lot of money. And whatever the report that you want, you see that this month for this customer, for this product, for this region, how much is the tax to be paid? So for this region or the state, what are the total tax collected from the customer this month so that we can pay to that particular state? Because you have different states, right? You can't run here and there. Everything is available within that report of the Vertex. We are not going to talk about this in our training, but it's a one good thing that to understand how the FI works. So how the integration of FI with the FSCM. It's a comprehensive suite of tool to optimize financial process, improve cash flow management, and integrate seamlessly with SAP financial accounting module. Well, it's not directly the financial accounting module, but it is with so if you say that financial account, we talked about GL, AR, AP, etc. accounting, but within the financial accounting, it's seamlessly integrated with your AR process. AR means accounts receivable. Okay, so these are the integration approach. You have your AR, accounts receivable, then it goes to the GL, then it goes to credit risk management, then you'll have a cash and liquidity, then you will have a billing and invoicing. So these are all the things which will happen. Okay, so when you have your billing and invoice, then it's tightly integrated with your cash and liquidity. If you have to make and receive the payments and outgoing payments, then you also have a credit and risk management, how you do the credit analysis of your customers. Remember, credit and risk management means it comes both in the treasury and certain part of the risk and credit management within your credit management, because you need to see the risk of your customers. And in the treasury and risk management, the risk is your organizational risk. Okay, so take an example, being an individual, if somebody comes and asks money, okay, you have money for sure, no doubt, but somebody comes and asks for money for a loan of like 3 months. Don't you analyze that what type of person he is? You certainly see that, oh, he's doing a business and he needs some money for business operation. Oh, he's a nice guy and nobody told you anything against him. So you do that analysis, right? And he's doing a job, he'll get monthly income. And but because of some urgent need, then he needs some money. Or you do that risk analysis. Similarly, being an individual, you need money. You will go and borrow money either from your known sources or from the bank. Your assets are only like, $1 million. But whereas if you are borrowing money for 200 million from, $2 million from the market, then what happens? People will think that, hey, this guy is in debt. So he is borrowing a lot of money from other people. Let's not give money to them. So you are exposed to more risk. So in the same way, organizations, they have to do the risk analysis of their end customers before giving any credit limit. At the same time, if the company's business is not doing well, if the company is exposed to more risk in the market, maybe by losing the share value, by having any new competitors, or by getting more bank loans and not able to pay the debts, then you are exposing to more risk in the market. So those things come under treasury and risk management, and the risk will be there for your evaluation within your end customers and evaluation yourself that how much you are exposed to the risk in the market. When you have a more risk, you lose the credibility in the market. So those things will come. What are the various tools? How you do your own credit analysis? So general ledger, that we talked about in the earlier slides, integrated with all other modules. And this is the one that we always keeping for our training purpose. That is how your AR is integrated. Okay, so this also we talked about it. Centralize the financial data, real-time updates, improved efficiency, enhanced risk migration. Okay, risk mitigation. Now we'll talk about this. What is the real-time updates? How you can claim that your FSCM, if your ECC, S4HANA or FSCM, any module that you talk in SAP is a real-time updates. How it happens. I'll give a good example. Two examples I'll give. One example is take your SDFI integration. When a PO is created, when goods are received, or when the invoice is received, when incoming payment is done, anyone who is having an access, they can go and see all these as soon as they're entered in the system. Okay, if a billing is done, invoice will happen and send printout and send to the customer over an email or a printed. You can see all that. Whenever it happens with the when the billing is happening, invoicing happen, you can see everything. Similarly, a clerk who is sitting in say Malaysia, he do the goods receipt in their company code, okay, for the next material, and person sitting in the US, by simply click on that, whether this goods receipt is done, whether the invoice is posted, whether the three-way matching is done, that can be seen by person sitting in the US if he's having an access. Everything happens in the real time. Okay, so it doesn't require any kind of third party or any trigger events. Some of them, if they're huge, you want to put a batch. The moment the batch is executed, you'll see it. If it's you don't have a batch and you directly want to get it replicated, you can do that. Billing is delivery is done and billing is done. You can see the invoice in the customer account in the real time. So like that, when you have an integrated system, the real time data can be updated. Okay, so integration with the FI overview in SAP FSCM. Okay, we'll certainly see this while we move forward in the transaction. Specific business functions must be activated and integration works seamlessly. Example, financial FSCM CCD integration. Well, this is a part of your basis activity. You may not be doing it, but there are several configuration requirements are there, particularly when you have to activate your components. You need to know that what component you need to make it active. Some of them are just simply a checkbox. Some of them are your release notes, and some of them are basis which they will be doing it. And without activating them, you may not be able to use them. Okay, and customization settings for each module, you have a lot of customization settings, and we will go through them. And some of them are directly get posted in GL, some of them not. Particularly when your debit notes, credit notes, or your invoices and the payments, they will directly get posted into the GL. But that will happen through a different process, not by FSCM guys or FSCM team. The FSCM team is more of a coordinating and collaborating with the different teams as well as with your business partner. So what are the other integration tools? Well, IDOCs are there, but IDOCs we may or may not be using within the FSCM because most of your transactions happens at AR level. But it is also possible when you have a non-SAP applications, and those non-SAP applications, if you send any data through IDOCs, you can get it. Example, it could be your third-party external credit data, or you having a company has acquired in a different company, they are running on the Oracle, And if you have any disputes from there, those dispute cases you can bring into your SAP using IDOC. Okay, some of the examples. Similarly, you have some of the transactions like OBYC, which is used for your accounts payable side to integrate for account determination of different various material movements. So like that, there are a lot of integration tools are available, but some of them we may not be using and may not be relevant for us for our FSCM. Okay, so the integration with
Yeah, here you're saying that OBYC, right? It is integrated with the AP side, right? It is not an AR side. You may know why it is. Yeah.
Well, OBYC is related to your most of your material movements.
Right.
Okay, so you will have your material movement that happens your material management. When you do a goods issue, your material valuation will be there. Okay, so those things are all of your side. You don't have to do these settings, this configuration in the AR. When you don't do that for AR, we don't need that FSCM. Okay, so we will use your PowerPoint. We will use the PowerPoint. Our FSCM come into the picture after your SD process is done and you are sitting in your AR. After that only your FSCM come into the picture. It means your OBYC settings are in place, and when you are doing a goods movement, that's done, goods issue is done, your billing, your delivery is done, and invoice is done. After that only your FSCM come into the picture. Okay. The exception is a credit check. So what that credit check is there before you are doing your invoicing and delivery, it's just to do a credit check. That's it. But otherwise, all the process should have already been set up in the system. Your OBYC is purely your related. It's nothing related your other than your material movement. But we are not at all relevant for our material movements. We're always relevant for our financial activities.
Based on the check, right? That means where should we block that credit based on that, like in order wise or delivery wise or billing wise. We can based on the settings we can do only that check, right? Credit check.
Correct. So your OBYC is entirely different, right? You do a material valuation, you do it. Okay. You do your delivery related settings. Okay. You do your receiving of material, not invoice, receiving of material. So GRIR related settings.
IR also means one IR also invoice, right? Means the vendor side.
But that is vendor side. Our process is purely on AR side.
AR side.
That's the reason we don't touch your OBYC settings part of your FSCM.
Right. Thank you.
So, but these are the tools available. If anybody is from non-finance, it will be useful for them, or even within the finance, they know they can understand it, but we would not be using OBYC setting for our FSCM process. Okay. So as I mentioned, it is an analytical tools within FSCM, provides insight into cash flows, working capital, receivable, while leveraging data from the FI modules for comprehensive reporting. What do you mean by analytical tool? When you use the word analytical tool, how it is different from your AR, AP, GL? Your AR, AP, GL or asset accounting, or if you go with the CO modules or SD modules or MM modules, they are operational tools. Operation tools means when a movement has to happen, when something is to reflect in the system for the purpose of your transaction, you will do that as operations. Any system is nothing but whatever the physical movement happens, you are recording them. Okay, when the goods are received or goods are issued, when you are issue the material for production, and the material value has to reflect in the GL accounts. When customer has to pay, when you have to pay the invoice, these are all operations, day-to-day financial operations. But FSCM is a tool for analytical purpose or operational convenience, but not for operations. Okay, so you are having an account statement means that is not any transactions. That is the record of the transaction that happens, right? So this is the analytical tool. Like which customer has paid, which customer has not paid, how much material he has withdrawn, whether he exceeded the credit limit, or if the customer says that he needed an invoice copy, or whether a customer says that he's having in a dispute because he received the material 1,000 units he ordered, but he received only 900. And he said that I need the material by 28th February, but I got it on the 1st of March. The delay on that. I'm subject to percent of 8% tax, but you guys put as the 10% tax. You said that you will give a free material when I purchased 1,000 units. You said that 5 units you will give it free. Yes, you gave it free, but you charged for those five units also. But whereas you promised us the free. So customer will come up with the various questions, and he said that he disputes it. Hey, unless you resolve this dispute, I'm not going to make a payment. Now tell me, what is the issue here? There are two things. One is your payment got delayed. Second one is the customer is unhappy. But whereas we did that either because of a misunderstanding, or our systems are not issue, or people might have not done something wrong. Okay. Example, you shipped 1,000 units from your warehouse. System shows that 1,000 units have been dispatched. But customer says he received only 950. Then where are the 50? Something would happen, right? The theft might have happened. It may be damaged it, or the delivery man, he forgot to deliver those 50. Whatever could have happened. That's a different thing. But customer is unhappy and we are not received the payment. You may say that, hey, you can make payment for 950 means there are certain countries where even if there is a dispute for 50 units, you cannot demand money till it is fully sorted out. So at that time, your payment got stuck. Forget about 15, so your payment got stopped. Then you have to prioritize to resolve the dispute and explain the customer, hey, our delivery man forgot. Oh, it's got damaged in the vehicle in transit because the vehicle was going on speed and they put a sudden brake. Some of the sensitive item got broken, or the weather was not good and the vehicle has, the weather was not good. The material got damaged. That's the reason we could not. Like that, what are the reason? You have to do the investigation. But here, you didn't do any transaction, right? You didn't post any credit note. You didn't post any debit note. You didn't, a customer didn't give the money to you. You won't put it to the customer account. If the customer makes the payment, it goes to the bank. From the bank, it automatically get updated. But your FSCM modules like credit collection dispute, they will give you a kind of an analytical tool to make the operation convenient, but they themselves are not operations. Okay, transactional operation, I mean to say transaction. What is the advantage of FSCM? So what are the total modules that we are going to talk? 1, credit management. 2, what is the second one? Anybody?
Collections
management.
Dispute management. Cash management.
No.
Dispute
management. Cash management is not in our scope. Okay. And the fourth one we will be doing is product of treasury and risk management. Now, credit management. Any of you, did you work on the standard ECC credit management?
Yes, sir. Yes, sir.
Okay. So what you used to do in the standard credit management? What do you do in the standard credit management? Okay. You will create a credit account you will create. Okay. Here you maintain all the credit related information. Okay. In the standard credit management. So it may be F-32, some F-23 or something, the transaction name. But when it comes to FSCM, everything is BP, business partner. Okay, business partner master data. When you do your standard credit management to business partner, you need to do the migration. You need to convert customers to business partner. Okay, how do you convert? We'll see that one. There is a SAP standard master data synchronization. You need to execute this. Then what it does, what are the customers that you will have that will be converted into BP? Your customers will be as it is, but converted doesn't mean that it will change the customers. It will keep as it is, but it creates a business partner. When this particular situation occurs within ECC, okay, you have standard credit management. If you want to use FSCM credit management, you need to create business partner. So basically, all your existing customer master data get replicated. Financial supply chain management, business partners. Okay, so that is the first thing it will happen. Then what we do? The second thing is extend BP to a role that is called UKM 000 role. what is this meant by role? When you are here in SAP ECC, how do you define your customers? Either within the finance or centrally. When you create an finance, how do you create the customers using transaction?
D01.
No. When you do finance, you do FD01. When you do centrally, you use XD01, right? So what is the difference here? When you create a customer using FD01, you will not be adding any sales and distribution related. Means business partner data is not, customers are not allowed to extend to the sales area. When you do XD01, you will do general data level, company code level, then you will have sales area. When you do FD01, you do general, then only company code. Getting me? Are you with me? Okay.
Yes,
This is the difference. Okay. These will continue. If you are an ECC, your FD01 work and XD01 work. On top of it, you will create a BP, business partner. So what system will do, it will allow to create a general data, then it allow to create company code, top of it, your credit segment level. Okay. So here you have to extend your business partner to UKM00. When you move to S4, you'll be doing the same thing. Okay. Now, what is the concept of a role? What is role? This is important, you guys. It is easy to understand and easy to interpret how the role is used. Any of you worked on the creation of business partners in SAP? Okay.
Yes.
So,
yes.
yeah, okay. Some of might and some you may not. So a role is when a business partner is created, it initially creates with a general data, as well as it also extend to company code if you want to extend. But based on the nature of business that you do with the business partner, you will extend that business partner to a role. Okay. So if you go to, so you are an individual, take an example, you are an individual. If you are married and if you have a kid, tell me how many roles you play in your day-to-day life. If you are a kid,
2 roles.
you will play. No, you have. Yeah, I got your point. Yes, ideally yes, but in a day-to-day life, your kid will call you father. You will play a father role. You'll play husband role. You have parents. You will play son's role. If you have grandparents, you'll play the grandson role. If you have brother, you'll play brother role. If you have a sister, you will have a brother role for your sister. Okay, and if you go out, you will be in a friend role. So you also play as a friend to your friends. And similarly, if you go to work, you will play as different roles. Team lead role, maybe a team member or colleague. Here, who is an individual? Is only one individual, right? But the role you will be playing at different roles. Okay. When it comes to an SAP business partner, you will have a similar kind of a role that a business partner master data played in the system. Example, you have your business say ABC, your company name is ABC, right? So somebody comes like, company X comes like you said that, hey, I want to buy material from you. It is your company. So somebody X customer comes say, I want to buy material from you. Okay. So what do? You create a customer, right? Is a customer. But this guy also makes some supplies to you. He will make a material supply to you as well. Then what is this guy's role? Vendor. So he's playing in a vendor. Okay. So same person can become vendor. Now you go to the bank. You being an ABC, you go to the bank. Okay. Bank says that, hey, I'm going to do all your day-to-day business of the ABC company. Let me know who is authorized person to sign and who will withdraw the money. Then you said that, see, my company will, within the company, I have a person who will do it. So within your ABC company, you will also have a drawer, authorized drawer, but person is the same. Okay. So similarly, here, what happens is you buy certain financial services from the same guy. Either you can take money from him or you can give money to him. Here is a customer is buying material from you. And in this case, the same guy is supplying material to you. Since you know these companies, they said that, hey, I want to borrow money from you. This same company guy, he want to borrow money from you. Then he will become as a debtor. So he'll take the debt from you. Okay, it's a lender. Then you'll have lending, like, somebody is taking the loan, somebody is giving the loan. But the person is the same that you're doing the business, right? When you have the same person or a company that plays in a different roles, in the current system, you will be creating a separate customer and a separate vendor. X, your customer, X also your vendor, right?
No, we can create the same customer in the current system as well.
I'm talking about ECC.
Yes, we can link the customer and vendor in the ECC as well.
Linking is a different. I'm not asking about linking is a different. I'm not doing a linking. What I'm saying is, how do you define the master data?
Okay.
You have to define the master data, right? You will create here as an FD01 and you will create as an FK01. You may link them, that is a different thing. But here, it's not the same X number. It's not the same X number. Here you will have a different number. Okay? You will have a different number. It may be 34000 or it may be here. Here you may have a different number as a vendor. Okay? Maybe 4500. How the numbers will derived? What type of customer? How do you define? You'll use account group.
Yes, sir.
Okay? You'll use an account group. One-time customer or different customer, intercompany customer or foreign customer, or you say that government customer you like. Similar the vendors also. Your import customer, your import vendor, or maybe government vendor or private vendor or individual vendor or one-time vendor, using your account group, you will define them. But when it comes to your business partner, all are the same number. Okay? It's going to be the same number. If you want to use any number like 890000 is the same number. But the same number, how do you do customer vendor and financial services, finance vendor, okay, logistics vendor, is the same guy, and everywhere you will see the same number. But how you differentiate them? How do you differentiate them? I say this number I will use like this. Okay, let me put. Okay, so you have the same number for all. Okay, so yours is an ABC company. The same number 890 is a customer, 890 is a vendor, 890 financial service partner, and you have a finance vendors and a logistic vendors. How do you do that? These are all the roles. Okay, these are all the roles. Okay, so how the different happens when you have a roles? As really, it's a beautifully arranged in the system. Okay, we'll come there how it goes. Okay, now tell me, when you do your FD01, when you go to company code level, what data you provide while creating a master data? What are the attributes you use?
Company code for customer. Extend this company.
Right, that will say company code. Okay, at company code level, you do that. What you do that company code? What attributes do you give?
Payments, correspondence.
Okay. Payment terms, correspondence. One important thing I was expecting. Go ahead, try.
Recon account.
Reconciliation account.
Correct. That is the main. Okay. So use the recon account like 23000. Okay. So when it comes here, is more or less same, right? You have vendor payment terms, duplicate invoice check. Are you with me?
Yes.
Then you will have, say, 123000 your payment method, vendor recon account. Do you give payment method in the AR also?
Yes, for some cases.
Yes, we do.
Yes, but you do, but we would not be using it for day-to-day purposes. Why do you use your payment method in case of customer?
For netting, sometimes when you are netting between customer and vendor within company transaction codes.
Right. Any other example? Customer refunds. Okay. So when you do customer refunds, when you do F110, the same thing will pick up the customers in your F110 and it will issue the payments to the customers. Netting is something that you use it for intercompany. Okay. So for external user customer refund. So you are using all these things for your FD01 and you are using all this for your FK01. So similarly, for the same business partner 89000, when you do 8900, so what system will do is, based on the role, okay, based on the role, system will open the fields. Okay, system will open the fields. When you say it is the same business partner, you will have a role. If I say if it is a customer finance, it will open all these FD01 fields. Okay, it won't say FD01, it will load all the fields, like you will give customer related attributes. If you give the vendor, if this is the customer, it says that, hey, all the FD01 related, all your FD01 related, it will open the fields. The moment that you said that, hey, this particular vendor 8900, I want to use it for vendor, okay, then your FK01 fields will open, okay. Similarly, if I want to use for credit management, there's no transaction, there's a role, UKM00 role, you use it. Basically, it's not FD001, there is a role, FI customer role. There's a technical name, I don't remember, but I'll let you know. Similarly, FI vendor role. Then if you have credit management role, you'll use a UKM000. It means the same business partner, you'll be using a customer, the same number used for vendor, the same number you will be using for credit management. What I told you here, when you use business partner for customer, these fields will come. When you try to use your AP recon account here, it will not allow, it will not even show up. When you while you're maintaining FK00, it won't show vendor recon account. Okay. But similarly, when you're credit management, you see a tab called credit profile. Okay, credit profile. So this will be displayed when a business partner is extended to credit management role. If somebody says that, okay, so you work on the credit management, may know what role is used for credit management. You say UKM000. Okay, that's the first thing. Now, coming to the BP role and what is the role we use in UKM00. Excellent. Now, why we need FSCM? What happens if you don't have FSCM? Particularly the credit management. What happens if you don't have a credit management, FSCM credit management? Why can't you run with ECC? You can still run an ECC, but when you're going for an FSCM means your ECC will not work. You can work either your ECC or FSCM. If you want to have both ECC FSCM, then you have to go to SAP. SAP asks for justification. They take additional charges and it will run you both. But it is ridiculous and meaningless. You don't have to have both ECC and FSCM. When you're having an FSCM credit management, you need to shut down your ECC. You need to migrate the data. Okay, that is the first good example. Or can we have both ECC and FSCM together? If an interview comes, says no. SAP says that if you are using FSCM, then you should not use a standard. You should not use a standard credit management. Okay, so if you should not use the standard credit management, then how to migrate the data and how you have to do that? That is the part of the migration, but we will touch some of the data points relating to the migration. But it is not a pure migration training. It is relating to your FSCM credit management. Okay, so there are two questions that you learn. One is BP role for credit management is UKM00, and you cannot have both ECC credit management, that is standard credit management, once you activate your FSCM. Okay, so what do you see in the standard credit management that is making the business as a kind of an obligatory to go to FSCM credit management? If you have activated standard credit management in your ECC means you need to switch over to FSCM credit management when you go for S/4HANA, for sure. But if you're on ECC, but still if you want to go to FSCM credit management, you can go to FSCM credit management by activating the additional components. So FSCM works on ECC. Yes, it works on ECC from ECC 6 version onwards. For that, you need to do little additional work. Now, if you're having an FSCM credit management and you have closed your ECC, what advantage you get? I told you your evening that there are some upfront advantages you can talk about. One is you can integrate your S/4HANA or ECC FSCM credit management with external credit rating agencies. What is the first advantage said? FSCM credit management can integrate with multiple credit rating agencies. Okay. The second one is you can have a workflow for credit decision. You will have credit management engine. Okay. Then it can be web-based or say if you want to query apps, you can also enable query apps for FSCM credit management. These are the good examples. If somebody asks, what are the advantages of moving from ECC standard credit management to FSCM credit management? What is the first one? FSCM allows integrating your FSCM integrating with multiple credit rating agencies. The second one is you can build workflows to have credit decisions. The third one is you will have a credit management engine, so not credit management, credit rules engine. The third one is you can operate as a web-based or portal or query apps. These things are not available in ECC.
One question here. For the workflow, are we referring the release of credit sales order or the assigning a credit limit or the assigning a credit rating? But in the workflow, in which business process workflow is available?
There are two types of workflows. Workflow is for when the credit limit is exceeded, when the order is blocked, then you will have a workflow. Either you release it or defer it to some other manager who can release it and approve so that the sales order or your delivery item can move forward. But the workflow, what I am talking about here is making a credit decision. It means when a particular customer credit limit is to be set up, or if a particular customer's credit limit is to be increased, then you will have a workflow where you collect all the information and submit it based on the workflow rules, and the person who is delegated for the limit, it trigger workflow to that person, and that person will approve it or reject it or can modify the credit limit. Example, there's a customer is newly doing a business with you and is requesting for a credit limit. You can put a standard like $5,000, $10,000 for all the new customers, the credit limit. But over a period of time, he says that, is it possible to increase my credit limit? Business, they themselves will do customers' payment behavior periodically, and they want to increase the credit limit so that the customer can do more business with you and you can get more profits or more revenue. In that case, the clerk or the associate, he has to collect all the information about that customer credit rating data and customer payment behavior and the customer, any concerns, if there are any disputes or any delays or the volume of the goods they purchased, everything collected. Then they define all the attributes on the request and submit that request, and it will trigger a workflow to the leadership. It depends upon the credit limit that we want to set it up. I'm talking about that workflow, not the workflow to release the blocked orders. Is it clear? Whoever asked the question, is that clear?
Yes.
Okay. Now, the third one is credit rules engine. What this credit rules engine will do. A customer will be rated based on the credit score. I know that nowadays in India also you have a CIBIL score, something is there. So every customer has to be scored based on their performance in the market. So who will provide that score? The score will come from the credit rating agencies. There are several credit rating agencies in the world. So most famous and common one is a DNB. Stands for Dun and Bradstreet.
Yeah.
Okay, so the Dun and Bradstreet, the one who will maintain rating information of every business. So when you have similarly, there's a one DNB I gave, but there are so many are there, like Moody is there, and then have PayDex, like several third-party agencies who will collect information about the business and they will maintain it. So in case of a DNB, they will give a number to the customer. Okay, if you're a DNB customer, you'll get the number. So similarly, in this case, you see you are the ABC business owner, 8900, a customer comes to you and started doing the business, and you want to maintain this information. Just like the KYC documents that you submit to the bank, somebody comes to you and they want to do the business, you will get a KYC document. Like it is a proprietorship business or partnership business or incorporation or public limited or government or your overseas customer, what type of customer he is. Okay, if it's in a private customer, okay, the most of the issue comes to the private customers because we need to know about them to give credit limit. So if that customer is coming, then we tell that, okay, what is your DUNS number? So he cannot say I don't have DUNS number. Then he has to go and register with the DNB. Hey, I want to become your customer. So they will go and become the DNB number, and DNB will not give information just like that and give a DUNS number. They said, okay, give me your entire business structure. How long you have been into the business? What type of business you do? How many employees you have? How much sales you did? How much profit you did? Okay, and what is your investments? And provide me last 3 years or 4 years of your financial data. Everything, this DNB will collect the information from this 8900 guy. Okay, then he will give a number to this 8900. That guy will give 8900 number to your ABC company. Okay, so before you give a credit to this guy, what you do, you'll go to this company, Dun and Bradstreet. Okay, you'll go to Dun and Bradstreet, you get all the information about this 8900 customer. If you try directly, you ask the customer, hey, can you give me your all the information? Then that guy may give a wrong information. So that's the reason you will get a basic information, but the remaining information you will get from the DNB. He will give only DUNS number to you. Your 8900 customer to your ABC business, he will give only DUNS number. Hey, this is my number from DNB. Then what you do, you will contact DNB and get all the information about 89000 customer, right? These are all the rating companies, rating agencies. So that's where you will get all the rating information. Before giving any loan, before you give any credit, giving a credit means as good as giving a loan. Maybe 10,000, 20,000, 30,000, doesn't matter how much of dollars you're giving. You have to get the credit worthiness of the customer. That's where you will get all the credit rating. So in ECC, standard credit management, you can maintain only one rating agency information. You cannot maintain more. But moving to FSCM, you have an option to maintain the credit rating agencies of multiple credit rating agencies of the same customer. Okay. Now we talked about the workflows. Now, credit rules engine. What this credit rules engine does? This credit rules engine will help to define the formulas. It will define the formulas. Then what these formulas are done? Used for scoring. So if you have a scoring, what you do with the scoring? You will define the credit limit. Okay. Now what this scoring is associated with, we talked about, right? You will have a formula. That formula will help you to define the scoring. Using that score, you set up the credit limit. So what this formula consists? So this formula consists functions and parameters, or say parameters and functions. This is the main in FSCM. Okay, so you'll have parameters and functions, and using this, you will derive the formula. That formula will get the scoring. Then you will have a credit limit. So that's how you will use this credit rule engine. Now, what is this Fury apps? How many of you are aware of the Fury apps? Any of you know what the Fury apps are? Web-based or portal-based? Okay. So Fury apps is not, it's in a catalog where SAP provides in each module what type of tiles you will be using it. Those tiles will be used for accessing the transaction.
We have worked on the Fury apps then.
Yeah. So everybody in the team might have not worked on it. So I'm just giving an explanation, just explaining it. So the Fury apps is from S4HANA is a mandatory. Before S4HANA, if you are using ECC, you can still create the Fury apps, but you have to do a lot of the development work. You have to activate the OData services, and you have to identify the tile. Then you will do all your third-party tools, and Jerkin something is there. So you use them and you generate your own Fury app. But if you are there in S4, you don't have to do anything. Simply go to SAP Fury catalog and enable that. Your Fury team will be able to enable them. Just like a click on the tile, in the backend, it build the transaction. You will see that on the web-based instead of the way that you see in the ECC or S4 screens. The core SAP, it may not be displayed to the end user. Fieri apps are more of your end user flavor to run the transaction the way that they want. And the way you have a security roles in your ECC, in the S4HANA also, you will have a Fieri apps roles. Based on the roles, those guys will be getting your catalog. So that is what that you will be using the Fieri apps. Now, let's go back and talk about some other stuff. Guys, I'll give you initially to answer you. After that, I'll be asking the individual two questions, so be attentive. Okay, what is formula? I'm coming to the direct topic, guys, okay? Because the remaining anyway will come in the discussion, but I'm just coming to the formula. What is formula? Formula consists of, as I told you, right, parameters and functions. Okay, so what are the various parameters?
Means customer performance.
Okay, suppose you have a business. Yeah, that's one of the good answer. But just like, let's take an as an individual. You have your own family business. You opened even a small shop. Okay, so somebody will come and buy certain things, and they said that I'll give you the money later. You never saw him. You never saw that guy. So what do you say that? You have it in a SAP, you have some business and you got a new customer. All of a sudden he appeared and you never saw him. And he said that he want to buy like, say 50,000 rupees of material and said that I will pay you. What do you say? We don't give credits to a stranger, right? We never give a credit to a stranger. But someone who has been buying stuff from you for last 1 year, and I know that he bought around like, the 2 lakhs or 3 lakhs worth of material from you, and you're seen him. But you also have some of the customers there from like, 10 years, their kids, their family, and they have been purchasing, they never have any issues, and they'll make payment and they'll go it. And all of a sudden, they also ask for some credit. Maybe they're individuals, they're also doing some business. They buy material from you and they do the business. How do you treat them? You treat them differently, right? People who come newly and people whom you know for some time and people who has been with you for 10 years or 20 years, you treat them differently, right? Okay. And at the same time, if you have people that, you will see filthy rich guys and rich guys and, a government job who will be doing it, different type of people. It means you understand their financial position, what type of customers are. And if there's somebody must be doing a business and their business is doing really well, and they also buy from you to do their business. Okay, they buy material from you to do their business. So keeping in with that, you want to derive a score based on the weightage. You will weight the customers based on their background. So when it comes to your business, if you're having an APC business, you always think this is your client. Okay, this is your client. So your client says that, hey, I want to build a kind of rules that if a customer has been in the market for 20 years, I want to treat him differently. If the customer has been in the business for 10 years, I want to treat them differently. If the customer, they started business just like a year or two, I want to treat them separately. I do business for all the three categories of the people, no doubt. But I want to treat them differently when I give a credit limit to them. Okay, is that only the thing that you want to see how long they have been business? No, it's not like that. I also want to see them where their business is located. Oh, cool. Where the business is located depends on them. You want to give business? No, not necessarily like that. I also want to see what type of business do they do. Do they do risky business? Do they any illegal business? They don't show like any, they show they do the business, but they really don't do active business. Their business is going to be less demand in the future, okay? Because the business will change, right? It depends upon the market trends, depends upon competitors, it depends upon the taste of customers. Earlier, we have like very old cars, but people are going for the hybrid or electrical cars. And the different styles, different design, different models, different features. So their taste is changing, big depends on the purchasing capacity. Okay, it means your client will tell, hey, build the such type of formulas that my credit limit suits to according to their business with less risk. Okay, so you need to build a rule. So the parameters is how long the customer is in business. I want to consider this. Okay. Second is what type of business have they been doing it? Okay. Then location. We say region, country or region, whatever it is. Then number of employees. Okay. And similarly, they say, did they bankrupt in the past? Did they put any bankrupt in the past? Again, they started the business. Right? Then their financial turnover. Okay. Yearly sales. Okay. Then you may have like second rating, say the rating company put.
All right, let's test your knowledge. Here's a question for you. What is the main purpose of the Treasury and Risk Management TRM component in SAP S/4HANA? Option A, to manage financial transactions and payments. Option B, to handle procurement and supply chain processes. Option C, to perform human resource management functions. Option D, to support treasury operations, risk management, and financial transactions. Take a moment to think, and when you're ready, choose the correct option. Remember, each choice holds a key to unlocking the answer. Good luck. Type the correct answer in the comment section. Hey there, excited about mastering financial supply chain management? Our SAP S/4HANA FSCM TRM course is here to guide you. You can learn at your own pace, right here on our platform. In this course, you'll dive deep into SAP S/4HANA FSCM TRM. It's like a toolkit for managing supplies, ensuring we have what we need where we need it. Covering everything from the basics to advanced strategies, our course is designed by experts who really know their stuff. Your instructors are seasoned pros, ready to support you every step of the way and answer any questions you might have. And guess what? Our students absolutely love this course. Just like you, they've found it incredibly valuable. The best part? It's budget-friendly. This amazing opportunity to level up your skills won't cost you an arm and a leg. Ready to become a SAP S/4HANA FSCM TRM whiz? Enroll now. For more details, visit ZaranTech's website.
Yearly sales. Okay. Then you may have like second rating, say the rating company put the rating company feedback, right? So keeping in view all these things, I want to define the score. Okay. Score parameters. Is it clear? Are you with me? Okay. So when you want to give a credit limit, you will consider some of these parameters. When you go to your client and ABC client where you are working for them, or maybe his own company, whatever it is, whenever you want to build a credit limit, I want to consider certain basic things like how long the customer is in business. Are they newly or 10 years or 5 years? How long they have been? So what type of business they have been doing it? And location and region, number of employees with them. Did they bankrupt in the past? Financial turnover, yearly sales. Okay, I'm giving some example. It's not like that only these have been given, but some of the basic things that you need to check, right? Some of them, when you set up a credit limit, this customer will give you, hey, this is my information, but remaining, okay, you don't have to give. I will get it from your DNB because DN will give you your history. How long you have been in the business, whether whatever you said, you take 5 million, 10 million profit, you said you made it, was it correct or not? These guys, they do all the analysis and give you a clear pictures to your ABC company. Then accordingly, you set it up. Now, what is the formula that will do and how you weight them? Example, take this an example. Okay. So you may have some customers who have been into 0 to 5 years. Okay. And then you may also have customers who have been into 6 to 10 years. Then you may have a customers from 11 years to 20 years or maybe greater than 20 years. Is it possible now? You may have a customers who have been recently started 6 to 10 years, 11 to 20 years or greater than 20 years or even below. I'm giving some example. Okay, so what type of business they do? It can be any business, right? So you say that if they are into, say, garments or they say into consulting or are they into like what? Transport business or portal, web-based, say, e-commerce, any business, right? It could be any business. So location region, are they in US, are they in Europe, are they in EMEA, rest of the world, if they have any of these regions other than this, okay? Maybe South America or maybe some other parts South of anywhere other than whatever I mentioned here. EMEA also that covers Africa, but anywhere rest of the world. So number of employees, somebody said that I have only 50 employees. They say I have 100 employees. They say 500 employees, say 1,000 employees, or even great. Did they bankrupt in the past? Either yes or no. There won't be any other. Okay. Financial turnover. You may have some people say 10 million. Somebody say, oh, I'm having a 15, 25 million. Guys, this is important. That's the reason I'm going very slow. Okay. 10 million, or you say it's going to be 20 millions, or maybe 30 or 40, greater than 40. Yearly sales. Okay. It would be even more than this. Maybe some X, what other figure is there. Rating from the feedback, rating company feedback. Okay. So they say 1, 1A, 2, 2A, 3, 3A, or may say 5, 5A, or even they say AAA. Okay. So like this, they can give the rating. Take an example. If a customer is in business for 11 to 20 years and they're doing an e-commerce business, they are in South Africa and they have less than 50 years. They did a bankruptcy earlier in the past, like 8-10 years back, and their financial turnover is like 20 million, and they have been rated as a 2A by Dun & Bradstreet. Okay, one example I gave. But similarly, you may have a different one, like somebody is doing a garment exports. They're greater than 20 years. They have 500 million, and they never bankrupted, and their turnover is greater than 40 million, and they have been treated as a AAA. Do you treat both of them in the same way? Certainly not. Certainly not. So then what you do is you will give the weightage. Okay. So based on these parameters, like, if the customer, what I also called it as an BP, is in business greater than 6 years, and if type of business is e-commerce and location equal to Africa, say EMEA, whatever it is, EMEA, and number of employees is 50 or less than 50, 0 to 50, okay, never bankrupt, then financial turnover is say 20 million, okay, and the credit rating is 5A, then the score is say 70. Okay, the score is 70. Now, you know how many combinations of formulas I can create here using this? One may come here and any of them may fall under any of them. So you can make hundreds of combinations using this. Then you may have hundreds of formulas. So instead of writing in hundreds of formulas, SAP provided a formula within FSCM. They provide some standard. If you want, you can modify. Okay. So using those formulas, you can derive the score. Now, what is the score? How you determine? Like you will have a risk category, a risk class will come over there. Okay. So if the score is 10 less than, 0 to 10, if the score is 0 to 10, I want to give 10,000 or say 10 million. I say go with the small number, 10,000 credit. If the score is 11 to 20, I want to give 20,000 of credit limit. If it is score is 21 to 30, I want to give 30,000 of credit limit. Okay, so this is the credit limit, this is the scoring, and this is the formula. Are you with me, guys? Or if you want me to repeat any of the topic, let me know. I can repeat it, not a problem. Okay, if the score is 0 to 10, I want to credit limit 10,000 to the business partner or a customer. If the score is between 11 to 20, you'll get a 20,000. If your score is between 20 to 21 to 30, I want to give 30,000 credit limit to the business partner. Now, how you derive the score? Based on these parameters. And these parameters have to fit into the formula. That formula will bring the score. That score will derive the credit limit. This is also a formula. Scoring is also a formula. And using this formula, you can define the credit limit. It is not necessary that you need to have all these formulas to have a credit limit. If they said that, hey, mine is a small business, our customers are mostly premium customers and are the government customers or our export customers. So we do thorough check. We get a good rating from our credit rating agency. I don't have to do all this type of, scoring formulas? Is there a way directly I want to define a credit limit based on the information I have? Yes, you can directly go and set the limits in the business partner directly. You don't have to go this. But having this is an advantage provided if your business demands this type of score rating. Okay. Now, so what is the risk class? So the risk, you classified your business partner based on the rating. You get a rating from your external credit rating agency, and you also have your own payment behavior and business behavior of your customers, particularly those who have been with the company for longer period. If somebody has been doing a business for 10, 15 years, you certainly know the behavior of that customer. Behavior of the customer doesn't mean an end customer, okay? So the company, your customer, here in this case 8900, I put some name, right? So the customer, you know their behavior. When they buy the goods silently, when the amount is due, invoice, you'll get the payment. You don't have to even ask them. They never create any disputes, and you don't have to remind them. Okay, whenever they said that you put a price high and there are defect of the goods and what promise you didn't deliver, those type of complaints will never be there. And you never have to call them, hey, the payment is overdue, can you make a payment? You never have to call them. They only make payment automatically, right? And they have been doing the business with you. These are good customers, right? So that is called low risk customers. Okay, so when I use the word low, then what will have? Medium risk. The third one, high risk. Fourth one, very high risk. And there's a one more called no risk. Okay. Do you have a customers with no risk? Examples? What is the example of no risk customers? Your intercompany.
Intercompany.
Your intercompany itself
Intercompany has no risk.
No risk. So ideally, for intercompany customers, you don't do any credit check. You don't do credit check for your own business. Okay. So there's a no risk. Similarly, government customers. When you do a business with the government, even you don't follow the process, government will follow the process. You do this, I'll make a payment. So government is also no risk. Then export customers. How do you treat the export customers?
Generally advance payment or payment before delivery against document. So effectively, that is the one parameter. And otherwise, the export regulations are also applicable. So they are bound to pay.
Okay. So to a certain extent, you are right. Every export order is supported by bills of exchange and letter of credit. Letter of credit means your order from customer is backed by your bank. So customer, when he need a material from you, he will approach his local banker. That local banker will contact you, your banker, and your banker says that, okay, so if you supply the material to your customer based on the list of documents that he's asking, like you have shipped this quality, so that quality will be supervised by some third party and he'll give you a quality certificate, you have to attach it. You have to transport this material to the ship, and you need to have a transport receipt, and you need to have a mate's receipt. Mate means the captain ship who will take the material, he will give the receipt. And you have to give pallets, packing list. Packing means these many items with this much of measurements, and these many units are handed over to the ship, the captain. Then they will have acknowledge that I received this material. Okay, and then you will have a price. Everything put together, if you give those documents to me as per the letter of credit, I will make a payment to you. Okay, so then you are backed by the bank. Your bank will take the responsibility of getting money from your overseas customer. And some places, like in countries like in India, you have ECGC, means Export Credit Guarantee Corporation. If you go to them and ask them, hey, I want to export this material to so-and-so customer in that country, is it okay to do that? They will take some fee. They will inquire them about that customer, and they say that, yes, it is safe to send material to these guys. Okay, they will give back pay. There are low risk because you have taken all the precautions. Or no risk. Okay, no risk and low risk. Now, what is the medium risk? So most of your day-to-day customers who do the business ideally for 5 years, 6 years, they don't have any issue. They make a payment, even if they make small and justifiable. But high risk customers means the customers whose business itself is a risk. Okay, if they are doing a stockman, if they are doing a business like investing in the stocks, they are doing a business in some of the government bidding. Okay, so then what happens? Today the government changes, their funds may get stuck. They may lose the money, and if they lose money, I don't get money, right? So at that time, what I do, I will make all my precautions and I'll give you less credit. Guys, okay, you do little deposit and we will give the material and the remaining you can pay later. And the finally, very high risk customers. High risk customers, what kind of high risk customers? They never make payment on time. And their credit worthiness is very bad in the market. They're already in the debts. They're in the debts. It means the company has borrowed much higher than what their capacity is. Okay, but still that guy comes to the debt, he wants the business. That's okay. I don't give any credit. You pay the cash and take the material. Okay, so you have to classify your customers based on their nature of business, or the type of customers. You have to classify them. And this no risk, low risk, medium risk, high risk, or very high risk will have a various credit checks. Okay, so you can tell that these are the credit checks I want to do. If a high risk customer is there, if an invoice is due by even one day, I don't want to supply any more material to him. Okay, if a $10,000 invoice is pending and it is overdue by one day, and the customer created another sales order to supply the material, doesn't matter. I may lose the $10,000 about the business, but I don't make any supply to him unless he make the payment for my invoice. It's already overdue. They may say it's only one day that I will make a payment later. No, it is all your credit manager's responsibility whether he wants to uncheck the block or keep the block till the payment, because they will go with their directions of the manager. It depends upon the risk involved. Okay, any questions on the risk? Any questions on the scoring? I've been telling and you've been listening. Looks everything is clear, but when I ask the questions, some people are not respond. That is causing a problem. Okay, that's fine. Don't worry. You don't get everything 100%, but try to understand as much as possible. Now let's go back to playing. So what is a formula? What is a formula?
Customer weightage.
Formula is consisting of functions and parameters. Okay. So how do you build formula? How do you build credit score? Credit score is built using formulas. Okay. So what type of formulas that you have? You will have in the parameters, and the calculation, arithmetic calculations like your parenthesis equal to multiplication. Those are all the functions. Calculator functions, arithmetic functions. Using that, you will build a formula. So some of the parameters, you certainly get an interview question, or when you go for an implementation, you see that. Okay, you see that what they're asking. How long the customer is in the business? That's one of the classification that your end customer, that's your client want to classify their customers. You are coming here to implement my FSCM credit management, and remember that I don't want to give the credit limit the same way for everyone. So it depends upon these parameters. Okay, and these parameters will define the credit score, and that credit score will derive the credit limit. And this credit score also with the risk class and the credit score, using this you can also determine it. When you higher the score, I said higher the credit limit. But when you have high risk, what do you do? Score is high. What do you do? Business will come. Business will either come with this combination. Even score is high, if the customer is falling high risk, no, I don't want to give 30,000. I will have 10,000. Then you have to build the formulas with the combination. I know it looks complex, no doubt, but this is the advantage of having this particular piece of activity that you need to do part of your FSCM credit management. Now, if scoring is not there, even the limit, when I give it manually, can I give the score also manually? Yes, you can do that, but normally credit score will be derived and credit limit is possible to give it manual in the business part. So these credit limit and credit score, where do you give? Where do you mention?
In customer role,
Yeah,
Credit management role.
Yeah, in the business partner master data under credit profile. Okay. Now let's take in a small deviation from here. Okay. So where do you do the credit check? Where do you do that?
At the time of creating a sales order?
Yeah. Normally at the time of creating sales order.
Creating a delivery.
At the time of creating a delivery. It is possible you will have a 2 level or you can have only 1 level. Some business they do only at the sales order. Once the sales order is done, they don't do credit check at delivery. But some business depends on the nature of business. They do at both the places. You know why? The reason is when they are into continuous business, every day the sales orders will be created, deliveries will be happening, and customer also making payments. Okay, it's a continuous process, but nobody will be watching how many sales orders are created this week and how many deliveries are done in this month and how many payments are done by the customer. You'll be creating a sales order on daily basis with the different delivery dates. Some of them delivery is the next week, some of the delivery are the next month, some of the deliveries are after 2 months. Okay, and the payment terms is 45 days net, right? Now you tell me in this process when the customer is making payment and when the deliveries are happening, whether any invoices are due or not. I'm talking about one customer. If you have hundreds of customers having a different payment terms, different delivery dates, and the different payment dates, how do you track it? How do you track it? That's the reason we will build all the credit scoring and credit limit settings, credit limit settings, and you do the credit check at different places. Particularly when your delivery, and particularly when the sales order and delivery, if the gap of the days are more, it means if I get a sales order, but the delivery happens after 1 month, because my nature of business is like that. When I'm manufacturing a product, it takes 20 to 25 days and takes another 5 days to delivery. Okay, but customer, they themselves said that you do delivery of the sales order in this week and the remaining sales order the following month after that 45 days. So when you have a huge time between the sales order and delivery, business, they said it is possible that some of the invoices fall due and customer won't make payment, but still they try to purchase the material from me. So to avoid that type of a trap, what they do credit check during sales order creation. They also do credit check at the time of delivery. Okay. Now, when the sales order and delivery get blocked,
Credit limit is extend over, then it will block. How much is credit?
okay, what do you say? The
Credit limit. What is the customer credit limit is over, means certain 85% or 90%.
Okay.
Then sales order, whatever the rules, like blocked in the sales order or a delivery.
Okay. So if you set in a limit to the customer, like say $10,000, okay, he drawn already 80,000 worth of material, right? So that's what it is. 80% reached, then you say you want to put a block, right? That's what it is, isn't it? Any other thought? Okay. Normally what happens is when you have a 10,000, okay, 80% when you reached, you want to put a block. Normally it's not like. What happens is, even if you have a 2,000 balance here, right? Okay. If a new sales order less than or equal to 2,000, you still allow because he has a $2,000, 2,000 worth of balance is there. If a new order is less than 2,000, you're allowed. Okay. But the credit limit, 10,000 minus 8,000, 2,000, they allowed it. And you have a sales order and delivery check. The credit limit, the block will happen multiple reasons. Okay. You have a 10,000, you still have an 80% completed, you still have a 2,000. You can tell the system, even customer has balance, okay, block the sales order if an invoice is outstanding by 1, okay, or if an outstanding is more than 5 days. You can tell the system, is having a 10,000 limit, 80% used, 2,000 is left. He created a sales order. I mean, he said that my sales order is 2,000. I have a limit, 2,000. I should be able to get it because you gave me the 10,000, right? But we also have a condition to the customer. Hey, I will not give you any material if an invoice is pending or overdue more than 5 days. Whether it is a $10 or $100, $1,000 doesn't matter. You need to make a payment. So these are all the various checks that you do. There are so many things. Similarly, if dunning blocks, if a dunning is done 3 times, customer didn't pay. You may have $8,000 of, you may have only 20% used. Take an example. 20% only used, not even 80%. It means 80% left. Only 20,000 is 2,000. Yeah, 2,000 out of 10,000, 2,000 is used. He still have an $8,000. He still has an $8,000 worth that he can draw it. But logically, system has to allow there should not be any block. But you put a condition that there are 3 earnings on the customer for one of the invoice, but he didn't make a payment. But he has a limit, but still you said that block the sales order. So having a credit limit doesn't mean it will give an automatic right to your customers to draw the material from you. Okay. So you have a lot of conditions that you can do it. If the past due is more than 5 days, past due is 4 days. At the same time, you can set the limit also. Means an invoice is outstanding even by single day if the value of the invoice is 10,000 or greater. If an invoice is 1,000, but it is outstanding more than 20 days, it means lower the amount, higher the due date. Higher the amount, lower the due date. You can put such type of conditions also to block the sales order. At the time, system, even if you have limit, if these conditions are met, the sales order get blocked. Guys with me? Can understand what I'm saying?
Yeah.
Yes.
Excellent. Okay. Now, how this calculation happens? The credit limit, availability, how it will happen? Open invoices, open delivery, open billing, and open orders. Everything will be considered to calculate the limit. How many invoices are pending? How many deliveries are pending? How many billing is due? How many open orders are there? It will put everything to determine the credit limit utilization. It is not like that we did only the deliveries and the invoices are not paid. No, they also be considered. Open invoices, deliveries, open billing, and open orders. Everything will be considered to determine your available credit limit. Okay. So, any other question? Is it clear here? We will see some of these in the systems based on the training system that what we have. We will certainly have a look. Okay. Tell me what we have discussed so far. So many things we discussed.
Difference between PCC to FSCM, then formulas, parameters and functions, and now credit block means where should we block that credits.
Okay. So we
Also
talked
the risk
about
class.
okay, risk class. Okay.
We discussed in detail about the different parameters, how and the risk class and combination of that to calculate the score, and sometimes the risk category, risk class or risk category, based on that's how the credit rating can be derived, and sometimes the score may be high, but based on the high risk class, we might not have a credit limit. At the same time, few more rules we discussed about that's how credit rating or the credit block may be functioning based on the actual business transaction, something like overdue invoices or the very low value overdue invoices, how that would impact the creditability, maybe the credit rating of a customer, and which will impact the further business transaction like sales order blocking or delivery blocking with the customer.
Okay. So when you do a process standpoint, what is the first step? Creation of sales order.
Yep.
Okay. So you do a credit check here. Then next step, what do you do? Then you will have a shipping or delivery. Then you will have billing, right? Then billing is also nothing but your invoice. Then what happens after that? Payment. Okay. So you know this process, right? You do credit check here and you also do a credit check ideally here. Okay. So normal, once the delivery is done, billing and payments, there won't be any credit check. So when you got the payment, what happens? The credit limit will increase. Okay. So you have a 10,000 and 2,000 is 2,008 out of 4. You have used only 20%. So 80% is available 8,000. If meanwhile, if the customer pays 1,000, then what happens? The credit limit, available credit limit will be how much?
9,000.
9,000. Okay, so that's what it is. Because you are getting your money means your credit limit also go up, and the customers will the same thing, right? A credit card. You take a credit card for 50,000 rupees. You have used it for 40,000 rupees, and you made a payment of 20,000. How much you can draw from the credit card? 30,000, right? 50,000, you used 30,000, then 20,000 left, and you made a payment of 20,000, it means you are allowed to use another 40,000. So it depends like how much is left plus how much you paid is eligible for your spending capacity. The same thing here. Okay. So 50,000 if your credit limit, 30,000 you have used it, 20,000 left. Suppose you made a payment of 10,000. Okay. So how much is your purchasing capacity now? How much is the credit limit capacity? 30,000. Okay. So same concept. 50,000 limit, 30,000 used, 20 left, you paid a payment of 10. Now you are having an option to buy another 30,000. Same thing. Here also you will have your invoices, delivery, billing and orders. Everything is counted when you have your credit limit check. Your open invoices, open delivery, open billing, open orders. Then you will have less payments. Then it will have your credit limit. So that's how it will happen. Okay. So we will do a quick recap. Then we will get into the system. When you go to the system, you'll have a lot of questions. Guys, okay, the whole it. But this I explained it to you how is the standard credit management for FSCM credit management. Now, there is one more technical thing that I want to talk. Sales order, where it will sit, which module it will fall.
There's SD.
Okay. Accounts receivable?
Yeah.
Where? FI.
Nance.
Is SD. Okay. Where is your FSCM?
Sorry, what is the question?
Your sales order happens in SD module. Accounts receivables, where you have accounts receivables.
Okay.
And you have an FSCM credit management. It's an add-on project. Okay. Okay. So when you do a sales order in SD module, where the credit check happens.
The SD happens in the SD, but the credit management comes under the finance.
Okay. So the check happens in sales order in the SD, and your credit management amount is defined in FSCM. Okay. Now the credit check happens, then you will have two-way call, right? It's a two-way call. If the call happens, it means the data get back and forth. It will be interacting these two modules, right? So then you also will have accounts receivable. When you get a payment, it gets updated in your FSCM. Okay. Now, the relation between SD and FI, what is the relation here? What is the relation here? What is the relation between SD and FI? You can answer, just logically think.
Invoice and payment.
Correct. So invoicing, billing. Okay. You will have your invoice and billing happen. When you do billing here, your invoice goes to the customer account and it will show as your account balances. You through your reconciliation account, it will also have an integrated with a GL, right? But how this data get exchanged between these three? Your sales order happens in SD. Your credit limit is credit score, and risk is assigned in FSCM business partner. Okay, UKM 000, and you have an accounts receivable here where your SD and FI get integrated. When do billing in SD, it will create an accounting document in FI. When you make a payment, it has to reflect on your available credit, which is on FSCM. But how this happens, how this integration happens? Okay. It will be either BI or you can have a web services also. If it is ECC. If you go into S4, you may not need this BI. Okay. Now, your FSCM BP UKM 000, the role UKM 00 assigned to BP, and in FSCM business partner, I mentioned you, they get integrated with whom? Whom it get integrated? External credit rating agencies, right? Are you with me?
Yes.
External credit rating agencies. Okay. So how that happens? It can happen anyway, like using XML or SAP Credit Cloud Integrated or integration. What is this? It is SAP provided application where you can integrate your credit rating data with external credit rating agencies. It's a cloud-based application used for S/4HANA, but you can also use ECC, but you need to do some development. What you use here, you'll use here web services. Okay, so these are the things that I want to explain you theoretically. What else I have missed from theoretical concept standpoint? Okay.
The risk class which we identified where the customer is not paying on frequent basis or avoiding the payments to be done. For some reason, he is not able to.
Do you remember this?
Yes.
Block can happen multiple reasons. Okay, it can be overdue even by a day. You can tell the system you block the sales order. Okay, you can set up like higher the amount, higher the amount, even past due days is less, or lower the amount, even past dues are high. Then you can tell the system you block the sales orders. You may have a credit limit. It doesn't mean that you will release the sales order even the invoices are overdue. It's not like that. If a business partner, the customer, even here is having a balance of a credit and eligible to buy more items from you. But the other conditions what we put, if a customer invoice is outstanding or the dunning is done more than 3 times in an invoice, if the customer doesn't pay, you can still block it. Okay, so that is what we talked about overdue blocks. Mass release functionality of document credit decision. What is a documented credit decision? Okay, documented credit decision. So when a customer comes, are you seeing my screen?
Yes, we are able to.
I'm using Excel.
Yes, we are able to see your screen. No problem.
Okay, so document credit decision. So basically, when you have an accounting clerk or credit analyst who will prepare and who is responsible for handling a customer, he will keep looking into the available credit and new credit request from the customers. Okay, so when the new credit from the customer is in a zero amount, they said that, hey, can you set up a credit limit for me? Then the credit analyst, he will see and get all the required information and submit that all the information to the approver. A credit analyst is not responsible or not approver to approve the credit limit to the customers or business partner. There are some people in the organization to approve the credit limit for 5 to 10,000. It could be your senior supervisor, or 10 to 15,000 could be manager. 15 to 20,000 goes to senior manager, and 30 to 40,000 goes to director, or 50,000 above may go to vice president. You may set this approval workflow in the system. Okay, but the credit analyst, who will collect all the information about the business partner, put it on the request, and send for the decision of the supervisor or manager to approve the credit limit. That includes the attachments, that includes the existing credit limit, and that also includes the proposed credit limit. The proposed credit limit can be 20,000, but the leadership or the managers, they may approve only for 10,000. But how it happens? It all happens through a credit case. The credit case where you put everything and document it and send it for approval. That's where what we call it is a credit document decision. So mass release facility means you can release all the credit documents and at a time also. So credit score upload program. Wow, what it is this? What is this credit score upload program?
That is the one who can be interface, and so I have the I'll keep myself because sometimes I think we need to
external rating.
Get the others in the company.
So when you have an external credit rating information and get update here in FSCM credit management, you have several fields. Okay, your rating procedure field will be there. You have two types. One is real-time integration, periodical interface, or integration or interface, periodical. Okay, so these external credit rating agencies, take an example, DNB, Dun & Bradstreet. Okay, if you want to get the credit rating from credit rating agency for this business partner, who is your business partner number? What is the business partner number? 89000. You are from ABC company, right? Your client are your ABC. For customer 89000, you want to get credit rating information from DNB. Okay, so you don't have to call them. You can build an interface, and this external rating agency, they will collect money from your ABC company. They charge for providing credit rating information of any of their customers. It will be by transaction, or it will be period, or based on the information that you need from them. That is their business. Now, if it's a small business, a small company, you cannot afford the fee. Then you'll make an agreement like, okay, I don't do real-time interface. What I'll do is for every 3 months or 4 months, I will get all my customers or business partners rating information from you, and I'll upload it in the FSCM. If you have a real-time integration, you have a date on the business partner when it was rated last time and when you want to review that. Based on that, you build an interface. System will go and call the information from external credit rating agencies, get the data and update in the UKM_00 credit segment within the business partner. Okay, but in the upload program, what happens is users will see that for whichever the business partner information they need it, they will send that business partner information using a DUNS number, and it will get that information from the credit rating agency in the form of an Excel. That Excel you can upload into the system using an upload program. So that is all that what they're talking about, this uploading credit score. Okay, you can do it as a real-time interface, or you can develop a program, get the data from external credit rating agents, put it in the template and upload it. Then the score get updated. So you see that, right? The score calculation, whatever we have seen, these formulas. Okay, you can prevent everything and directly you can upload it. Or you update this information, build your own formulas and create the score. Or directly you can calculate on the Excel and upload it. Either way you can do it. So that is all that your credit score upload program. Any questions? Manage credit worthiness and payment behavior of business partner. Minimizes financial risk with efficient credit and receivables management, supports automatic credit decision based on the risk assessment, and integrate with SAP and non-SAP system using XML. There's a good thing. There's another thing that we can do it here. Okay. So this all we are talking about SAP. Okay, we're all talking about the SAP, but you'll have a non-SAP system also. It means you're in an ABC company, right? Your AC company, you're in SAP. Now you purchased or acquired a company and they are on Oracle. Okay, so they are on Oracle, and you can have one centralized credit rating system, or say credit management, centralized credit management. Okay, this is in SAP. You have Oracle system, but this is an FSCM. Your FSCM is sitting in SAP. Okay. So how do you project this? If I want to see the business process, how do you see this? Both are working independently. Okay. Both are working independently. It means the customers what you have and the business what this your acquired company. Say this you put the DF company, but this is also part of your ABC only. This is owned by ABC. Okay. ABC is a company and DF is also another company, but ABC purchased it. Okay, ABC has purchased it. So both are your companies only now. When you purchased it, they have 5,000 customers. You already have 25,000 customers, right? Now you have a DNB data, right? So DNB data, when it is there in FSCM credit management, you will only update here. Okay, you don't do it in ECC and you don't do it in Oracle. FSCM credit management, which is add-on component of ECC, you want to do non-SAP system credit management also. Okay, you build an interface between Oracle and FSCM credit management. Whenever you do the sales order here in Oracle system, your credit data can go from your FSCM and touch Oracle, whether this particular business partner or a customer is having a credit limit or not. It can integrate with your Oracle system. This one, ECC and FSCM, you don't have to build any interface. Your XI or PI, we talked about, right? PI. Your PI can directly interface with your ECC. But when it comes to your other system, even if I use a PI, you need to build your interface, real-time interface. So that whenever in the Oracle system, a customer need a sales order to be created and material is to be dispatched. If you want to do a credit check, maintain the same business partner in FSCM and do the credit check and send the information back to this Oracle system. So it will decide whether to block or not block the sales orders or deliveries. Okay, so that is integration with the non-SAP systems. But you use it, this one using an XML, you can do it using an XML as well. But if you want to use any other mechanism, that is also possible. But using an XML, you'll be able to manage it. Okay, so what do we see here? So key features: business partner credit master data, credit information, business partner rating, process external and internal credit information, credit limit calculation and checks, automatic credit decision. Okay. So what is the meaning of processing external and internal credit information? What does it mean? In this Excel, we talked about all the external information. What is an internal information? You can get internal information. We talked about it, but I didn't use the term internal information.
All the payments, all the payment behaviors, the payment transaction is the internal transaction. When the customer is making a payment, delayed payment, on-time payment, that is the internal transaction. What is happen within the SAP, that is the internal, and what is happens outside SAP, that is the external. So it may be the payment behavior or the open orders, the open sales order, open invoices, due, overdue invoices, everything is the internal invoices. Am I correct?
Correct. Your payment behavior and the volume of the sales. Volume of the sales means how much sales that the business partner did with you. What is the oldest open item? If a customer has made a payment, making payment, but what is the invoice that was the oldest? What is the highest invoice amount? What is the highest invoice amount that he purchased from us? He has been doing 20,000, 30,000 business, but before last year, he bought $100,000 material. $100,000 worth of material he bought, but he did only once. That was the highest invoice. What is the lowest invoice? What is the maximum outstanding? What is the DSO? DSO stands means days sales outstanding. How much of a DSO calculation? All these are the internal information that system will calculate and update in FSCM credit management under KPI, key performance indicator. So those are all, there's a transaction called UKM vector. I think, yeah, we'll see that one, UKM_vector. This is a transaction where system will calculate the ECC or your FI information and get all that payment behavior information like the oldest invoice, highest invoice, maximum sales, all that information it will calculate and pass it to FSCM credit management under the credit profile. So that is used by credit manager to see that how much of the credibility that the customer built with us, and it helps us in a key performance indicators. And why we need it within the SAP when it is available? Why I need to update in FSCM? Yes, the credit manager doesn't require to know every aspect by going into the customer account. Rather, SAP built in the FSCM that these information can be updated in FSCM under credit management module, that is under credit profile, by running couple of transactions. Okay, so there's a standard transaction called UKM_vector. If you run this transaction, system will automatically update the payment behavior tab within the credit segment of credit profile within the business partner. So that is the internal information. Okay, so you
this UKM_vector is available in S4 or it is an ECC transaction?
It should be available both the places.
Because when you told, I tried out in the S4 2023, but it didn't.
You don't see the transaction.
It is saying transaction as well.
Maybe I used the wrong spelling, but there is a UKM_vector. I think it's available. We'll check that in the system in this.
Yeah, sure.
Okay, so credit limit calculation and checks. We called it the credit limit calculation. How the credit limit calculation happens using your formulas and credit score. Using credit score, you can define the credit limit as well. Okay, that we talked about it. So automatic credit decision, that we talked about the credit documentation, how it happened, and how it happens, how it sends. How it will be sent to the supervisor or manager to approve it. Now, replaces legacy credit management for integrated cross-system credit control, ideal for companies with a distributed landscapes, organizations with a large customer base. Firms need internal and external data integration for scoring and risk management. These 4 points are really good. Okay. Replaces legacy credit management. Legacy credit management, nothing but standard credit management for integrated cross-system credit control. What is meant by cross-system credit control? You have in a different landscapes and different systems and different regions, and you have a different credit controlling areas in a different currencies. You have in a different credit controlling area for different regions. Europe is one region, and Europe, Canada is another region, US another region, but all these will have a separate credit controlling areas, and all credit controlling areas will be in different currency. They're not necessarily to be in a USD, but it all depends on how the design will be done. Your architecture or your AR and SD and FSCM, those guys, they will sit and decide how their structure is supposed to be. Okay, using that, they will define the architecture, and accordingly, they'll be able to define the currencies and number of credit controlling areas in the system. Companies with a distributed system landscape. What does it mean? You have different landscapes. Some are in Oracle, some are in ECC, some are in SAP. Within SAP, some of them are in Central Finance, some of them are in S4 latest versions, some of them are S4 old versions, some of them are ECC 6 versions. Like that, you have a different system. You may ask, do you see those many? Yes, there are big, huge companies across the globe. They will have different systems. Why they will have a different system? Because they acquired the companies and they sell the companies. When they acquire and sell the companies, they don't look into the technology. What technology are they using? Technology to buy a business, to sell a business is not at all the criteria for the companies when you do acquisitions and divestitures. Okay. Suppose I have a business, part of my business is not doing it. Okay, it's not doing good. I want to sell that particular business to someone else. Similarly, I need some business is profitable, but other guy want to sell. I will acquire that company. For that business, I will acquire it. They may be in Oracle, I may be in SAP, or they may be in SAP, I may be in S4 HANA, latest version. That's okay. IT team will take care of migrating the data. They don't worry about acquiring and divisor of the company based on the technology. Technology is only for helping the business, but your business is not going to take what technology used at the time of acquiring a divisor. That's the reason companies with the distributed system landscape, they can use this FSCM credit management efficiently if both the systems they want to use the credit checks. And organization with the last customer base. What are the various customers that you will see? What are the various business you see the huge customer base?
FMCG.
Okay, then good example. Another good example, simple example. Come on, every day use a mobile phone, right?
Yes, mobile operators.
Yeah. So mobile phones, the companies, the mobile company code. Almost every individual will have a mobile phone, right? You will have data plans, you will have a mobile plans, you will have a family mobile plans, and you will have an internet with Netflix, internet with an Amazon, and different type of plans will be there. And almost every person or every family, they are customers to your either internet service provider or mobile service operators. Your mobile operators also every business. If you take an Airtel, or if you take Jio, or if you take any other company, then everybody is a customer from them, right? And different people have different plans. And a different plan means you will have a different credit check. If you happen to be an Airtel for 10 years, without asking, he will give you credit limit, right? So even if you don't pay or if you need more usage, still they will okay. Otherwise, they say that your limit is exceeded if it's a postpaid. I'm just giving some of the examples. When you have a large customer base, and if they want to give the credit limit based on the customer credibility, how do they do it? They need to do the credit check. They do it in the background, but particularly for such type of customers, having in a real-time interface with a credit rating agency, that's useful. Firms needed internal and external data integration for scoring and risk assessment that we have seen it. Okay, so integrated with the landscape. Centralized credit management across the system, XML-based interface allow external credit information integration, works with the sales and distribution, financial accounting, and logistics. We have seen this one. I don't know why they put it in the logistics, but logistics normally won't come into the picture. It will come in the disputes, but not in AR. Maybe they want to see that when you do SD for integration, but I don't see that if you see any logistics.
I don't know whether delivery block they are considering on the LE or it is the core.
Maybe
on delivery part.
Yeah. So enables real-time credit check and risk monitoring. So if you have a real-time interface and when you're using XI or PI, when you're doing your credit check, it's a real time. So somebody blocked the sales order, they can immediately release it also, which automatically updates everywhere. So that is relating to your FSCM credit management real-time credit check with the SD, FI, and credit management. Okay, so business partner credit master data. It stores the credit limits, risk class, order limits, and ratings. We'll see the placeholders when you go into the system where the credit limits are scored, risk classes are stored, order limits, and rating. Tracks change history of audits and approval, of course. So basically what happens is if the organizations are subject to audits, it should not so happen you will give abnormal credit to some of the business partners and somebody approves it and that guy will bankrupt. Okay, so and internal audits and external audits, they keep tracking of these histories. So this director is having a relation with other company's director or other company management, and he will give $1 million of credit. No, it's not acceptable. They're under the audits. So it will keep track of it on what basis it's being approved and whether it is a legitimate or not. Is there any underlying interest? All those things will be tracked with the credit document decision. Okay, if you are requesting for any credit limit, there should be a proper document how that customer is eligible for a higher credit limit. So allows a strong documents like press articles and bank details. It's okay. So in the dispute case and in the credit case, even in the collections, you have an option to store digital documents. Okay, so like PDF documents or JPEG, those documents you can store it and it can be reviewed. For each and every case, you will have the documentation, approval documentation will be there and comments will be there and opinions will be there and the communication between the management and credit analyst, that also will be stored. So for all recording purpose, because people may be there, people may change. Some new credit analyst has joined and she wants to see that why the lower credit is given, why the higher credit is given, how the payment behavior, what were the comments. If they want to see everything, they can see there. Include collateral management for risk assessment. That's okay. Collateral management is the bank or any third party, or if you want a down payments, those things also can be seen. Now, credit information and rating. Internal rating, we talked about it. External rating also, we talked about it. Automatic scoring, that is credit rule engine that we talked about it. Credit limit calculation and checks. This also we talked about it. Automated credit limit determination with approval workflows. Real-time credit check during order processing. Custom rules for approvals, block, and alerts. We'll see that in the system when you go there. Now, comprehensive analytics in SAP Network portal supports real-time decision-making on credit blocks, customer workflows for approvals and escalations. Well, so what happens is when you want to see the analytical reports, if you have integrated with a BI, you can see that how many credit holds happens on this particular business partner and how much of a payment he has been doing it, what is the percentage of the delays, what is the percent of a disputes, and all those things that you can see if you have your BI reports and they built accordingly. So similarly, it supports real-time decision making on credit blocks. Example, if when a sales order credit limit is exceeded, okay, then orders automatically goes on the block status. Now, if the credit manager is having an access to, and if you see that there are a lot of credits are pending, it means when they're trying to apply the cash to clear the invoices, some information is missing. The numbers, invoice numbers of the customers are not matching with our invoice numbers. That's the reason they're not able to clear, but there is a credit sitting in customer account. 10,000 of the invoices payments are pending, but there are around $11,000 credit is sitting in the customer. It means he paid more than what the invoices are there. Then there's no point in blocking the orders, right? The credit manager, he will look into it upfront and he can decision, okay, this doesn't need to be blocked, so they can unblock it. They can take a decision upfront. Okay, so custom workflows for approvals and escalations. Well, the workflows we spoke in two ways. One is the workflow at the time of releasing the sales order. The second one is for credit decision. So credit decision means whether the new credit needs to be set up or increase the credit limit, or if any of the customer is not doing good in terms of business, you have an option to reduce the credit limit as well.
Raghav, sorry, I'm limited. Do you need any break here? I think it is more than 2 hours you're continuously talking and others. Anybody?
I will do 1 more hour for and I'll close it.
Okay.
It is a midnight. It's a midnight 12 o'clock for
No,
me.
but 5 minutes, no, maybe. Whatever your choice.
Tell me the FSCM credit management benefits. Okay, so credit management process monitors the risk of losses and restricts the loss by initiating a means of credit limit, efficient receivables, and other credit management functionality, boost credit decision making for customer, streamline credit policy, and optimize business relationship with the business partner. Okay, let us talk about what is optimized business relationship with the business partner. So what I've been telling is you do the credit rules checks. If the customer doesn't pay or if the credit limit is exceeded, you stop doing deliveries. Okay, so who is getting benefited here?
The business who has installed the FSCM, so that's they will not lose the money.
Okay, they'll not lose the money. Then what are they losing now?
They're in a risk of the bad debts, because if they will give the credit to a customer who is not credit worthy, they have a risk of losing money.
Right. So you are losing risk of money, but other than that, there's one thing that you're losing is customer credibility, customer relationship. Okay, if a customer invoice is outstanding by 1 day, you put a rule and you don't want to give a credit to the customer. Then what customer thinks? These guys have been doing a business for 1 year and they don't trust me that I will make a payment, means they're not trusting us. Okay, so in that case, even your system says block the orders, but credit manager will not talk to the customer to make a payment. What he or she will do is see the payment behavior, how many invoices are pending, how much credit limit is still left, and making a payment, delaying a payment 1 day should not matter. Is simply unblock it. He monitors the thing, he monitors it, but it doesn't mean that he block the sales order, ask money from the customer. You may have the rules. So if everything looks good, to optimize the relationship with the business partner, they simply unblock it. So it is all win-win situation. We don't want to lose the money. We don't want to lose the customer. If you are so strict, you may lose the customer. If you're so liberal, you may lose your company financial credibility. So it's all a win-win situation. Even you have such type of a stringent system, you will not apply stringent rules to every business partner. But you need a system to alert you that a payment is due from the customer, but at the same time, the sales order is there and billing is to be done and the delivery is to be done. That's it. Okay, is our regular customer, doesn't matter, 1 day payment, maybe something is caused it. Their system might have done, or maybe there's a holiday there, or the concerned person should have not been there, or maybe really there is a shortage of funds for a few days. Let's not worry about, let's release the blocked orders. Okay, but it still alerts. Why they do that? When the blocked order is get released, even without getting a payment or promise from the customer, intention here is to maintain the relationship with the business partner. Okay, if every time he's not making a payment, it makes sense. You can call the customer, your orders are blocked because we have not received the payment. But sales order blocked means it doesn't mean you have to insist for a payment from the business partner, because relationship also matters. That's what it says. Optimize a business relationship. You don't lose a customer with the stringent rules. You need to be liberal, but with the customer, but internally you can have a control. So credit management helps credit controlling manager the credit department by ensuring credit limits, analyzing acceptable terms of risk, invokes terms of payment to customers. Okay, so ensuring the credit limits, right customer get the right credit limit, and analyze the acceptable terms of risk by imposing stringent rules, and at the same time, being a liberal, you understand the risk with the customers. That is to be optimized. Invoke terms of payment to customers. Okay, if some customers, even if you get 30 days and they're not making payment on time, then what you do, you make it as in a 10 days. Okay, you put in, if you don't make payment in 10 days, I will put any interest on that. That's one thing. And second thing is, if some customer says that I've been doing business, the cycle of our business is it gets delayed to get payments from our customers, then you can say that your customer, okay, instead of 30 days, we can make 45 days. Instead of 20 days, we make 30 days. So it's all the liberal. How your credit manager will take a kind of responsibility and analysis to make decisions. Okay. Now, what is this? The below is a high-level process flow for credit management. Integrate credit management, creation of a BP, generate internal and update external credit information, set up a credit check, maintain a credit limit, trigger credit case workflow, block sales order, generate credit management, AR aging report, display credit exposure. What is the credit exposure? Anybody have an idea? Your credit exposure is nothing but the combination
How much credit use? How much?
Yeah, the combination of these four. We spoke about it. The combination of open invoices, open delivery, open billing, open orders, less payment put together is called credit exposure. Okay. So you see my PowerPoint right again? Guys, can you hear me?
Yes.
Yes.
Yeah. So integration of credit management, the first step is the creation of BP that generate internal and external credit information. That is, you integrate with your external credit rating agents and maintain the information. Set up a credit check rules. There are two types of credit check, static and dynamic. Most of them are dynamic check rules. They are defined in SD module, but you will assign them in your business partner in FSCM credit segments. Okay, so you have set up the check rules, maintain credit checks. What are the maintain credit checks? I gave some examples. If the item is past due by so many days, or these many dunning notices you have generated, those are the maintaining a credit checks. Maintaining a credit limits. Okay, so maintaining credit limits, we told you that like how much amount that you want to maintain the credit limit based on the credit score. Trigger credit case workflow. Credit case workflow is nothing but requesting either for a new credit limit or increasing the existing credit limit of the business partners. That's where you'll put all the information. You take those cases, credit cases, we'll take them. Block sales order. So why you block the sales order? Either due to credit check rules or credit limit. Even if your credit limit, your credit checks may block the sales order, or your credit checks may not fall in the criteria, but your credit limit is expired. I mean, your credit limit is over than what, I mean, the exposure is over than what is maintained in the credit limit. At that time also, it blocked the sales order. So when a sales order is blocked, then workflow will trigger, and then ER manager will take care of releasing it or keeping the block as is. So you generate a credit management AR aging reports. You see that how much amount is pending from which customer for how many invoices for what amount. So display credit exposure. So credit exposure, you'll see that how many invoices, how many deliveries, how many billing documents, and how many orders are pending, those things that you'll see in the credit exposure. Okay, so credit management organizational structure. Yeah, so we spoke about this as well. So you have credit controlling area that defines organization units, specify the checks, credit limits for customer. A credit control area can include one or more company codes. It is not possible to assign company code to more than one credit controlling area. Correct. But it happens the other way. A credit controlling area can be assigned to multiple company codes, but one company code cannot have more than one credit controlling area. Okay, it can be an interview questions, little tricky, but don't fall into the trap. A company code can have only one credit controlling area, but a same credit controlling area can be assigned to multiple company codes. If you are a finance guys, a company code can have only one chart of accounts, right? But the same chart of accounts can be assigned to
Multiple companies.
Yeah, the same thing here. So one company code will have one credit controlling area, but the same credit controlling area can be assigned to multiple company codes. Now, credit segments are essential for calculating the credit limit and are enabled to carry out the detailed checks at the BP level. The credit segments for SAP for management are used for specific company or branches. The corresponding credit segments are defined later in the master record for the BP. Once a BP is created, you can assign that BP to multiple credit segments. Okay, so same business partner can have multiple roles, and same business partner can be assigned to multiple credit segment. We'll talk about what is the credit segment. Okay, so let's now look at the credit control area and the segment level in IVL. I don't know what is that. Okay, it is your virtual labs. Okay. So sales organization description, company code description, credit controlling area, credit segment and description. Company code, right? So this company code having a sales organization and credit controlling area and credit segment. Okay. If you see, these are two company codes. Both have a same credit controlling area and same credit segments. Okay, so this 1.2 and N21 we should understand. 1.1 is credit company code and credit controlling area. 1 many is one credit controlling area can be assigned to multiple credit segments, and one credit controlling area assigned to multiple company codes. Okay, so credit management organization structure release 2. Okay, this we can see in the system. It's not a problem, but let's see what it says here. We'll look into this when we go to the system. Okay, you can also check this in your system as well. So credit management, the diagram highlights the overall composition of credit management, its functionalities. Credit management, credit manager portfolio, credit rules engine, credit information interface, credit case tracking, and well, they do much more beyond this. Okay, within the credit rule engine, you will see that credit segments also. In the credit information and interfaces, it will have much beyond the information that what we talk about. Credit case tracking, basically every credit case you will have a number will be generated and it will be assigned to a business partner, and using a business partner you can always search. Okay, credit manager portfolio, a credit manager will hold multiple credit segment and multiple business partners, and they keep tracking of them. So you will build in a workflows to see that which business partners and credit controlling a credit segments they can monitor. So credit limit management, you can, as we shown, using a credit score, you can maintain a credit limit, or you can do it manually. So where to change, when to change, how to change, it all depends on the credit manager reports. Okay, so remember, a credit limit, what initially is there, subsequently it will increase provided if you have a good payment behavior. The same thing, that credit card initially you may have some X amount while you're using it, and while you're making payments, your credit limit automatically get increased by your credit card companies. Same way in the business, if some of the customers, when they're purchasing and making a payment without any issues, then automatically they're eligible for good credit limit. Okay. So some of the functionalities. A credit management BP master is essential in order to understand BP relationship. The credit profile, business partner, and the credit segment data make the overall credit management master data. So the credit management means you need to have a business partner with a role. What is the role that we talked about? What role a business partner should have in the FSCM credit management? Not the guys, those who already told. Then we need someone new who. What is the role of business partner for credit management?
It's UKM 000.
Yes, UKM 000 is the FSCM credit segment, that where a business partner should be assigned. Then what happens if we have a credit management UKM 00 role is assigned? Then you will see the credit profile. Unless a business partner assigned to the credit management, you cannot see the credit profile. What happens if you don't see the credit profile? There are so many fields relating to credit management will not be displayed. So that is the important thing when you enable, when you assign a business partner to credit segment, system will open up the credit profile tab. Under the tab, lot of information you will be storing it. Now, a business partner, when you assign it to the credit profile, so what other things that you do? What other roles you will assign? You need to have a customer role. When you create initially, it will be created only with the general data. Then you extend that business partner to customer. Then you also extend it to the company code. Then you also extend it to the credit segment. Okay, so if you do only general data, what happens? It will have only address related information, bank information, and some basic information which you will see all those when you do a customer to a general data. Then company code data, where you'll have payment terms, you will have your reconciliation accounts, and any other information that is relevant at company code level. And if you extend that to the credit profile, all the credit related information will be maintained. If we extend it to the sales area, then they will do the logistic related. So those things that we need to know, and we will see that when we go into the system. Now, what does the credit profile consist? The credit profile consists of credit check when accepting a sales order and the resulting a credit decision. Credit profile stores the BP relevant risk assessment data, and it also contains scoring, credit limit, check rules, external credit rating, and sales scoring, the risk class, customer credit group, external credit information of the BP, and so on. I'm just trying to read. They didn't put the bullet points. That's okay. So we'll see the different tabs, and you will see that external credit information and the risk classes and other collaterals, and what are the different type of companies and the company DUNS number, and when it was rated, when is the next rating date, all those things you'll see in the credit profile. So coming to the credit segment data, the credit segment data contains the credit information specific to credit segment. It can be assigned to, we have seen that, right? It can have more than one company code. Credit limits are maintained for each credit segment. If the BP has a multiple credit segment, each credit segment will be assigned to one credit control area. So that assignment also we have seen in the earlier slides, but you can see that in the system as well. Okay. So if you go for your lab, what do you intend to see then? Okay. What is your plan when you're doing on the practice? You try to get an access, and then I'll show it to you in the credit segment, how to define the credit segment tomorrow. Okay, I can stop here and we will take the questions, whatever questions you have. Any questions that you have in FSCM related, the morning what we discussed. If you have any questions, feel free.
Raghav, sorry, I may be repeating my question. You told about the workflow. I might have missed a little bit. The workflow can be done for the master data and transaction data, or you told it would be mainly for transaction data. I remember, I understand that whenever there is a credit limit is exceeding, then the person who is responsible may be the documented credit decisions. That's what we told. We can do that. But how about the can it be for master data as well? That's currently the customer does not have any limit, or customer has a 10,000 limit and we have to increase it to 15,000.
That is nothing but credit case. There also
credit analyst, if we credit analyst put a limit amount of 10 to 15,000, and it will go for approval to the supervisor or manager based on the increase in the amount. Is that correct? That workflow is the standard SAP flow, correct?
Yeah, that is also standard. Yeah.
Which is will you able to tell me the Fury about the transaction code? Sorry, I might be asking.
I don't remember right now, but you will see on the credit case itself. It will trigger the workflow because you will have a user assignment. Okay. So
that's good. I got it. I got the answer. No problem. I got the answer.
Yeah, you have to the drop down, select the user whom they got to approve, level 1 approval, level 2 approval. When you save the case, it automatically goes over there. You don't have to go for a specific workflow, but the manager, you can SWBP, right? If in a standard transaction SWBP, it goes there, and the guy who wants to approve, he will review the case, and if need, approve it or reject it or ask for the modification of the credit limit. So that workflow I'm talking about.
Okay, got it. And it can be done directly, maybe if I am doing it. So it will, do I need to select an approver, or it will directly go to my manager or supervisor? That's it. We have some.
You can do both. You can do both the ways.
Okay. Manual as well as automatic.
Yeah, manual as well automatic, but you can set it up. So if it is, you will have something same in the dispute cases also. Okay.
Agreed.
You will have in the dispute cases that the different roles, processor, person responsible, and coordinator. But here in case management, you will have only kind of an approver who has to approve that. You select that user, it automatically trigger an email. Okay, so that is a configuration. Sending an email or sending it in SWP is in a development. Your workflow setup is to be done. Simply assigning it and assigning that particular case to them, it is in a standard workflow that you can do it.
Got it. No problem. Thank you.
Yep. Any other questions? It's a lot. To be honest, we explained every step. Okay, you need to remember and you need to see that what is being done. Go through your material once again, and in the material we have explained each topic, and this one is a kind of a whiteboard how these formulas are built, and how the credit exposure is calculated, and how the interaction happens between SDFI credit management and external rating. And we also see that how the risk classes are determined using the score and for the credit limit as well. Okay, so this is the formulas that how they build it. So these formulas will consider these parameters using the functions, and it will go and look for all the formulas to determine the credit score. It is the whole FSCM. Here is the complexity that you will have defining and building of formulas. If you're purely functional consultant, it is something that you need to pay attention. If you're techno-functional, then you'll be able to get it how these event conditions, how the formulas, how the parameters are defined. Okay, so you should understand the concept of credit exposure. You should understand the concept of a rating procedure, how this integration happens. And similarly, you also see the relationship, how the relationship happens when you have standalone ECC, and if you have a heterogeneous system and homogeneous systems, and how it gets distributed landscape of that FSCM credit management works. So these are all we have discussed it. I know that it's a lot, but practice it. At least you will get to a certain extent the idea how FSCM credit management is being introduced. If you're going for ECC 6 and above, trust me, your FSCM credit management is a mandatory. It's not an optional. Let's go to creation of a business partner. Let us see what business partners are available. There are so many business partners are available, and we can create one, and we'll see. Go to business partner, create organization. Okay, so you will have a group here. So what it does is it will take a number range assignment. Okay, we will give internal number arrangement and see, and give about like ABC Corporation. So what is your business partner number? 1015. So what I did here so far?
General.
Correct. So what I gave the business partner is I just gave the business partner name and address and the location. But when you look into the business partner, there are so much of a stuff will be there. You will give the title, and it's a company or is in a company name, and name 1, name 2, name 3, salutation, search term. These are there even when you create your customer master in the general data. It's more or less identical. Street address, PO address, communication. Okay, so even you see in the standard business, standard customer master as well. But you will see a lot of additional fields when it comes to business partner. Okay, so it is on the general data. You have an address, independent communication, and communication with if you have any independent and dependent communication extension, all that. So if you have PO address, some companies they don't give their address; they'll give postbox address. That use a postbox address. Okay, so you have additional fields as well. If you have integration with tax external third-party tax system like Vertex, then you will have integration with the tax registration code as a prerequisite for them. So we are not looking into those. So that's the reason we don't see those all. So address overview. When you maintain a multiple address, you can tell the system what you have to default it. And if the customer changed, or if the customer says my address is only for so-and-so, you have an option to create a new addresses. Okay, so you can move, you see print a preview, how that anyone has changed when they changed. If the business partner has a different addresses, you have address for correspondence, home address. You can create a new also, in fact. Okay, so folders you can see where you want to send the bank statements, second bank statement, billing address, invoice, company code. So you can use a lot of address for what purpose you want to use, for which purpose you can use it. For the big companies, you have different addresses, and each address is maintained for different purposes. Okay, they're different offices. So you have an option to maintain all those. Then you have an identification. So this is another important tab. Okay, so particularly when it is in a company, you will say that what's the legal form, legal entity, and date founded, liquidation date, and international location if they have location 1, location 2. So all those things that you can put it. So basically, these are all depends upon the type of business partner that you want to maintain. Okay, so these are all short names. They're different names. You can take it and legal form. So it's a state you can see that they're self-explanatory because these are not like something everybody will use it, but depends on the purpose. You can use this and you can maintain it. LLC in India, you say that partnership, proprietorship kind of thing, and the LLC in US we say LLC limited liability company. Private limited firms in India we use it proprietorship. So different countries will have a different type of notions, and you will put that as a legal form. What type of thing? So if it's a legal entity, similarly the legal entity, like sometimes they have registered as a public sector, private sector, and financial industry specific, or municipality, railroad, like that, if they're applicable. For us, it may not be, but for some companies, it's an important. So date founded means incorporation date. What date the company is incorporated? If the company has already liquidated, then you said that, okay, this business partner, we're blocking it, and let put it because they're liquidated, you'll give the liquidation. So you see industries here. So what type of standard industry in the system that you want to maintain? Okay, so like financial services, real estate, like nature of company and nature of business they do depends on that standard industry system that you can maintain here. Okay, now if you go a little below, if you're an external business partner number, you can maintain here. Okay, like in any other system we talked about, if a business partner or if a customer is maintained in your Oracle system, right? Do you remember we talked about it? So the Oracle, it has to connect here. There maybe it could be something 89764, something would be there. And when you get an interface file or a feed from Oracle, it has to get a credit information. But how you integrate the one-to-one business partner with Oracle, you use this external business partner number of Oracle. Okay, then it will read within SAP 1015. This would be important ID type. We will use it for integration of business partner with external credit rating agency. If you want to use it, we will use this. So SAP provided different type of thing, and say I'm taking an example, BUP001. So if I give this number, say I use a dunce number, I'm giving you here, but in fact it is not given by, this number is not derived from our own keying it. Okay, when a new customer comes, 1015, that is an ABC corporation, that guys, if they approach you, hey, I want to do the business, we want to keep purchasing material from you. So or say if the customer comes and say they want to keep purchasing material from ABC corporation, right? So I think yesterday we used ABC Corporation. It should have been different name. Give me a second. Let me maintain this as a ABC. Okay. So XYZ is a company, and yours is, the company where you are working and you are implementing is ABC, right? This is what we defined yesterday, isn't it? It's an ABC is ours that we're talking about. And yeah, this one we are doing it. And your customer is XYZ that we defined in the system. So it's an XYZ. Okay, they come to you. When they come to you, so being an ABC corporation as a manager, you said that it's a good welcome and we're happy to serve you and we'll register you as our customer. But how do you get information about you? Like how long you have been in the business? What is the nature of business? Is it your incorporation or LLC? What is your net worth? What is your total employees that they work for you? And did you do any in the past, any delinquents or bankrupts? And how long, what are your debts from in the market? So we should know about you. So there's a reason we want to have that information from you. So that guy says so many things. Okay, you are saying okay, but how to bill you? Is any third-party company they can give reference of yours? They can say that yes, we have an external credit rating agency. We registered with them and we provide all the information to them. They will make and maintain everybody companies, and our companies also registered. So using this number, you go and talk to that Dun & Bradstreet company. They will tell everything about us. Okay. Everything that DNB tell to your ABC corporation of this XYZ company is a rating procedure. Okay. But when you go to them, they'll ask you details. I have thousands of customers information with us, their financial stability, their financial wellness, and their credit worthiness. We have everything, but whom do you want to get? I said that they registered with you this number. Oh, okay. So give me the charges. I'll give the details of that guy. So the Dun and Bradstreet, they'll give the number here. Okay. And if they say the more than one, you can use those more than one. But the standard in BUP 001 is used for Dun and Bradstreet. Commercial register number, register of associate number, public register or corporate numbers, global location number. What you want to maintain here, you can maintain, but it depends upon the ID type. You'll be able to recognize what number is for what purpose. Okay. Now, so responsible institution, entry date, valid from, valid to. So then you will have a country and region, and the region you can maintain. Okay. For now, we are not maintaining it. And whenever you maintain, keep changing, you maintain the system will maintain the change history as well. Okay. So you see the control. So what type of business partner it is? Why you have a partner type, employee, broker, manager, sales rep, sales agent, and stakeholder? Why this is like this? A business partner type means they can be any kind of partnership property, right? Why you need this? This particular business partner type is used for your external party when you do the business with them. Particularly in the treasury and risk management, you can use it. It won't run anything, but using this field, you can make certain decisions and understand what type of business partner type that particular guy is. Like in the authorization group, in case if you want to maintain the authorization group, you can put the authorization group as well. So what type of print format you want to use, then you can use a print format. Okay. So data origin. So from whom this data is being received it for all this business partner data. It could be external interface, it could be internal interface, or it could be file upload. You can put that in it. This is basically to keep track of it. In your organization, when you have a multiple landscapes, and if the data is received and sent, and if you need to have some identification how this particular business partner data is getting updated, what is the origin, you can maintain here. Now the correspondence. So it's the same thing that whatever you see in your master data and the transactional data. When you create a document, in the document you'll see that there is a text field. So similarly here, you can use this for correspondence. You can use it for accounting notes. You can do marketing notes and business support note log. And you also have an option to restrict the correspondence, whatever you do with the business partner. If it is not to be visible, you have an option to restrict it. Okay. So basically, it all business and the consultant, the requirement and the capture. They said that, hey, for this business partner, I am a sales guy. I want to maintain some communication and correspondence about this business partner where I want to note it. You can say that you can maintain here. It is looking something else. Okay, this is a long text basically. You can view the long text, and you can also see the overview, and you can switch to other languages. This is the editor. Okay, so you can maintain, you check it and you can maintain it. And I'm sure this type of requirement will certainly come in some of the implementations. Okay, what they say is, hey, I'm an accounting clerk. So you have an accounting clerk option will be there. And if you have a correspondence, initial correspondence, when you set up a business partner master data, they said that I want to give this information, that information. And at the time of creating this notes, you want to put it here. Okay. So business hours, or similarly note log, any log that you want to maintain. And you will see that in the collections management, dispute management, also this requirement and this type of description. But this one is on the master data. What you have in the transaction level, what you have in the credit management level, what you have it in a dispute, why do you have business partner means it's all a security level. The one who creates a business partner, he will not be doing your day-to-day transaction. The one who is doing a day-to-day transaction is not responsible for the credit management. The one who is responsible for the credit management not necessarily is responsible for every region. Okay, you will create in a credit segments and credit controlling area each region. The one who is responsible for Canada is not responsible for a US credit segment. Even if they are both the same, that's okay, but they are not going to do your EMEA and Asia Pac. So that's the reason they're keeping in with the roles. There are different people that they're doing a different correspondence. I need a different placeholder. So this is what it is. This is not something new. It's the same thing that you see in your ECC, right? You see this in ECC also, right? May not be the bottom, the one which is the below, but here on the top, whatever you have a bank details of the customer, you will have a country and region. Then you have bank key, bank account, control key, IBAN, bank alias, and reference details. Well, normally we use this for outgoing payment. I also told you, right, why do you use in the customer side? In case you will have any refunds that you want to have. Okay, so at that time you create it, and it is also useful for US specific when they use the lockbox. Whenever you get a payment file from the bank will send a file. That file content will have a bank key and bank routing of this business partner, and using this system will be able to identify the customer open items. So for those two reasons, you maintain the business partner bank details here. Otherwise, it's not necessary that you need to maintain. Is the payment cards. If a customer is making payment through a card, then you will use this section. Okay, the status. So you have right, customer, you want to block it at account level and you want to do it at central level, or you will have a dual control. It means somebody make changes to this business partner and you want to have a control and somebody has to approve it. When they have to approve it, they have a release options. So when they get it approved, then it will release it. Okay. You have a status profile in customer maintain, you can maintain it. Otherwise, you don't need everything, but depends on it. Okay, so where else user list? If this business partner used in multiple places, remember, a BP is used in multiple places within the company. So if wherever it is used, you see that here, from which process, for which transactions you will be doing it. Transaction, not your invoice kind of a thing. Like the product, like if it's a treasury or different products, your in-house cash if used, you can use it here. If a collection roles or bill to ship to kind of thing, the relationships also will be there. So you can use there also. And unlike that, if you want to see where else used it, you can use that one. Save changes. Yes. Default, it will bring up there. Okay, it didn't bring 10115. Okay, so any additional text that you want to maintain, for what purpose you have to do in what language, you can maintain this text as well. So any technical identification like ID type, technical identification number, responsible institutions, business partner ID, you can do it. Now, so you have seen so far only in general data. Now, this particular business partner, if you are extending it only for finance, do you remember that we talk about it? We won't have the business partner for our general data and company code. We maintain the general data. If you want to maintain a company code level, first this customer has to be a finance customer. Okay. Now, what do you see here? Anything change you did? Those who have not created BP in the past, they can answer it. What different did you see when I click on the FI customer new? Okay, when I have not done FI customer, I was the general data. So what did you see in the general data, and what did you see when I put it in a customer new, FI customer new? What is the difference? Anyone? Now those who have experience creating the BP also now they can tell. Guys, are you there? Hope you are not watching your mobiles.
Here the company code data is showing that field.
Company code actually, there's a field.
Okay. I see 18 people are there. If except me and ZaranTech, there are 16 people. I see only 3 people are talking here. Okay, just keep an idea. I'm not going too fast, but those who are new, try to catch it. Okay, so you see the company code tab got enabled. Okay, when you do a master data, then you'll maintain the general data. You'll maintain the company code level. So these we have seen: identification, control, payment transaction, status, legal data, customer general data. Now we'll go to company code. Okay, so for which company code do you want to maintain? So I'll give you a company code 1000. Okay, so you see the additional tabs got enabled. Now you see some of the fields here. So I'll take recon account. No entries are available. Okay, switch company code. Okay, so I'll put it accounts receivable domestic. So it is a recon account. Okay, in the general ledger you mark it as a recon account. That recon account you will give it here. Then what happens? it will become as your subledger. So anything you posted, it reflect in your GL also in the total for this recon account. We spoke about, right? You had office RTK and interest indicator, and you have a previous account number, buying group, payment transaction, payment terms, and all these things will be there when you come into company code level. Correspondence, Dunning will be the Dunning block, Dunning procedure, customers insurance, customer status, withholding taxes, customer text. So all these fields will be there, but for us, what is relevant is account manager, account management, customer account management. Okay, so I'll save it. I have not maintained the language, so it is giving an error. I'll maintain the language here, English. I'll click enter. The error should disappear. I saved it. Why it is taken, right? It should allow.
Is it because you changed the company code, switch company code, something? Can you check that?
It should not be. It's actually asking external.
So that number will be automatically updated, right? Customer?
No, I get 1000 switch company code.
No, can you go to company codes? The first option.
Okay.
Here you can check for 1000 first, and then you can check for the.
No, 1000 it didn't have any GL. Okay. So I think we need to delete that one.
Yes.
I think. Let me see. Okay. So here now the GL account, now the customer account is created. Now what roles we have done? We have done a general role. Now, from our FSCM credit management perspective, we go to credit management. I see collection management. Okay. Shit.
It went up. It went up.
Where?
Yeah, here you can see the third one. Now your cursor is exactly on that. Third one, collection management, below that.
No, I want to have credit management.
Okay.
That's what I don't see, the credit management. Okay, let us go to, I can do one more thing. What I can do is, I can search for a business partner with UKM credit. You see that here you can search a business partner by role. So what I do is I try to do UKM00. We'll see what happens. So we have customers, domestic. Let us see. Okay, you see credit management. What company code did they use? Okay, they used this. We go to general data credit profile. I want to see what company code did they use for this one. Okay, let us see FI customer. Company code. Okay, they used 1710. Okay, we'll do one thing. Okay, they may have a different number ranges. Okay, 1 second. No. So
no. You have to check for S series, I think so, because it is starting.
That's what I was thinking. SAP credit, that's what they put it. SAP credit management. Oh yeah, there you go. Correct. Somebody put it in the training system as SAP credit management, but it should be FSCM credit management. That's okay. That's fine. Okay. And why it is not stopping there? Okay. SAP credit management. Okay. Okay. Now, if you see, when I see, so far we have defined customer, FI customer. Okay. Now I'm going to create an SAP credit management role. So it's the same business partner, but he will be having in different roles. Initially, we defined them in a customer role where I give a recon account. Now I'm going to create in a FSCM credit management role. When you have a credit management role, do you see that you have an additional tab called credit profile? It got enabled. Okay. So here you see different field. So this particular section, which you see in the credit profile, is all relevant to credit management. And you don't see this in your ECC. Maintaining a business partner, within the business partner maintaining a credit profile, which will come when you try to extend the business partner to credit management role. So here you see it, there are different rules. All external agencies and internal score limit formula, default scorecard, FICA rule, it may not be applicable. It is used for industry specific solution like utility, or you can see even oil and gas. And any public sector related, you will use that, but you don't use it for our non-industry specific. So rules for existing customer private, rules for new business customer, rules for new private customers, standard rule with automatic calculation. Now, what are these rules? So these rules are used to bring the configuration effect on this particular business partner. So why do we define the rules? Based on the nature of a business partner that you find in the SAP system, you want to treat them, hey, if it is a new business partner, either I will not give any credit limit to him, or I want to give some 5,000 credit limit. But how the system knows, like whether it's a new or existing? So whenever you create a new business partner, you select the new business partner or new customer. So if you have a rule for a new private customer, a new business customer, whatever it is, what system will tell, okay, I am going to define these rules for this business partner. You can change them. You see here, rule for a new business customer, when I say the system has automatically taken the risk class as very high default risk. So we talked about the risk class. How the risk class is defined? The risk class is defined whenever you get any information from the business partner as well as a credit rating agency. We will define whether this particular business partner is a government customer or an export customer or intercompany related. You will not have any risk. But if the business partner, that is your customer, is an unknown, and if he is involved in any such type of a business which is risky, and it's more likely that they may not be able to make payment for our invoices, or they may create a problem whenever we send in the services or goods them. So we don't want to take any risk for getting our payments. At that time, you will tell the system that, hey, the risk class is a very high risk class. You defaulted it whenever you created a new business partners. Business normally, if they are not known, if the credit rating is not good, they put this. Otherwise, you can change it. Okay, so medium default risk or low default risk or high default risk as well. So the check rules. So we talked about these check rules. What are some of the check rules? Here we are putting the name called it's a dynamic check rule or statistic check rule or statistical credit limit, whatever it is. So what basically the check rule will do? The check rule will do the settings that we do in the configuration, how the customer credit check has to happen. Okay, so that's how we will, whatever is defined in the configuration, will bring it here. We will see them when we go to SPRO, but for now, I'm selecting whatever the existing one. Now, what is the credit group? Is the corporate, a small, medium, subsidiaries, or anything? These you can create it, and based on this particular selection, you will see that below the tabs will change. Okay, so that you can define it how you want to take it. Okay, so if it's a corporate and if it is smaller, medium, and if you have this one like subsidiaries, if it is subsidiary means your own company. Okay, so what type of credit group that you want to define, you can define. So this is here rating procedure. So the rating procedure, how this particular business partner is being rated by your Dun & Bradstreet. What you have selected, our credit rating agency. There are several credit rating agencies in the market. I told you, like a PayDex will be there, Modi will be there, and Dun & Bradstreet is there. Dun & Bradstreet is a global and widely used globally. So that's the reason everybody will take the Dun & Bradstreet. So this one is a really a kind of an interview question and something critical that you need to understand. So what is the rating procedure that we discussed about is, the rating procedure is nothing but how the customers are rated by the external credit rating agency. Okay, you say that how it, if you ask anything to qualify, how is a super, is an excellent, but that is in a generic term, you use it based on the business partner performance in the market and based on the business how they're doing in the competitive market. These rating companies will rate them what type of company they are. Okay, so if you see in a consulting company, there are so many consulting companies are there, IT consulting, but every company is not in the top. Only few are there, but it doesn't mean the remaining are not doing. They're doing also good. Depends upon the client base, depends upon their innovation, depends upon the technology adopt, depends upon the service they provide it to the client, and depends upon the profit they make, and it depends upon the stock value in the market. Everything they will consider. So keeping in with that, they will rate these customers. Okay, so this customer company like XYZ, they rate it, and you will get that information from those rating companies. And it is a configurable item, the rating procedure, and once you configure it, you can use the data here. There's so many people that did it in the training pit, but you don't need you standard. You will have only 4: external 1, external 2, OINT 1, and you have a Moody, and you have a DNB, Dun and Bradstreet. So these are all somebody created, but different countries and different names they put it. But normally you will have a DNB. But for our training purpose, you have a DNB here. Okay, I'll take a customer rating provided by information to provider. Okay, so you will have a rating, 5A, 2A, 3A, no values are here. Let me maintain with the DNB. Okay, we'll come here this configuration, but for master data standpoint, I'm just trying to maintain some of them and let you know. Okay, so this is how normally the rating procedures are maintained, but this rating I maintain it manually. But in general, these ratings are integrated with your rating company. Okay, so the rating company will maintain those values. You also maintain those values in your system, but whenever a credit rating interface happens, then you need to tell which one that you want to assign to the business partner. Now, since I maintain here, now let us go to our business partner. I need to get out of here and come back. So this is what we maintain, DNB, and you see those 1A, 2A, whatever I maintain, they will come here. Okay, so then you will also have a trend. So trend is a positive, I'm putting it. Okay, then I put it, just I said enter. You see these valid from valid to rated on, ID number automatically should populate. So ID number didn't populate because I maintained here. Why didn't come? Normally when you maintain your ID here, it should come over there. This number normally will come over there. It has to come. Okay, so these ID numbers are used for I think a mapping will be there. That's the reason it come, but otherwise it will come. The ID number is this particular DNB rating. The customer maintained the ID number. Okay, so that is the rating that you can do it. If your company, ABC company, wants to get the credit rating from a different rating companies for this particular XYZ company, then you can select it. So what happens is, whenever you want to maintain your credit worthiness information in the DNB, they may charge more money for XYZ. Then what they do is, okay, I'm not going for DNB, I'm going for Moody. That's okay. So I will, whatever the information I get for the Moody company, I'll maintain that rating also here. Okay. So you see here, so different companies are there. From the different companies, what are the rating that you want to maintain, you can maintain it. So you see these guys also maintain 1AA, 2BB. So these are how the ratings will be there. Very positive. Now, so the credit worthiness data, it is something that you want to define about your credit rating. Overall, the credit rating of the particular business partner is very good. And little credit standing, that if you want, what date you want to maintain, you can maintain it. And similarly, statistical credit rate standing. So if you want to have these things, you can also maintain, but it's not necessary. What happens when you maintain all this information, then the maintaining of the master data will become a challenging. So you need to select only the field that is required. If you need an affidavit, you can take it. If you have bankruptcies filing, you can do it. The foreclosure is there, that you can check it. You know, foreclosure means normally in US, what happens if somebody is selling a house or selling a business, then expected period, they say that foreclosure, they close the business and they leave it. That what it is. So date of affidavit, bankruptcy process date, and date of foreclosure, those based on these checkboxes, you maintain them. Status of the legal procedure, if there is anything that you maintain, if you can do it, otherwise it's not required. But all that, what is important is this piece. Now, if you scroll down, you also see additional information here. Okay, so you have a collaterals, negative credit events for customers. If you want to check any exceptions, credit insurance, additional adjustment. Okay, so if customer gives any collaterals, sometimes, as I mentioned, if a business partner is not doing good, you want to have some assurance, some bank guarantees. Those type of things, if we have the type of document that you take, that you can mention here. So guarantees, if you want, you can put a guarantees. What type of guarantee is it? Limited guarantees. Okay. Why you give the guarantee? So after the customer purchase date, if he doesn't pay, then bank will give the guarantee that they'll get the money. Now, if it is a government customer, you also will have a different type of guarantees. Okay. So you can take that, what are the guarantee that you have, you can take that and you can maintain it. You can maintain the info type and that you can maintain here. Now, do you remember that we talked yesterday something called insurance, credit insurance? What is the credit insurance? We talked as ECGC, Export Credit Guarantee Corporation. We will use that in India frequently. If you are an export business, then these guys, they will tell you, if you go and pay the premium to them, they do the two type of activities, stating that this business partner in this country, he is okay to do the business. Once they say okay to do the business, you pay premium, and they will be responsible if the business partner or customer doesn't make the payment. Okay. So this is in a kind of initial company, the government organization. So similarly, if you have any other kind of an information that you want to maintain for this business partner, and based on that type of, you can first select it and you can maintain it. Okay. So it doesn't have any impact on the credit scoring or credit calculation, but a credit manager, if you want to see, hey, this business partner is the new, and I want to ensure that my invoice payment will be paid, then you have an option that you can back up this particular insurance, you need it, or the rating is needed. That's all required. And remember, this is a more of your credit manager activity. Okay. Now I leave the floor for questions. I want somebody to create a business partner while everybody is watching. Who wants to come forward? I can help you. This is critical for your FSCM. Without business partner, your collections, credit management, partly dispute, but otherwise you cannot really understand what this business partner is, why we need it. Who will come forward? Any of you? Nobody wants to do?
Yeah, I will do it. Just a second, I'll share my screen.
Sure, let me stop it. So unless you do, you don't even get questions. Trust me.
The more we practice, the more it would be better.
Of course, but at least you start, unless you have an hands-on, then it is like just a stereo kind of a thing. That what I don't want, I want to see at least if somebody can start doing it, it will be better for you.
Shouldn't we address the background configuration of BP first and then we start creating?
That goes in a different discussion and a different topic. It's a huge. Okay.
No, but only related to the credit area. I agree. We will not be covering only because that is the role which the others will be playing. They would be.
First, the business partner should exist before even you create a credit segment. Okay. So that's the reason.
Okay, got it. You are saying that's basic data and the company code data configuration, let it be the way it is, and we'll concentrate on the credit segment settings. Maybe only you touch upon slightly, only for 2 to 5 minutes about the company code data, so that they would be aware of. So that is the FI part. Okay.
No. We'll see that later. Can you go to that internal number assignment?
Yeah.
Good. Yeah. So take the first one. I think that's the one I've taken. Internal assignment. Enter your postal code. We cannot deviate from the whatever the schedule that is there.
No, I agree. I am not asking the deviate from the schedule. I am just asking what would be the more maybe that the. What I am trying to ask is the particular topic which is directly related to our core training only, nothing. Maybe general data and all the other big configuration will not be good. Okay, sure.
Okay, so I've given the name as RBB Corporation. I've given some address information as postal code.
Put the city name, Mumbai, Paul Bandari Corporation.
And region, language I've inputted. So I'm just saving it so that it enables the screen.
Try now, it allows save. Okay, good. I created 1015, you created 1016. Excellent. Okay. Now
scroll up. Then we have to go to the identification tab, right? Where we have given a done number.
Correct. You need to go to change mode, ID type, you put a DNB, B001, BUP001, and use the identification, same of the business partner, done 1016.
2025.
Yeah, that's good. Okay, go to control. And I think that's sufficient. But in case if you want to enter, you can enter. Otherwise, that's okay. You can save it.
Here we don't have anything in control. Okay, this information if we require, we can update. Now I'm
Save.
okay. Yeah, so this
Now-
is being saved. Now I have to extend it to the company code level, right?
No. Oh yeah, you can do that company code level, but for that you need to use FI customer.
Yeah, that's what FI customer is. This one.
Right. Go to company code,
I can do that directly here.
enter,
Account domestic, press enter.
save it. Okay.
Okay.
Yeah, you go to general data, give your the region, MS or something would have been there. In the region, use MS. Yeah, MS 13. Try to save it.
Yeah, this is saved. So customer number is updated here.
No,
Now
what
we
is the
need to credit,
credit?
SAP credit
Correct.
management. In this, we have to go to credit profile.
Use the rule.
Yeah.
Use
so
the rules existing customer private.
Just go to all right.
Okay.
Then you have only this many.
Yeah, credit. Yeah. Go to risk class.
Fine, right? I can select any one of it.
Yeah. Go to risk class. Just you're doing on the master data, you're not doing anything else.
So I will put it as, for example, where he has
Put it.
credit limit check dynamic.
Yep.
Do we have any group defined? So I'm not defining any group for now.
That's okay.
Going to the rating procedures, which can be automatically integrated, as you said. But for now, we are updating it manually. The one which you created.
Yep.
This one, putting on rating as, let's take as from high to a, putting it as
Positive.
constant, for example.
Okay.
This
Enter.
will be
No, you don't
automatically,
hit system will have to be here. Save it. Okay. Good.
So this is done, and credit worthiness, if we require, we can update it. It's not mandatory.
Otherwise you don't have to.
Yeah.
Good. So it's a pretty good, and we have a business partner that we created. Let me take it back. Can you stop sharing?
Yes.
Can you see my screen?
Yes, sir.
Yes, we can.
Okay. Now let's go to, so when you come into this particular credit segment, you have a multiple credit segment that are defined. And the credit segment, as I mentioned, what is the basis you define credit segment is, it entirely depends upon the business. Okay. So if they have a global design, and if it's a global company, and if they have operations across the globe, and if they have different sales area, and if they have FSCM credit segment, and if you have that they want to have a separate credit segment for by region, they can create by region. It is also possible that they can create a credit segment by country. It is not the technical requirement. I mean, it's not a technical design that you do. You have to see the business design to map into the technical design. So the business design, business said that, hey, I have all regions. I want to define as a segment. I want to define country as my segment. I'm having my business only in the UK. I have no plan to do any of my business rest of the UK. I want to do it only in India, or we want to do it only in Vietnam. So if they say I want to do it in Sri Lanka, or if they want to do like in Singapore, Hong Kong, and down the line, yes, it's possible. Then we recommend it because you maintain your credit segment by region, because you have a credit analyst will be there, and you also have sales rep will be there, and you also will have a credit managers. And when you have a different people and a different team members, then you see that how they structure. Keeping in view that you define the credit segment. When you define a credit segment, the system will bring you several fields: credit limit control, payment behavioral key figures, and KPI payment behavior. So what system does is, based on your internal SAP transaction, like how many payment invoices are overdue, and if you have a dunning in the scope, and if you're dunning the customers, and how many dunning letters have been so far generated, and what is the oldest open item, and what is your last payment that you received from the customer, and any other DS means I told it, day sales outstanding, with cash discount, without cash discounts, the sales and maximum sale collections amount. All this information that is derived from your internal AR data. Okay, so you need to run a transaction VKM_vector. I think we should be there in here also. We'll see that how it is designed in this version, and similarly keep KPI payment behavior. amount, dunning notice amount, and the number of dunning notes, and the date and dunning level, oldest open item, all these KPI indicators also, system will update and you'll be able to define. So what is important is in a credit limit and control. So if the limit is not defined, that's okay. If you want to define the limit manually, you can define the limit here, 25,000 or 250,000, whatever it is. It shows 3. Okay. That's it. Okay. So the limit is, it is a requested, and this is a requested on so and so date. So you will have an option when it is a workflow, and the guy who is responsible for this particular business partner to approve the credit flow, he will approve the credit. Okay, so now this particular business partner, the credit limit is 250,000. Okay, so if you want to put a validity date, like for a year or 6 months or 1.5 years, that also you can set it up. It means after this, somebody has to revisit how you want to change this credit limit. Okay, so credit exposure and credit utilization, how they get updated. What is the credit exposure? We spoke about it. It's a combination of your open orders, shipping, billing, payments. Payments means customer payments. And whenever you have all these 4, system will automatically calculate it and it will derive the exposure. And utilization, what is the utilization? If the customer there, if you have your invoices and credit memos and the customer didn't pay, it will deduct to that X amount. And it said this is the utilization, 60%, 40%, 80%. So it will show in the percentage and the amount. You see that in the easy access transaction, but we'll go over there. Okay. So block in credit management, a reason for block. Well, you know that there are a block on the BP by a master data level at company code level. They're all open, but the credit manager or the credit analyst, whoever maintain the credit management data, if they feel that some of the information is not received or not sufficient, they can block this particular business partner at a credit management level also. They will also have a control. Okay. So this will come into some of your questions when you conduct the workshop with the business users. Yeah, I know that you have at the general data level and company code level, they have a different authorization, but I don't have access for those. Being a credit manager, whatever I need to do within my credit segment level. How can I handle that? You can say that you have an option to block the business partner in credit management. Okay, so any questions so far? But I'm removing this block. Okay, I don't. If somebody use it, they may.
I have a question.
Sure.
See, here's the valid to is means 1 year, right?
Right.
So this credit limit should be means not released until 2026. We can use only this much. What is that valid date?
No. Any date that you give here, this amount, whatever you gave, it is you want to revisit this credit limit given to this customer. You have thousands of customers. When you have thousands of customers, I want to see any credit limit that I defined 6 months ago. I want to visit those business partners and redefine the credit limit.
Okay.
Okay. So it's not, if they're doing a good business and if they're good and if somebody bankrupt or somebody doing any fraud, if somebody business are not doing it, I want to reduce the credit limit. And if for somebody asks, yes. I want to, go ahead.
Revise, right? Like.
Sorry,
it's revised that credit limit for that.
It is not revised. So whenever you do it, it is not a mandatory field. First of all.
Okay. Fine. Yeah.
It is not a mandatory. But what happens is when you have a different credit managers and different credit segment and various customers with the different nature of a payment behavior and the volume of business they do, and there are also considered the premium customers. And what you do is for those business partners, you always keep having a look how much credit limit is there. Okay. And I want to visit this credit limit and I want to see the credit exposure, how they're utilizing it. Does it require any additional credit limit or can I reduce the credit limit? What happens if I reduce the credit limit?
Means they don't know, means they do not perform, means use that, not much that amount.
Okay, so if I say 250, I make it, you see right now, assume that 6 months back, I put a 250 credit limit to this customer. Now I want to do 100,000. So you know that the business partner cannot draw materials or services or cannot make purchases from our ABC corporation more than 100,000, right?
Right.
But think from your vice president, credit controller. If you reduce 100,000 means your overall credit controlling area level credit limit, there will be excess. Why can't I use this 150,000 to some other business partner who has been doing a business to me? I gave a 100,000 here. This guy is never exceeded more than 50. I gave a 250. Okay. When I gave a 250, this guy never utilized that credit limit more than 120K or say 80K. Why did I set up here the credit limit? But overall, at my credit controller, I have a limit. I should not give credit limit to my area or my regional customer more than 500,000. My company director or company management said that in your region, you are handling the 50 customers. Out of them, there are 20 customers, those who are really good and doing it. But I will allow you to X amount of credit limit. To whom you want to give it is up to you. If they say that, and if I give 250 here, how much I left? I have left another 250 for another 20 customers, right? I don't have much there. So if this guy never used it more than 50,000, I can reduce it. Then I can use that for I can allocate that particular credit limit to someone, but the overall limit will not change.
Correct. Yeah.
Okay, you got my point. So this is from your standpoint, from when you see this immediate, oh, it's a limit, right? Customer cannot drop more than this much. That is from a customer standpoint to have a control. But if you see the higher level, they see that I want to see my customers how they're using the credit so that I can allocate it appropriately. And at the same time, this limit, sometimes what happens, you have 100K. This, because some customers say 110,000. How you will draw? Initially, when it is 100K, system will block it, right? The manager, the credit analyst, who is already processing the sales order, that's okay. He's doing a lot of good business. It is the season for him. I have not increased the credit limit because it has to come from the controlling team. That is credit control, whoever is doing in the top manager level. But this guy is doing a good business to me. It's a season. Every season they draw a lot of purchase from us. Let us approve it. So it is possible even 100K is there. You release it as a blocked sales order. Now it has become 100%, 110% utilization, right? Then the controller says that, hey, this guy is doing a good businessman. Why can't you give by 150,000 or so? So those type of decisions are useful. Now, but how I make a decision? I cannot go each customer every day and see it. Then what I'll put a control on the date, validity date. I say that, okay, in next 1 year, I want to revisit this guy. I want to revisit this guy and see that what is the credit limit, what is the credit exposure, what is his utilization, what is your payment behavior, anything is wrong with his collecting the money or doing his sales or maximum sales, last payment, everything looks good. There are no lot of payments pending with them. Okay, let's go, let's make it 125. But on what basis he will change it? This date will help him to pull all the business partners, all the business partner that needs to be revisited on this date.
Okay, fine.
Okay, so revisiting, you can use it for multiple purposes. I'm giving a couple of examples. Okay, so the payment behavior, KPI payment behavior, credit control. So these are all the things that you will maintain here on the business partner at the credit segment level. So what are the main things that you have seen? We have seen the fields. Those are relevant for your scoring, external credit information, and information category. Then we have seen your credit segment date limit and validity date, and by having your credit segments. Each business partner can be maintained for a different credit segment.
So based on the credit segment, we can maintain the limit, right?
No. This,
for example, here is 002, for example.
Okay.
So we have maintained, for example, 100K.
Okay.
So we can maintain 003's credit segment and we maintain for example, 10K for this, like that.
Did you notice it? In the currency also you can maintain it.
Yeah.
In that currency, what business area you see it here, what credit segment area, based on the credit segment area, you can maintain your credit limit in that currency.
Sure.
Because each credit segment, as I mentioned, this business partner, take an example of Google, take an example of Amazon, take an example of Microsoft. They're global present. You take an Accenture, you can take your TCS, you can have Wipro. You are globally present, right? So if you are having a customers, I mean your end client, in case if they want to put a certain in Australia, okay, so you are providing services to Australia client means the same company who is taking in Microsoft Australia, they will put in Australian dollars and they give a credit to you. Similarly, someone in the Microsoft US, similarly for Europe, in the Europe Microsoft is there. So they all provide different currency and a different credit limit.
Okay.
Okay, so that's the reason you maintain. Remember, this FSCM is really efficient and effective for the people, those who have global customers and global purchases. And again, they want to maintain centralized. They want to see that being in US, they can see what is happening across the globe for their business partners. Okay, so here you also see the data, like if you want to do credit check, you can do how the credit check is happening. Okay, for this business partner, for this credit segment, this is the score. It's a limited period credit liability, and the rule is B2B, and amount is this one, and everything that you can see here for this particular business partner. Okay, so credit check executed with the real zero true. Credit segment is so and so partner, total liability, and everything that you'll be able to manage here. So you can see that because different people will have a different look.
Yeah.
Okay. So any questions here so far? You increased earlier, it was 0. Now it is increased. Okay. Now let's move to the easy transactions. FSCM credit management. You see here master data changes, list display. Okay. You'll see document credit decision and current settings, and integrated with your FI. Okay, this is what I was talking about. UKM transfer underscore vector. Okay, not UKM underscore vector is maybe old transaction. It is UKM transfer underscore vector that we talked about updating the payment behavior history. Okay, so before we go anywhere, we have seen the BP. Do you remember? We have seen that BP, right? Okay.
Yes.
This is maintaining at UKM 000. This particular role is an UKM 000. Okay. So the same business partner, when we go to collection, we will maintain it UDM 00. But for now, for credit management, UKM 00. Okay. Now the second thing is you see here UKM black and white. What do you mean by black and white? As the name indicates, if a business partner is doing a good business with us, if you want to consider as a premium customers, those business partners you maintain here. Okay. Now, what is the useful? We will talk about it when we go to the formulas. Okay. So you will have in a formulas that you define, and you say that okay. So any customer, those are here. If you want to do white or block, then you can put it here. Yes, this business partner is a premium customer, and I want to consider him in the formula either to give a more score or more credit limit. Okay, what is a score? Did we talk about the scoring?
Yes.
Okay, now this time I will ask someone who can. Ranjita, okay. Oh, who can? Akshay or Ranjita, who can answer? Did we talk about scoring? Anyone? Anybody?
It checks whether what is the financial position of the customer, like the location, number of employees, according to the scoring, the rating company decides the score.
Okay, that's good. So basically, to define a score, we have certain parameters. Okay. So your customer, what attributes, what payment terms, and those things also you can define. But basically, your scoring goes with certain parameters, score parameters. Okay, how long the customer is in business, what type of business they have been, location, region, number of employees, did the customer bankrupt, financial turnover, yearly sales, or rating, some of the example. So we'll allocate the points. Based on the points, we will define the score. Okay, so this is, you'll give the weightage, and based on the weightage, you put a formula. then you'll derive the score. Okay, good. So good answer. The next one, what I mentioned, what are the premium and what is the black and white customer? I just explained you. What is that? Whoever can. What is the black and white customers?
They are the premium customers.
So white means, positive. You see this one, negative and premium customers. If you're defining that if the customer is a negative, you put them as a block, and allowed is nothing but it is a customer who has been doing a business well, and we want to consider him as a premium customer. So that is the purpose we do it, and we will use that in our defining the formulas. So finally the S case, credit limit request.
So one question on that block part in the black and white. So the block which we have in master record and the block which we have here, what difference does that have? Any impact on the?
Is a block or black?
Yeah. So here it is written as black, but inside it is blocked, right?
Correct.
So for that business partner, if I set as blocked, will the transactions which happening in the business partner will be blocked for credit management?
It will continue to happen. The only thing is we will use this particular setup for the purpose of your rating.
Okay, only for rating. Okay.
Rating, premium or black. So if you don't maintain, that's okay. In case if you want to give access to someone, then they want to do it, then you can give it that one to them. Okay. So this is important, S case. When you click on S case in your practice, it will ask for RMS ID. Record model. So you can take the existing record model, credit management, where I have the credit management dispute. UKM credit underscore case is a standard credit record model. You can take the standard one. SAP suggests you don't create a new unless there is a need. So rather you can copy it and you can use the existing one. Okay. This is what we are talking about. Okay. So you will see that similar screen in the dispute also, but we will see in credit management. Now, in the organization structure, you will have a different people, like your credit analyst. So credit analyst means they are the guys, those who will be doing this activity. A new business partner is there, and they are looking for credit limit increase, or a new customer is looking for setting up of a credit limit. Okay, so existing one will have a request to increase the credit limit. For the new also, from 0 to a higher amount, they can request for increase, or they set up in a new altogether new. When you create this request, it will ask you what type of case it is, credit limit request, or you said that increase the credit limit, or whatever it is that you want to specify, you can take it from here. Okay, credit limit request. You can take the credit limit request as a case type. You see that first credit limit set, or you can also have, you can add this. These are your freely definable reason. Limit exceeded due to increased order volume. So you can asking for extra additional value. So first time is the first time you take it. Priority high, medium, low. Escalation reason you don't have to. Processor and planned close date. The planned close date, you can put it like 1 week or whatever the time you want. You put your username, some username. Okay, so then this will send it to them. Then it will send it to that particular user for approval. Okay, this is what we created, right?
Sir, can we upload a credit limit request for more than one customer at a time? That is at mass level.
Upload means what? This is basically we're requesting for one customer. See, I'm in a credit analyst. Somebody called up. They said that, hey, I want a $25,000 of a credit limit, but I am not the one who will be giving a credit. Being a credit analyst, I will give all that information. Then I will submit it. When I submit it, it goes to this particular processor, and he will review it and he will approve it. It is a workflow. So that is what we are trying to do here. Okay.
Okay.
So this particular customer score is a 19. How did it come? It come from this particular customer. Wherever you see that, it will come from that score. When you see the customer business partner, sorry guys, if I'm using interchangeably customer or business partner, you always consider it a business partner. Do you see this score? So what I did, what I did here, I gave the business partner number. System brought the score from the business partner. Okay, so what is the risk? It is coming from this particular business partner, the risk. So it depends upon the business area. It says that a euro and credit limit 0. How much the customer asked for it? It is he asked for 20,000. Say example. Okay, so current credit limit is 0 and 20,000 is the request. Now if I have an options here, a lot of options. Okay, so if you want to link the objects, like anything that you want, you can link here. Link object means nothing but your SAP document numbers, is the customer, business partner, anything it could be. Okay, so it will tell you, okay, see business partner, documents, and linked request, anything is there, any earlier request, anything that you can link here. Okay, so if you see the notes, you can put a notes here. So you can type here, customer is new and received DNB rating, and looking for credit limit of 25,000, 20,000, right? Is it 20,000? Is it 2,000? I put it, it's a 20,000, 20,000 as per attached request. Okay, so if I save it, then there is an SWBB, right? There's a transaction, workflow transaction. It will send a request to them. Then that guy can log in and check this particular request. Okay, remember it. You have to build a workflow for this. You have to work with your developers and build a workflow for this. Then it goes to the right person for approval. The one who will receive is what is named DS Mantri. So this DS Mantri, he will get a request of 20,000, and he have an option either to approve or reject or give only the amount. Less amount you want to approve, you can approve it. He's a new customer, so there is no exposure and there is no utilization so far. Okay, so who created, who changed it? When it is closed by, if it's closed, it will update this one. When he closed it, it will close that so and so. And remember this text, if you want to change it before you submit it or before update next one, you have an option to change the last text. But once it is moved here, and if you add another one, so normally it will not allow to change it. Okay, so just I want to let you know, you will get these things even in dispute case management. There the case type is a different. Here the case type is UKM credit case. Okay, so that's what it is. You have an option to save to local file the text and load it to local file. If you want to insert, you can insert it. You also have an option for attachment. Oh yeah, it's attributes. Why don't you have an attachment? There will be an attachment as well. You have an attachment that needs to be configured, I believe, but you can do attachment for objects as well. It will come here. They don't save, they save it. Okay, if we go to change mode, there you certainly have some of the option to, is this hide organizer, case management. Okay, so the most recent one which I have created, you can see here, it will come with your working dispute case beacon analyst. If you work here, you will get here. But there is an option to attachment actual for sure. This is this one, structure, right? Okay, let me pull this up. Create, no nodes can be created. You have an option for attachment for sure. Okay, you may get this in your app for sure. But here also it is available. You will see this here somewhere. Archiving object will be there. Where is the archiving object? Maybe they are not enabled here in test system, but for sure you will be able to do attachments as well. Okay, so this is all about your credit case. So what is a credit case? Credit case is nothing but creating a case requesting for the either setup of a credit limit or increase the credit limit for the existing business partner and get the credit limit approved. When you do a credit limit approval, whatever the amount you get approved, it automatically get updated in your business partner. Okay, so the business partner, you have a credit limit, right? You've seen that one. So that amount, this get updated here. This business partner may be done into multiple business areas, but whatever you have selected here in this particular screen, which credit segment you have taken a credit segment business area 001 for this particular business partner. Where is the business 1015 business partner? Whatever amount is approved here, that automatically go and update here in this corresponding credit segment, the limit. It's a test system. We don't have workflows, but otherwise it will work. Okay. You will see that in the real time when you go in your implementation. You may get customers say that would it happen automatically? Yes, once it is approved, it goes there. It will keep all your audit trail, who approved it, how much you approved it, and everything that you will see it here. Okay, so that is an important thing, that this particular create case for credit limit is available on your Fieri app. Okay, so when you have a Fieri apps, you can see that these are the simple, but there are more features available and the search and everything in on the Fieri apps. Any questions here so far in the credit case? You can do some exercise, yes. When you create your own business partner on the training lab, you can create your own credit case. It's a self-explanatory. It's not a rocket science. I'm just checking what else is available in your notes. Okay, so if you see this, whatever happened here on this particular credit case or the credit request, the actions will be shown here by field as well. Whatever I did. What are the new value? What is the attribute? What is the old value? If I change this, any of this field, like your say category 2, then it get updated when I save it here. So you will have a good audit history as well. Okay, when you go out and come back, you see that one. You see the old value category 1, the new value is category 2. Anything that you do here, your system will store here those values. Anything approved or not approved, rejected, what is the old value, what is the new value. Do you see that initially I put 2000, that I put it as in 20,000 later, it's requested, it got updated. And it will tell you the username and date, time, and activity performed, what is the old value, new value, everything get maintained here. And you have an option to change the layout here as well. So user time, user activity, old value, new value. And when you go to dispute case management, you have an option to update the mask field. That also you can see. But for now in the credit management, these are the various features that use in the case. And the customers will come back and say that, hey, I want to add more fields here. I want to see who changed it, what changed it. And by adding the new fields, that requirement will come. But again, that is all during an implementation, how to do, what to handle. Any questions so far? So here on the credit search, what it does is, if you just search the credit, all the credit cases created will be displayed here. So if you want to search, you can search here. You can limit here up to 500. If you want more, you can do that more. And if you want to add this as a variant, you can also create a variant on your own variant, and you can load it, the variant, and you can make the changes to this. You may also have several fields when you do the layout here. When you click the change layout, there's so many fields that are hidden here. You can bring up and you can see it. Customers will come customers means your client will come with all peculiar kind of request. And before you make any changes, you see that whether that field is available here or not. Then accordingly, you can maintain that as a variant. Okay, so the variant, you can save those variant and the layouts as well. If you're more than 500 cases, then those cases you need to increase the heat, and you can do it. You also have filter, case ID, by business partner. What are the various cases pending with the business partner? Who created it? Status, priority, and the processor credit segment. You can do the filters as well. Okay, so this one is for case type credit limit. So you can have a different case types. So for a new case type, when you say that it's a credit limit and the system will bring up your new credit limit request. That's also called credit case. Any questions here? So you see that delete KPI logs, delete formula logs, UKM check, MD consistency checks. These were newly added compared to ECC and earlier versions of S4. You see this data, there is a data in KPI tabs in business partner. These are the key figures, payment behavior key figures and KPI payment behaviors. For whatever reason, if you want to delete that, you can delete those data from here for a specific business partner or range of business partner. Okay, if you want to delete the older one, then you can put the number of days and delete those as well. Otherwise, what happens, it will get piled up and the data may not be up to date. That's the reason SAP provided a transaction to delete that. Similarly, delete logs for score and credit calculation. So system will create a logs, and those logs will be huge. And for every action, it will maintain a lot of logs. If you want to logs to be deleted, and you can have a selection for a given business partner, or if it is relating to specific credit segment. Once it lost, then you will not have a track. So there's the reason it should be used wisely. So consistency check. In case if you want to do any customized settings or missing profiles, missing roles, missing check roles, and for a given business partner currencies and in inconsistent cases, you see it. Basically, what happens is when you have a business partner, when you do in a configuration and some of your credit segment data and sometimes your business partner key data will not be maintained at the business partner level. And similarly, some of the corrupted document credit decision, we have seen the case, right? Some of the cases, they are not having sufficient information. And when you do mass or when you do a bad job using the bad job that you want to handle, then it is necessary to do the check. Otherwise, wrong data will go and the approver will have a problem in approving it. So for that, whatever the reason that you want to see it, you can use this consistency data can be executed. Okay, and you have a close inconsistent document credit decision. If any of the cases that you created in earlier discussion, if you want to close them, you can just take a select and give the case ID and release it manually. Rejected system will automatically close those. These are the transactions that are available, but you may not need it. But we will see these like mass UPD4, UPD3, UPD2, UPD1. These are really important in your day-to-day life. So if you want to see the rules, you will have a changing of the rules from one to another. Okay. So when you're here in the business partner, due to several reasons, you may want to change the rules at the business partner level. Okay. So who are initially new, you want to make it as a existing. Okay. Or you want to make it private to public, whatever the way that you have done, whether done by mistake, whether they are done because of the business improvement, you want to change those business partner rules. If you want to change for 10 people or 20 people or 100 people, you can't do it here in the mass. You need to do it manually. So that you can use this particular T code, mass changes that you want to do for this rule, for the business partner, change to this rule. Okay, you can check it. You can. It's not a big deal. You can do that if you want. Let me take that exercise for you. Anyhow, okay, for this business partner, I'll say default scorecard. I'll save it. I'll go to in display mode. I'll give this business partner, and it won't go alt tab. It will not work. Okay, this not this one. You see this? It's the old rule. It's going to change to the new rule. Okay, I simply say update run. It will change. For sure, you will have this requirement in your real-time implementation. Okay, so this it looks an easy find and replace kind of a thing, but there are a lot of controls and restrictions, and you'll be working with your security team. Who should have this access? Who should not have this access? These are critical. Basically, what happens is, if by mistake, if anybody change it, and the credit limit will change and the orders get released automatically, and it's going to be a pain, right? That's the reason it will have any security rules around this one, access to this transaction. Okay, so earlier it was to default score, now it changes rule for new business customer. I am in display mode. Okay, so that is the one that you can do it from here, and you can also change to check rule 2 as well. Okay, business rule, this is for your credit score, this is the check rule as well, if you want to do that, dynamic or static, that also you can do that from here. Now this is interesting. Okay, this is really interesting. So you will have a credit mass change to credit limit. Okay, in case if the credit limit, if you are using the rules, based on the rules, you will have a credit limit. You see that external credit agencies are storing limit. And if you try to change the business partner, and system may change your score, based on the score also you can change the credit limit. It may not happen in the test system, but in the real time it will happen. Okay, so only special attention, only block, and this is the rule, this is the partner, this is your credit segment, and credit limit, parallel processing. If you want to do it, you can do it. I can, but there are very few business partners here. Let me see what it shows. Okay, so there's no data, but otherwise it will make those changes as well. Okay, it's a pretty much, but it all driving your rules. So the score, it is an interesting thing. So when you see this business partner, you see this here, your score got changed. So why the score got changed? We have a formulas. Those were built to change the credit score based on this rule. Okay. So what happens if you change the rule, if you change the score also help you to determine the credit limit of the business partner. If the higher the score, higher the credit limit. Okay. So you see this one, right? Yesterday we have seen this particular scoring mechanism. The weight, whatever you give depends upon this. That score will get changed automatically when you do the change in the rule. So this will come from your configuration and the formula. We'll talk about those formulas tomorrow. Okay. So you can save this one, the formula will automatically update here. So the same way, if you want to do mass changes like that, whatever you do it manually for a given business partner, for the rule, whatever you give, the system will be able to change those score fields using this particular test. I mean, you can do the test run, you can do the update run as well. It will bring up the values, but what is the one that I gave here? Rules for existing customer private. Rules for existing customer private. Okay. We'll do one thing. We'll go here. I change it. It won't change because it has to go with a combination. But if the default scorecard is changed, then only it will change. But otherwise, you can. Okay, I'll go back here. Okay, this I'll give it here, but I have not calculated here. Okay, I just save it here. Okay, it's automatically saved basically. So when you change that, it automatically saving it. Default one, calculate here, save this. But here it won't change because you have to go to the other transaction to change the rule to private. Okay, let's see the mass data, how it works. Okay, so what is the rule? What is the score here right now? 0. What is the scorecard?
Default.
0, right? Okay, default is 0. Score is 0. Let us execute this and see what happens. Why it is mandatory? Basically, it is not mandatory. Where is it default? This is a default. I'll make it this 2. Wait, remove this and see what happens. Okay, do you see this? This old score is 2, new score is also 0. But ideally, it's supposed to change. Check rule, it also supposed to change. It should change. Credit segment. It doesn't have a credit segment. Prompt to. It should work. It should work. This, let's see. The DP2, right? No, this is the one that will do it. Okay, this is supposed to change. No, I think the settings are a little different, the formulas, but basically what happens is it won't update. It won't update here. It's normally will be the 0. So when we change that, when you change your business part, when you change the rule from here, it should update that simulation run. 1015 credit limit roles, private, embedded SAP extension. Interesting. The ECC works differently and S4 works differently, and S4 also different versions work differently. Or let us say what it happens. Okay. So basically what it does is it will update your score and credit limit with a new one. And it also automatically change the credit score here automatically. When you change the score as well. When you change the private limit, automatically it should also update from that mass update. Okay. But anyway, they made a rule in the functions and parameters. Using that, they made in a formula builder to change it automatically. We will see that in our formula builder. Okay. Otherwise, here it will change all those mass changes that you can do it. Credit limit, score, external credit information as well. In case, yeah. So this is a critical. Do you remember that I was talking about this interface where I have that one? Yeah, these external rating interfaces. When the data has to come and update the business partner with the credit rating, this is the transaction that you will be using it. Okay. So you use the rules is an external interfaces. Okay. Use the rule and asking for that for this business partner, you'll have a rating procedure. We use the DNB, right? So DNB, you should have a question here. And if you don't ask, I will ask that question, what the question should have been here. Okay. So if I execute, so what system will do? What it will do? I have anyway maintained it, right? So why you need to do this one? So basically exactly. It's a good point. Yes. So when you have an external rating, then you have a server and you also maintain some of the extractions and from the source. Then that file, if it is in a file upload, okay, there are two different ways of doing it. When it's a file upload, you will give the extract name and it will go and get the data from your DNB and it update the relevant fields of the DNB rating. So where you have the DNB rating here, you have the DNB rating here. Okay, so it will change the rating. It is right now 1AA. If the customer performance is good, if either Moody or the DNB they give the good rating, then what system will do is based on this transaction, it will go and update the business partners master data. This is the rate. So when the rating is changed, then what happens is you have an option here. One tab will come in case if it is to be done through interface. You need to apply a OSS node. When you click on one of them and click that, system will take this particular rating procedure and it goes to your specific business partner. You can also call from here. Whereas the transaction that we have seen here is what? What is this? Mass. Mass means for the range of business partners. So you can do this one through your interface. In case if you want to do it for individual business partner, you can come and do it here. You will have in a tab when you have apply an OSS nodes for that. Then you will be able to open a link. That link will go to your SAP Fieri app, or you can link it to your web services. From web services, it goes to your Dun & Bradstreet. It get the data, it will come back through your web services, it will update it. But SAP has a new functionality that they came up, whether it is ECC6 or S4HANA, SAP Cloud Credit Portal. Okay, SAP Cloud Credit integration, that basically using that portal, you can integrate with your external credit rating agencies. There's a real time for which business partner you want to update, that you can do it. Okay, guys. So that is all about your mass transactions, because external interfaces are not available for the training system. So you should not do that one. You can't expect more on that. Once you get it, if you want to update it using this particular transaction, you can update it. Updating entries of external credit information too, you can monitor using this, that you can also maintain it. It's a DNB identification number. This is a BUP001, the maximum number of business partners. So this is an ID number. We will have an IDs that's maintained in the system. So what are the various identification number? For us, Dun & Bradstreet, if you want only for this business partner, you can maintain this particular number. Example, restrict the selection number. Okay, why it shows like this? Shit, can you hear me?
Yes, we can.
Why it has gone? It got disconnected. Connecting to desktop. Okay, I got it back. Okay, so it's validating these extracts, but it's not maintained. But otherwise, what it does is, anyway, it will not work, to be honest. Okay, so because it upload the entries of the external credit information and update it in the business partners, because you have two options on the real time. The second one is file upload. So this you can use it for updating it from DNB. Here you will have a file-based interface, right? So either you can do integration or you can do the file-based interface. So when you get the data and update using a file-based interface, then you will use this transaction. It got disconnected for a minute. That's the reason. That's anyway. So this is what you use it for, these two. Okay. So UPDM, you can monitor, and you can mass update, assign SAP credit management role to business partner. Okay. Okay. So when you create a business partner master data, and for a specific business partner, if you want to use this credit segment, credit management, UKM00 role, you'll do that one. Okay, so normally you may not need this one because you have, somebody asked the question, right? What is that BP question that you asked for? So we ask it, somebody asked it. What is the question? You want to see the BP something, right? BP setup or something you ask. I don't remember the exact question. Okay, so this is what we do when you have a business partner, mass updation of the business partners. Okay, so you will use this and you will assign the business partner here, but you really don't have to do this one, because whenever you create a business partner, there is a program called master data synchronization. So if you're an EC6 version, particularly if you go S4HANA, for sure you'll be using a business partner. But if you're an ECC6 and if you don't have a business partner concept and you want to implement an FSCM, then all your customers, existing customers, needs to be converted into business partner. Okay, for that your existing customers will work as is without any problem. But when you run a master data synchronization of conversion of your customer and vendors, CIB, there's a program called CIB, converting vendors and customers into business partner, that will take care of extending a business partner to UKM00. So this one, normally you don't need it. However, it is so possible, initially a business partner is created by a master data team. You have multiple teams, right? The master data team. And they will wait for the credit manager to give all the required information to convert into business partners, extending to UKM00 credit segment. For that, you will be using this particular transaction. And here, if you want to upload that also, you can do it. Somebody asked, can we upload it? You can do it, but it's not necessary because assigning a UKM role can be taken by at the time of creating the master data. But if you still need for a few business partners that you have to do, you can use this one master functionality. Now, you see the list display. UKM mass display credit profile and the credit segment, credit limit utilization, payment behavior summary, credit exposure, master data list, and you have additional information of credit information, credit management, reconciliation of credit exposure, login credit management, display. These are all basically for display transactions. Okay, so if you want to see the credit profile of the business partner, they all look same, the transaction looks same, but remember, it's all a different way of viewing them and giving an access. You see this? This is your partner, credit segment rules, credit score, credit limit, risk class. All this data, you can generate a report and send it for someone in case if you want to check it. Why do you do this one? Any idea? Guess, at least guess. On a daily basis, any new credit profiles are created by master data team, or sometimes this activity will be outsourced. So the outsourced team, whatever they created every day, and they'll be sitting remotely, the managers must be sitting somewhere in another country. They need a report. So what are the business partners that we have updated the credit profile? We need that information. So then you generate the remote. So similarly for your credit segment data as well. It's the same thing. It's self-explanatory. I suggest when you do your exercise, all this, you can keep wide open. Okay, you can keep wide open of all your parameters in the transaction and execute and see them. Don't just execute and leave it. Execute and see them what it is printing, because during your support work and also your implementation, you understand that if the business say, I need a report. So report doesn't mean you start developing it. You can look into it. These are the fields that are available. For this credit segment in the currency right now, this business partner have this rule. And this calculator score is in 100 and limit is in 1000. This is the risk class. This is your risk category. And you see this is valid from so-and-so, and it got lost changed by so-and-so. And it comes under the name of the business area of the credit segment. And the description of the business partner is so-and-so. Who manage it? By so-and-so manager. Who is the one that everything, like, you will have to add more field that you can add it. When you keep getting more and more information, it will be more and more interesting. Okay, so credit limit utilization, this really is another interesting. I'll run it my own app, and you will see these, what we call the green light, traffic light, which business partner you need to focus on. Those things, everything is available here.
Sorry, Raghav, we cannot check the changes in the master BP, right? In the BP transaction, whatever changes.
You can. Oh, yeah, that's a good point. We'll come over there. Okay, you see this traffic light that I was talking before executing the transaction. It's a business partner for a given credit segment in this currency. It is your credit exposure. What is the credit exposure we talked about, right? Open invoices, open credits, and open deliveries. This is the sum of all that. And the credit limit we set up is 0. There's no credit limit. But this guy has taken a lot of material. How he has done? In the test system, somebody just allowed, okay, let him do all the orders. Don't do it any block. Ordered it. Then what system shows? You have exceeded your credit limit with this much utilization. This is the export amount, and this is credit limit exceeded. This is an interesting report. Other will see it. So in the bottom, you can see for accurate information. So credit exposure is 260, and credit limit is 10,000. The utilization is 2.6 only. Okay, so exposure amount is a negative. It means this business partner, he can draw another 9,739 of worth of material services. He is a green, no risk here. Okay, so the risk class is here C. So these type of reports also business users will be interested. We'll take this business partner. This year is the credit exposure is this. Utilization is this. If you see the credit exposure, it said these are open invoices this much amount, open delivery is this much amount, put together 260.44, then this is the 260.44. Since the credit limit is at 10,000, the utilization is only 2.6%. Okay, so having your credit exposure, this credit manager, whoever is owning this particular business partner, she doesn't need to go and see and check what are the open invoices by going into a BL5N. Delivery values also don't have to see it. Everything is available here. If you double click here, if they have access, then it will take you to the invoices, what invoices it is. Okay, so that's all that what I mean to say is it will get any information from here. They don't have to go anywhere because that is the advantage of an integrated SAP system, as the integrated AR with the FSCM credit management. Okay, so this is relating to your credit limit. This is really important. This one and the score both are really important reports. Trust me, guys, you love it when you start working on it. The system will everything automatically calculates and says that this is the exposure, there is a credit limit defined, and this is a percentage of utilization. This much exposure is left for the business partner to use the credit limit. Any questions here so far? You have that UKM vector also. Yes, these transactions are available. So when you do this particular transaction, we don't have any transaction entered in our business partner. So we'll do a test run. We'll see what it says. Okay. So it updates the payment behavior of these very business partners when you run the payment behavior data. So whatever you see there, like your day sales outstanding without cash discount, and it also have a maximum sales, highest to sales, and all that stuff. When it updates it, it will keep track of this information here. So the DSO, day sales outstanding, is this much. This is the timestamp. This is the amount, what the last payment was done. And here you see this, the amount in currency, dunning levels, how many dunning levels have been done for these business partners. It will give a report here. I mean, it will display you. And if you uncheck it, and if you uncheck the test run, if you execute it, then it will update those business partners. Let's see any business partner. These are all test system partners, right? Let us see. Okay, let's take this business partner. Oh, there are no areas. Okay, there are no areas, so it won't update. Okay, let's see if any of the business partner it does. It normally should update here, actually. Which credit segment? This one? This is also 1000, right? Oh, this one is 2012. 2025, what is the date? 2017 means a very old data. It's SAP provided data. I don't think that you'll be able to see them. This is, I don't think that really it helps unless you post it. But yeah, create exposure and you see these values. But only thing is, these are all pretty old data, 2017. So maybe SAP provided part of their delivery in the system. 23/10/2017. Anything in 2024? Okay. But here you don't have seen this one. Let me check. You don't have an ID, so it means it won't do it, but still check it. Let us check that one. Okay, let us do one thing. Vector, we executed, right? UKM vector. This is the transaction. Yeah, you should update it. Not sure why it didn't update or delete payment behavior somewhere. It's basically delete. Okay, that's the reason, sir. So my mistake. Actually, it's supposed to, they changed the transaction in S4. It is basically to delete, but the actual one is, this is the one that it's going to update. Okay, they changed it. This is an old transaction, UKM vector to UKM transfer vector update. That's the reason we don't see it. Let us try if it can allow company code 710. This one is what company code they're using into. System is so fast. Shit, there are no records at all. Okay, so basically see the values which you see here in the payment behavior. The payment behavior, you will see all the credit related data that is being updated. It will show under payment behavior summary using this particular transaction. Okay, so here you'll see this, all the key figures. There are different company codes. Okay, this is the one that you will do it, but it is a scheduled job. You will not be doing anything manually. But if anybody asks, like, how that particular this field get updated, payment behavior key field, KPI behavior, you can say that there's a standard transaction. Using the standard transaction, we'll be able to build that one. I gave it wide open, but unfortunately it's an only data. It's not allowing because your FSCM is an integrated system, right? You need to have the settings in SD side and external rating, some of the AR data, then only you will be some of the transaction, not all the transactions. Okay, some of the transactions you can still see it. Do you remember we see this one, UKM underscore case? Did you do it or not? I'm talking about UKM underscore, not DCDS. Okay, so what is this transaction did? Don't you remember, guys? We did it in the very beginning.
Yes, case.
Yeah, yes, case. We have seen this, right? So whatever you see here, it is the same thing that we have seen earlier. It's the same transaction that you can see here as case. Okay, so what are the S case transactions, all the decisions, it will show you as a report. Okay, if it is approved, that will come here. So based on that, if you want to, again, you see anything is rejected or to be rejected, and what are the content changes, release those things, you can see if you have in a workflow. It is when you have your workflow is built up. Okay, so they all go together. But ours was not really approved by the user that we created. If the workflow is there, that it will be used here. We are so far completed the concepts, and we are so far completing our transactions, and we will see the configuration. Okay, so this is your external integration credit rating that we will do it in another step. But any changes that you will do, that it will be able to give the change setting. So asynchronous reliability is updating the XI images for updating of your exposure. When you have your XI system, your data has to come from your SD module. Open orders will come from where? Open deliveries come from where? It has to come from your SD. So in case if you want to have your XI used, XI or PI used, this particular field will be used, but I don't think that you need it in case of S4. In S4, they are tightly integrated. So that's the reason you may not see it. But in case if you have to have an XI messages to be displayed when the data exchanged between these two systems, you'll be able to check here. Otherwise, your XIs are not mapped here. So this one we have seen. This one is for your payment behavior, and this one is for your KPIs, key performance indicator, that you have seen for the customer. Where is the KPI? This is, you'll see here. Okay, now a quick question. Where do you maintain your credit score? Under which tab? This is
Credit profile.
Yeah, but that's what I was expecting. Nobody answered it. Okay. Now, where do you maintain your credit limit?
Credit segment data. Under credit segment data, I think so. Yeah.
Can we maintain the credit limit by credit segment?
Sorry?
Can we maintain a credit limit by credit segment? This is a question that was asked by someone. I am asking you the group now.
Yes, we can, because even you mentioned that we can see that it will in different currencies when we are changing the credit segments.
Yeah, this is for euro. Earlier one was in USD. Okay, you can maintain. So utilization, what is the utilization stands for?
Percentage that has been used for sales orders or billing.
Yeah, and credit exposure.
How much open items are delivered?
Open, right? That I'm using that word open. Yes, your open orders, open billing, and open deliveries. And open invoices. Okay, so this will come from UKM update vector. That's the transaction it will do. The payment KPI payment behavior, you have separate transaction to update these two. When you execute it, automatically come and update it. Okay, so you will see three tabs: credit limit and control, payment behavior key figures, KPI payment behaviors under credit segment. Okay, so general data, what it will have a rules, score, risk lat, check rules, and credit group. We will talk about the difference between these rules and check rules. This is the checking of any credit. This rule is how your customers are scored. Okay, these are score rules. These are the credit check rules. So some of the credit check rules we discussed, and we will see that in the configuration. Okay, so under credit profile, you maintain this data. And the rating pressures also you will maintain here only. And we maintain the rating pressure configuration. That's where you see this one. Okay, we maintain, right? DNB, we maintain it. Existing, we have taken the Moody. Okay, and this is your information category. What type of information you want to maintain. So the remaining all are common. And if you are integrating with your external credit management, you need to maintain for sure what? You have to maintain an identification number. Okay, you have to maintain the BUP001 identification number you need to maintain. This number will be used to extract the credit rating information from your credit rating companies. Okay, when you go this one, this ID number. It is not mapped here in the test system, but this ID number will be used when it goes to our external credit rating. Any questions for guys?
Earlier I asked you where we check the BP changes in the BP.
Oh yeah, so here you see extracts, change history, this partner, this field, status of change.
One, two, yeah.
It will ask you wherever changes, what are the changes you have. You see this changed by so-and-so, field name, new created, and what is the old. If it is there, it will tell you. It is not changed, nothing is changed here because it was created by me. We just created no old value. On what? This one is on address only, okay? If you see this extras, you will go here on this business partner, you have all these fields. But the one which I checked is only address. If you see this score validity calculated, see what it happens. You see this? I change it back to 100, 100 to 0, 0 to error, all these things that I changed it. This is 26.3, right? 26.3.
Right.
Okay. Yeah, this is changed by this user. It is my user ID. What field I changed it? I changed the score. Technical name field, this is the technical name field. What is the new value? What is the old value? New value is 100. Then I change it to 0 on so-and-so date and so-and-so time. Then again, I put it back 100 to, so this is an old value. I put it 100. Then I change it to 0. Then again, from 100 to 0. You see this one, right? This one. This is a new value. When I change it to 0, it will become an old. Then I change it again 100, again 100. So these are all the values, new values, old values, you can see it. They improved a lot in S4 here. When it was an ECC business partner, you were able to see only few fields at address level. But here you can see everything in S4 and the latest version. In ECC, you don't have this much of visibility to see all the changes of your business partner. It was honestly like first few fields on the general data level. It won't available anything more than that you see it. But now they improved a lot. It's a good. Okay. Any other question? This is at business partner level here. Actually, there is at a credit segment level or the credit case level also you have an option to make attachments. Maybe that require an archiving server. Okay. So that's where if it is in the real time, you can see for sure. There will be option to attach your document credit session case type. I still could not find it. It's available in standard dispute case system also. It should be available. Why it's not available? In Fury, you see on the right side attachments. But here, I don't see an attachment. I don't know why GUI it's not available attachment. User specific. Display entries, node models. This one is linked object. Yeah, but for sure it's available. If somebody asks any attachment option, for sure there is an option for attachment. Okay. Yeah. So anything else for? Otherwise, I want to close it. And guys, please check. You need to attend Friday night. Friday night means your Saturday morning. What date is Friday? Is 28. Okay, it's Wednesday for you, right? And 27, 28 evening for me means 29 morning for you. Yeah. So please check the expectation and plan accordingly. Because I need to complete this by 17th because I have still complete the credit management, collections dispute, and treasury part. What happened was it was supposed to start somewhere earlier, okay, but it didn't happen. It got delayed for more than 10 days. So let's plan the weekend as well. And if you have to talk to your managers and supervisors, please do so.
All right, let's test your knowledge. Here's a question for you. Which of the following is not a subcomponent of SAP S4HANA TRM? Option A, cash and liquidity management. Option B, treasury and risk management. Option C, in-house cash. Option D, procurement management. Take a moment to think, and when you're ready, choose the correct option. Remember, each choice holds a key to unlocking the answer. Good luck. Type the correct answer in the comment section. Hey there, excited about mastering financial supply chain management? Our SAP S4HANA FSCM TRM course is here to guide you. You can learn at your own pace, right here on our platform. In this course, you'll dive deep into SAP S4HANA FSCM TRM. It's like a toolkit for managing supplies, ensuring we have what we need where we need it. Covering everything from the basics to advanced strategies, our course is designed by experts who really know their stuff. Your instructors are seasoned pros, ready to support you every step of the way and answer any questions you might have. And guess what? Our students absolutely love this course. Just like you, they've found it incredibly valuable. The best part? It's budget-friendly. This amazing opportunity to level up your skills won't cost you an arm and a leg. Ready to become a SAP S4HANA FSCM TRM whiz? Enroll now. For more details, visit ZaranTech's website.
We have seen pretty much all the transactions on easy access for FSCM credit management. Okay, so we've seen the current settings as well and integration of credit management with the FIAR. Okay, now let us see some of them in the SPR. So the path is, you see financial supply chain management, and you see this credit management and the credit risk management monitoring, master data, business partner, credit limit check, document credit decision, credit exposure update, process enhancements. And you see the below that in the integration with the accounts receivable, accounting, and sales and distribution. Okay, so we'll see what will be there in the master data. We say create credit segments, define rating procedures, define customer credit group, maintain formulas, define formulas, create rule for scoring and credit limit calculation, create risk classes, define attributes, display, integration of external credit rating agencies. Let me open master data as well. You see my both SAP screens, right?
Yes.
Okay. So here we'll go one by one, and you see how the relation happens here. Okay. So here carry out yearly master data distribution for several FI and SD systems, perform yearly master data distribution for several FI systems, perform configuring SAP PA NetWeaver, perform configuration for connections of UKMS to SAP Network PA, configure SAP credit management message UKMS, but you don't see anything, you see all the documentation here. Okay, so this FSCM credit management or collections management and dispute management, what SAP did, they gave a placeholder, and within the placeholder, it gave a lot of options to plug in and activations. Using those activations and plugins, you can use the same functionality for ECC, S4HANA for different versions, for integrating with the heterogeneous systems, that is the non-SAP related, and you can also do the country-specific settings. Client industry-specific settings. Industry-specific settings means like if you have a utility company, okay, telecommunication companies, and you have oil and gas. There are, IS retail. These are industry-specific solutions. This FSCM really useful, the credit collection and dispute, particularly where the clients will have huge customer database, particularly from the customer standpoint, right? So if you have 100 customers, 200 customers, or 500 customers, or 1,000 customers, you really don't need FSCM. It can be handled by 1 or 2 people from the business side, or they can offshore it. They can have shared services. They can do it. You may say, will there be any 500, 600,000 customers in any client? It is possible, particularly if you have real estate, that is a construction company, you will not have huge guys. Okay. So you will have a less. Every house owner is not necessarily to become as any customer. And they're all one-time customers. Suppose you are a real estate agent and you're not real estate, you're a construction company. If you construct a community, the houses in community or multi-story building or office, how many customers you have? Once they purchase it, that's it. They don't come again and buy again and again from you. Where how many customers you'll have? Like thousands of customers, but not like hundreds or millions of customers. But on the other side, if you go for utility company means a power distribution companies. Every house is in a customer. Every office is in a customer. Even government is also a customer because government also buy power for streets, right? They need a substation, everything. Similarly, for phone and internet, every individual is in a customer. So obviously, you'll have a huge customer base. When you have a huge customer base, each category and each segment of people will have, there will be several segments, and each segment will have in a different sort of your pricing procedures, different sort of plan, maybe mobile plan or phone connectivity plan, internet plans. It will be different. Okay. Similarly, for utility also, is it commercial or residential? Okay. So again, you will have within the residential, it's a multi-storied or owned or leased. And like that, there will be different segment will be there. Each segment will have a different plan, and your strategy will be different when you have a huge customer base. If you're looking for a company, day-to-day retail company also, when you have thousands of customers, then you need to track all these customers, whether they paid on time, whether not paid, then how to get the money. To improve our business, if we give the credit, then customers will come and buy the more material because you gave the purchasing capacity. So keeping in view that what SAP did, okay, so I cannot give a common solution for every business. Okay, what I'll do, I will give you the basic structure and you keep enhancing yourself whatever the way you want. That's the reason SAP provided enhancement opportunity for every functionality within the FSCM. We will see some of them. Okay, so these particular steps is relating to your master data distribution for several FI systems. How you need to integrate with multiple systems within finance. Okay, so you will have a lot of reading here, the sending systems and receiving system, and what BADI has to be used, what BAPIs have to be used. All these things are given when you have when you do implementation. These things will normally taken care by your basis guys, and all that what to do is you just have to see that what are the various models are available to have in a distribution model, master data synchronization. Okay, so to create a distribution model, what you have to do, and who is the sending system, who is the receiving system. So all these things that you'll be able to explain to your basis guys, like a maintain distribution model for IDOCs. And if you have any condition contract management, so condition contract management normally comes when you have a TPM. TPM is trade promotion management. It's a separate module when you have the TPM. So you have a lot of condition contracts that will be used for your sales and distribution as well as a trade promotions. Okay. Similarly, you will have a few more reading that is perform configuration for SAP NetWeaver. If you have PI to integrate the systems, you will have a different inbound and outbound messages that you need to do. It depends upon your system. A system means your versions. If you are using your NetWeaver 7, NetWeaver 7.11, and if you are using your other systems, non-SAP systems, how you ought to do, what are the classes that you need to do. These things are explained here. And you don't normally do, being a functional guy, you may not require to go through everything. But if you know that for something you need reading to help your basis guys, then you will take this one. Even ABAP guys also sometimes they need this type of settings, where the settings how they have to do is. Okay, so if you are using an IDOC, if you have to use different messages, then you can see that here, this is for address, this is for address to this address, this is the DebMOS. I think this is relating to master data of IDOC message type. Okay, so similarly, you have an interfaces for several address mapping. So this is FSCM2 or is means DebMOS. This is the same thing for your IDOC as well. So this is a self-reading. You don't have to see anything here, to be honest. but you'll see the settings in the next one. Perform configuration for connection of UKM to SAP NetWeaver PI. If it is in ECC 6 or ECC 5, ECC 6, then you may need to have a PI server to connect with your FSCM using UKMS. Okay, so if you are using an IDOC, you can use an IDOC. UKMS connection to SAP NetWeaver, this is the PI. PI stands for process integration. If anybody say XI, that is an older version of a PI. What is XI and PI? If somebody asks, what do you say? XI means exchange interface, PI means process integration. Why do they use them? They are used as a middlewares. Okay, so what middleware do? Middleware normally works as a broker. Okay, it will receive the data, it will send the data, and it will hold in between, where if you require to map different systems with the different parameters, whether you're doing SFTP, whether you're reading an IDOC, and you hold it, and you can, from there, you trigger to run it as a batch jobs. So there's a separate technology. Okay, we, FICO or FSCM consultant would not be doing it. It's more of your ABAP and basis is a more of technical to interface and integrate with the different systems. So as we talked earlier, between AR, SD, FI. If you have to do triangular integration, but you will make a several calls means from SD to FSCM, from FSCM to FI, you have to make a frequent call. Per click, per customer, it has to be real-time integration. Okay, if it is within SAP. If it is your third-party systems, then you have to see that whether you want to make a real-time interface or whether you want to batch mode. Those things will be discussed in this master data distribution between the systems. Okay, so you will have a UKMS is what? UKMS is nothing but for credit management. FSCM credit management use the messages UKMS, and UKM00 is the role that we will have. Okay, next, credit limit request. Do you remember we did the case type? Yesterday we did it for what? Yesterday we did it for creating a request for enhancement, a request for new credit. This is the one. UKM case. Okay, so when you have to have in a profile, you use this create profile for case search. Okay, where did we do the case search? This is the one. This is the search one. Okay, so if you want to make any changes here, we will use this functionality, case search functionality. Okay, so the profiles, you need to create a profile, and each profile you will have a different type of field that what you want to make. You see this one, external key, processor, and FCR partner segment created by created time, and start order number, category, priority. You see this. Okay, so here whatever is optional field that you will select it as an optional. On the screen design, you want to make it left to right, right to left, and in the sequence you see the rows and columns, how you want to define, you can do that one. Okay, external key, processor, business partner, segment, created by, created time, and start. This is an order number. Okay, created on category, you have this category, and priority title. Okay, so if you need more fields, you can add it, but every field may or may not be available. But before you promise something to the customer said that, hey, I want to add this here based on a reference number. You see which year can I bring it here. Before you promise something, you first have to see that whether it comes here or not. The search is different and display is different. But this, for now, this one which is relating to the search. So now what are the fields that are allowed to modifiable? So if you want to pick any of the field modifiable, you take the case attributes, and within the case attributes, you can define, yes, this field is modifiable. Okay, so here if I search it, what it do here? If you want to modify any field, we will use this functionality. Okay, it will allow, we will see those when we go to the dispute management. There's some default settings are there, but any case type that you see, the screen will be like that. Even if you go to UDM_dispute case type, if you define, it will also come like this only, because the case type, this all comes from RMS ID, record model ID. The design will come over here. Okay, so this is relating to your case search. What selection field you want to do, what field you want to modifiable. Okay, since nothing is here in the modifiable, then you may not be able to modify any of this field. So normally what happens is, in general, the ask come from your client's case, I want to take these three fields and I want to change them. I want to change this field. Can I do it? Okay. So it is a doable, but you need to do that configuration, and we have to see what fields are allowed to change, what fields are not allowed to change. Remember, guys, there are certain fields that you're not supposed to change for audit purpose. Okay. So those type of things, you don't allow them to make changes. Tell your users, okay, if you're allowed to change this, then you will have an audit issues. In spite of that, they want to change it, then they can take the approval and then do it. Otherwise, you don't have to do that.
TKD is UKM SS? UKM SS?
Where are you talking about? Where is UKM SS?
And just now your case search, that's what you are, the particular transaction you are showing. What is the T code for this? UKM SS?
Oh, case type you're talking about this one?
Yes.
This one?
Yes, this
UKM,
one.
this is the UKM underscore case.
Okay, thank you.
Yeah, it's a UKM underscore case. You'll see that one. And this one is related to your config settings. So the relevant table here is UKM CST RR01. That's where it will hold all this case related. You see here, case search for collection cases, documented credit decision, case search for FICE, and case search for dispute management. So you'll see all this here, but in these cases where the credit management, we will be taking only about this one. But when you go to the dispute case, we will see those dispute cases. If we are using a FICA contract accounting, then you will be using this one. Okay. So document credit decision, as I mentioned, you have a request you will make to we will make a request to your managers that you want to have the credit limit to be increased. At the time, you will use this particular profile. Okay. Anything that you want to change here, that you will be using this particular credit document decision. Okay. So what are the selection field that you want to take it? Key processor responsible partner segment, key processor partner. You will see this one, the partner segment, these things, what you want to make it drop down, what you want to make it as a mandatory field, those control will happen here. Okay. If you don't see this configuration, very first person when you show demo to your business, if your clients, hey, this is not available, this is not available, no, this is what I want, they want to move this and I want to move this down, and this I don't want to create anyone without filling this. If it comes such type of things, then you may not be able to answer them unless you know the screen. You need to see everything may not be available to make it, but we have to do little research, and you say that here it is a doable or not. What case attribute you want to do? These case attributes are predefined. If you want to add case attributes, you have to go to this table and add the case attributes. For that, you would not be doing it. You are taking help of your developer. You need to know the table name, attribute name, and the field label. Those things that you'll be able to bring it here. If it is not available, don't promise your client. Check with the developer before you do that one. Okay. So that's the reason SAP provided conveniently. So what are the fields? What are the attributes and the selection option? These things will help you for business users to operate this credit request and decision. Yes. So this one we talked about, right? When you have this one credit limit. Okay. Open credit amount, check your credit value, and then how much they want additionally, whether you have to give it or not, that you can send it to your manager for approval. Okay. So this is all about your case profile. Okay. So you see this different document class for attachment to credit request. Okay. This is what I was asking. What are the various documents that you're allowed to give? You are allowed on your case search that are in the document credit decision. What are the allowed documents there for attachments? When you are here, as I told you, you are allowed to maintain attachments here. Okay, here it's not there, but you will have an attachments. When you have an attachments, then you need to tell the system what type of documents that you really want to use an attachment. That will go there. That will be coming from here. You will allow the system for this particular document class is allowed. If I say Word document, then you will be able to give that Word document. So some people said that no, we want to have pictures. We don't want to allow Word documents. Then you need to come and allow what document that you want to make an attachments. Okay, guys. So this is where you will specify BMP table you want, JPEG you want, or you want to have any Excel or GIF. Unless you maintain your system will not allow there. So that you can do it. Then if you see the below baddies, reading of a credit limit request, synchronous changes to a credit limit request, synchronous creation of a credit limit request, check of the data of a credit limit request, search for credit limit request, and you'll see all the asynchronous confirmation, deletion, changes, creation. These are the enhancement available on the credit limit request. Where is the credit limit request? This is what you're seeing, right? So credit limit request here. So if you want to make any changes, you need to use this baddies. Okay. And it is all your ABAP work. And if you ask me, can you tell me each one of these, why do you use? It all depends upon the nature of business and the client request. Okay. As I mentioned here, some of these, if they want to add here, and some of them they want to add here. And if they want to use any other functionality, it comes out peculiar things. Different people ask different things. And on FSCM related particularly, SAP keep coming with the various versions and upgrades. If you make all the changes as a business required, either they will become a redundant or they will become as in a complex to maintain when you go for upgrade, because that's my experience. Particularly when I was in one of the Europe client, they were on initial version of FSCM. So business has a lot of requests and they collected every information and they started building. And the building of all the solution, custom solution took 9 months to 1 year. It's a big team, 20 members team. But SAP came up with a new version and they didn't realize that whatever the changes they had and whatever the changes they added, they are available in SAP subsequent version. What do you do? Subsequent version means you have to upgrade it. If you don't go upgrade, then some point of time SAP says that I don't allow you to maintain your older version. You have to go for upgrade. But the moment you will go upgrade, whatever changes you did, it becomes a redundant and based. Again, you need to coordinate when you have to correlate with what business is doing it, what SAP new version is coming up, and then in between you'll end up in spending unnecessarily time and money. That's the reason. Don't do any complex development within the standard process unless otherwise it is badly needed. And on this case, on the case limit request, on the limit request, there will be so many requirement comes, but you have to talk to your developers before you make any changes here. Now, the next one is web interface for credit limit request. So here also you have a lot of settings like defining status changes. You want to change the status of your case type. Approved, rejected, reopen. So there will be, as I mentioned, there will be so many enhancements, adding a credit request, a limit request, and changes the credit limit request and the data, the credit limit check. So you need your credit limit request. So if you need any baddies, you can just talk to your developer what these baddies will do, how it can help, and you can coordinate with them for that. You need to go through the documentation. Okay. So it could be little complex to explain, and each one, if you start explaining it, will land up the business requirements, how I did in my business requirement gathering and how we correlated it. It's so complex at this stage if you go these baddies, but it is not necessary that every client and every business need these changes. Okay, now let's move to credit limit request. Credit limit check. Okay, let me close this. I'm trying to cover as much as I'm not skipping. The reason is at least you will have some fair idea when you go to either any support project documentation at the same time and an implementation. There will so many things will come and you may get a kind of a gray area if you don't know that there are some settings within SAP where your IT team, they might have incorporated these changes. And incorporating these changes referring to these particular settings means you can think that, oh, this is what it is. This is what it is. These are all the prerequisite, but it is a techno-functional related, and you really don't have to worry to understand the functionality of FSCM credit management. So this enterprise services, a web interface of credit limit request. Now, define blocking reason. Okay, so what are the various reasons that this web version? Yeah. So what are the various reason that you will be doing your locks. Sorry guys. Okay, what are the various blocking reasons that you do it? Credit limit exceeded, no insurance available, fraud possible, insufficient credit worthiness, credit limit to be approved. So here we have seen in one of the block reasons, right? These are all new. This is a placeholder where you can also define your own reason codes. Whenever a business partner is blocked, when a business partner is blocked, there must be a reason why you're blocking at credit management level. Those reasons you can mention here. Okay. So if a credit limit is exceeded, then what happens? What is in the hands of a credit manager hand? Example, a sales order is created, a sales order is blocked, and by virtue of nature of business, whenever a sales order is blocked, you don't want the analyst to come every time to you to release the block. So then what you do, you will allow them. Okay, if it is up to $8,000 or $10,000, the sales analyst or the supervisor of the sales analyst, he can unblock it. But what happens is there are some customers, the credit limit is exceeded, and you don't want your sales analyst or sales analyst supervisor who take the sales order, you don't want to give them an access even to unblock it. Then what you do, being a credit manager, at centrally you block your business partner. And if you need a report why it is blocked, then you can use this particular functionality. It is easily definable. In case if you want to define your own reason, you can define all those reasons and you can maintain here when it comes to credit management as a credit segment level. Okay, the segment level. Okay, so you have, this is quite common, these three. Sometimes they also provide an insurance. They have to have a fraud is possible, then insufficient credit worthiness. These three are pretty much possible. So these are credit limit to be approved, changed, rejected. They will use this one when they are for new customers. For the new customer or new business partner, when it is created and the required information is available, but still it is not approved. Till that time, you want to block this particular business partner, you can use any of these reason code. Okay. Invalid score we talked about, right? So those invalid scores, if it is there, then you want to identify, you can use it. And now the question is, why it is so particular? Why do you need these many reason codes? Because when you have a business partner which is extended to multiple company codes and multiple credit controlling area with the multiple segments, a business partner is managed by a centralized credit team. These blocking will really help them. Okay, so that's the reason. In case if you want to block your any of the business partner, you can use the block reason. Okay, by giving this one is not sufficient. You also need to do this checkbox. Special attention. What is this special attention? If any of the business partner require a special attention in terms of giving in a treatment, or both positively and negatively, if you want to give in a treatment, is a premium customer, they are going to come up with a huge orders and we are going to have a big business. We have a separate master agreement and master contract. Then you put it as a special attention and you will put a resubmission date. So this business partner will be frequently visited under this credit segment if you give the special attention and the resubmission on. It is applicable, as I mentioned, both positively and negatively. Negatively means if the business partner is not making a payment properly and he is having a hard time to make an invoices and the credit history is also not good, and whatever the credit limit we provided under this segment, if it is to be frequently visited to reduce it or to put a stringent rule, then you will have a special attention and you whatever the resubmission on date, you can use it frequently to visit and check it. Okay, so that is what we do for defining blocking reason. Define info categories. Okay, so this one we have seen as collateral, negative, and check exception, credit insurance, and additional adjustment. So in case if you want to define any additional info category for this business partner centrally, then you can use this functionality. You see this when you have collateral, negative, check exception, credit insurance, additional adjustments, you can use it. It is possible that business will come because different country will have a different requirement to maintain additional information of each business partner at the time of setting up of a business relationship. Your sales guys who are there in the respective country and the respective region, they will give that information. And if you have to add, you can add an additional info category, and accordingly, you can update those fields. If it is taken information type that it's ask you insurance of country risk, insurance of loss of risk. Similarly, if you take your additional collaterals are available, for how much amount the collateral is available is for property, mortgage, or cession assignment of security. These are all part of information available in the collateral, and your legal team will tell what field is to be captured in case if it is really there. Okay, so checking exception, what are the additional steps that you want to do? So those things, info categories, if you require, you can use it. But some clients, they don't use it. Some clients, they use it very extensively, particularly if this business partner is extended to multiple geo locations, that is the regions. Field group, define field group for parameters. Okay. So in case if you have a field group that you want to maintain, like adjustment, horizon, dunning level, DSO, day sales outstanding, credit insurance, oldest open item, those if you reek in the fields and field group, you can add that, but it's already available in the standard. If you want to add, you can add under this particular group. Define checking roles. Okay, this is really interesting and important because you want to do rules how your business partner sales orders have to be blocked. I gave some of them an example earlier, but these are the steps that you can define. Statistic check for credit exposure, check for maximum document value, check for maximum dunning level, check for age of oldest open item, check for payment behavior index, check for open due items. So can anybody guess what these steps are for? Guess, there's nothing wrong in it.
Defining the rules, how the credit limit would be checked with the static value and a differential or the credit exposure. Are you defining the rules for that?
No.
It is under credit segment, whereas an credit exposure gets updated based on the setting. Is it so?
No.
All right. And we have to look into this. I was just going by the very English definition. Maybe
there's nothing wrong in guessing it. Okay, credit limit check only statistical. Okay, and you also will have check for maximum document level, check for maximum dunning level, check of age oldest open item, check of payment behavior index, check of overdue items. Where do you do this? For what purpose you do this? Whenever the day, yeah, correct. So when you are doing in a sales order block, these are used how you want and what individual step that you want to perform. Example, check for maximum document value. Every time business partner, they said I need $5,000, $6,000, $6,500 worth of an order. But all of a sudden, he's giving a 50,000, his credit limit is in a 50,000. That is something suspicious. Okay. So you want to take full maximum amount and he may not make a payment. It is possible, not every customer will do it. Okay, so if you want to do that step, similarly, maximum dunning levels. If I already sent 5 reminders, if the customer not paid the amount, even if he has a credit limit, no, I want to stop block the order, right? Do you think that situation happens? Happens. You have in 45 days or 60 days of credit limit. 60 days of payment terms, 40 days or 60 days of payment terms. If you're having a 40 days, 60 days of payment terms, whereas customer is keep buying every 10 days and 15 days. They keep buying every 10 days and 15 days. First invoice will become 40 days. Second invoice will be due in another 40 days. Between first invoice and second invoice, there are 10 days. It means for these between 10 days, you can expect money for the previous invoices. So in the cycle, some of the invoices are due and customer didn't pay, even you sent a reminder. Then what we do, even the credit limit exists, I will block the sales order because I already had a dunning level, maximum dunning levels. Normally there will be 3 or 4. Okay. So similarly, check for age of oldest open item. If there are invoices overdue, that's okay. But if an invoice is overdue by 6 months, which is an oldest open item, if the oldest open is late 180 days, then I don't want to do any kind of further business till I get that invoice amount. That is what the block stands for. Whether you strictly keep that block or unblock and process the sales order, that is different. But the meaning here is check of age of oldest open item. There may be invoices that they're paying and receiving it, but there's one invoice, it is old for a long time. The customer is not making a payment. The oldest open item is oldest means how many days? There's a day. Okay. So similarly, check of payment behavior index. How the payment behavior, the index you will have in a calculation for that, how the payment behavior is there. If he's not at all paying on time, he's paying, no doubt, he's paying invoices, but they're not paying on time. Every time you are paying, you are putting in an interest on that for late payment charges. So even that customer is doing it means something wrong in that discipline at the customer level. Check for overdue open items. So open items, what is you have in this one, right? What we call grid. So open grid will be there. That is the buckets. 10 to 20 days overdue, 21 to 30 days overdue, 31 to 40 days overdue. You will have in a kind of in a bucket, aging bucket, what we call. If you're on aging bucket, then you see that overdue open items, how many items are overdue and what are the aging buckets for them. So you will have your own steps, how you want to check. Those things you will define using this check rule. And those check rules will be assigning here. Okay. So that is what you will do it, default check and credit checks. Now, when you do this rule for credit segment, you can define it. Okay. For credit segment, maximum document value, limit payment behavior, currency, and horizon. So like that, what are the settings that you want to do for the credit check rules? Those things will be defined in this configuration. Okay. And for this field number, for this field number, this step, for this field number, this step. Using that, you can tell the system here, this is what I want to maintain the configuration. So here you may certainly need some help of your developer because you may need to do the logical assignment and the sequence. Then you can do that. In fact, even you can do it if little experienced, but otherwise you may need to take help of your developers. Okay. So default all check active, credit limit check only static, credit check only dynamic. So these are the all that you do the check rules here. So I'm showing basically the relation, how these values are coming your configuration. That's all the purpose I'm trying to do. And every step you may not be able to get it at this stage, but certainly when you start looking into, particularly most of the requirements, most of the features are clear during the requirement gathering itself. Whether the functionality works, how it works is a different, but when during the requirement gathering, customers say, I need this, I need this, I need this. Then you may be wondered, do you have that functionality in SAP? Yes, you can see whether it's available or not if you have a fair idea how it works. If they say that, hey, we have some customers, they're very weird customers, and they never worry even if I send the reminders, they make payment according to their own timelines. I say it's a 40 days net, and they always keep paying 60 days. But I want to change that practice from the customer. It allows me to do dunning charges and they pay the dunning charges, but that's not a good practice. I need to talk to the customer. They say, guys, if you make your payment cycle according to our invoice payment terms, it will save your money. You can talk to them. To do that, you need a reminder in your system, right? Then you say that this business partner, this rule will give you an example. Hey, this customer is having this type of payment behavior, and I may need to talk to them. Okay, so it will do the check, and having a check, what happens? You will go when a sales order is blocked. You see that why this sales order is blocked. Oh, this is because of this check rule. What this check rule is? This check rule is the number of maximum dunning levels. Oh, this guy is not making payment. So when you call them, they said that, hey, your invoice is going to our old office, and they are taking their own time because our accounts payable team moved out to a different building. It takes 2 days, or it takes 10 days, or it will come because of so-and-so reason. Then what you to do, if you have to make changes in your system, that is in our system, will make the changes. Okay, whatever it is, all those things can be sorted out by having a proper checks. Okay, so this is a check rule. The config is driving from here 1 to 3. That is your default all checks active, credit limit check only, static, and credit limit check dynamic. This is a relation, to be honest, that I want to let you know. Okay. So document.
Can we check one rule in little more detail? Define check rules and go into one check rule, maybe one or two of them. At least we can have can you go inside one check rule, how it has been defined?
This is your sub-steps.
Static checks check. And how inside configuration, static check for credit exposure, how that's
that's what I said here, right? So what you have to do is you have to, it's a system group. Then you define the system group. Domain is are maintained, but you can check with the developer. Will help you on the functionalities. That is, you will have an enhancements, right? So you have to check that enhancements and get the help and define this. This step has to have this static check rate exposure. He has to look into that in the enhancements. Okay, so values will be defined here. System group 00 credit insurance is here, is available or not. This will come your check rule settings that you do through enhancements, not directly given everywhere. This you can give it here. Some of them you can give it, but everything you cannot give.
Okay. So most of them would require help from a developer as well. So
some of the enhancement, when you do the enhancement, you need. See, suppose you take a DS4. Okay. DS2 means what? Day sales outstanding. How many days sales outstanding you cannot directly configure here. To see the DS4, there will be a formula to define DS4 your business will give you. For that, you need to take some of them enhancement. That's the reason, as I mentioned earlier, you see that how many enhancements are there in each area. You see this everywhere you will have an enhancements. You will have major enhancements here. These are all the various enhancements. You see individual steps for check rules. Here you need to have a baddie. Okay. So you have a check rules. For every check rule, you will be having buddy. See that? Check for maximum dunning level. Check for his oldest open item. Check for overdue open items. Okay. So this is the same thing check rules that we are talking about, right? Step 10, 20, 30, 40. So you need to work with the developer to specify it. It comes part of your enhancement. Actually, I didn't come here. I thought I need to come here. So at least I can exploit. So these check rules, you need to have your ABAP code that they will put a placeholder here. You see this, these accounts and these days, okay? Aging display, how many aging that you want to enter, how many aging they have to do it. They have to have maintain a different tables also. You may need to land up in doing it. As I mentioned, it's not like your straightforward config settings because it's a placeholder. Every industry, every business will be different how they operate, okay? So you need to work with your, it's not a complex, but you need to work with your developer. Everywhere you will have your enhancements as such. You can give certain basic stuff, but everything is not possible. Is your question answered?
Okay, thank you.
Yep, no problem. So you have defined check rules and you can have that what type of checks you can do it. Some of them it will come here, some of them you need to get your developer. Okay, now if we go to the next one, settings in case of case management component, file profile search. We've seen this profile search, right? Okay. Assign logical system to the element type for business object. So when you have two different systems, you need to maintain your element type and the logical system. So don't think it's an external system. Within SAP also, you may have different components. As I mentioned earlier, if you are having a TPM or Salesforce, they will be having different connectivity points for the purpose of integrating and interfacing with your credit management. Okay. If your Salesforce, your master data comes from your Salesforce. If you are having a different ordering system, and because as I mentioned, it's in a centralized system, right? Your FSCM credit management is centralized. So if you're having an SAP, non-SAP, and within SAP, different web applications, and if the data is flowing into multiple landscapes, then you need to define the logical systems, element types of the business object. That's where you will put it here. You use this one in the dispute management as well when you have a different system like PPM or Salesforce that you want to integrate and block and receive and send the data back to your FSCM. You will use that particular setting. Okay, so define derivation of element types. So you have various elements that you will be using it. Normally, this is used for your contract accounting. Okay, so most of the contract accounting related, when you determine the element type, what type of elements that you will use it, you can use this. Normally, you may not need it, but if you are using your S case, that is for your dispute case, and you also will have some of your settings that you do VBAK and VBRK, you will use this here. You can use in a UKM as well, but it's more of the SD side that you will be using it. Okay, so VBRK table from SD side. So any data, any element that you are using those tables, that will be helpful here. So this is assign HTTP destination for DCD actions. Sometimes what happens is you may have a third-party system where your attachments will be coming to, attachments are coming from third-party system. You will have a different integration. Integration means your third-party system is not a credit check, guys. It's not credit check. It is some attachments related. Example I'm giving. So few business partners and different case or different credit limit request, credit case type. If you are viewing in a different system where you keep your all the documentation, if you have to integrate them, then you will use this type of HTTP destination where these are added. But otherwise, you may not have to have this. If there is any request, then you can explore this one like market data, exchange rate. It is used for treasury. But in case of UKM 00 for credit management, you may get most of the third-party application for the purpose of storing the credit management related documentations. Okay, it could be anything. It could be anything. If you are using any sensitive data or you want to have a third party who will give interface and integrate with your business partner as well as your case types and approvals, all these things that you can integrate in case if it is required. But as I mentioned, you will not be using this for every of implementation. Define status of automatic closing. We can see this in your dispute is really good example in a dispute case. But here in FSCM, a document credit decision. What is a document credit decision? Do you remember that what it is, document credit decision, or we don't remember? We talked yesterday on.
Yes, document.
What purpose we use?
Generally used whenever any analyst need any data to get approval for change in the credit limit or the release of the sales order or the release of the delivery, all those things.
Whoever it is, excellent. So whenever a credit analyst make a request either to increase the credit limit or set up a credit limit for a new business partner, what they do, what he or she do, he will put all the request on the credit decision document and submit it, and it goes to whom? It goes to approval. Okay, and you have been doing it, and if it is not approved for 35 days, you want the system to close it automatically. Okay, so how many days you want to hold it before you automatically close the system is that you will do this setting here. Let me take you quickly. I can show you where it's possible. UKM underscore case. This is a credit limit, right? Okay. DCD, documented credit decision. Okay. You see this? Close, close, and close. In case if you want to do mass closure, could be any reason. Could be any reason. When you have your existing migration, you wrongly entered. Okay. Or some of the approvers, they changed it. The authority got changed. Or you already submitted. After that, it was mentioned that, okay, that request didn't go it and we want to close it, create another request. Then they create another request. Like that, there will be a lot of things that will be pending. The managers or supervisor, if they don't approve it, then system will automatically close after 30 days of a creation. That is the setting that you have seen that automatically close the dispute. Automatically close the document credit decision. Okay, so you put 35 days. If you want, you can change it. When you do in the workshop, these questions will come. Or if I can close the document credit decision, if it is not approved within so and so days, you can put it. Define case type for document credit decision. Automatic closure was the one, and this is case type, and you need the rules as well. Okay, so you want to document credit decision. Document credit decision account is the credit decision credit management. What rules you want to put, you can put SAP all standard. And if you want to use these rules, you can use it. I never used it, to be honest. You may not need this one, but that's okay. So you have a different case type. You can apply a different rule. Okay. So why you need a different case types? So case type is if a company has in a different credit segment that you define, if you want a separate case type for each one of them, you can explore that it can be used a case type for within the credit decision management. It will become so complex. So people normally use whatever is the standard. They will just copy of the standard and they will use it. They don't normally go for a different credit case types. Okay. It is particularly, integrated with RMS ID. I think RMS ID, let me show it to you where we have RMS ID. We will have RMS ID. Okay, SAP might have taken out this RMS ID in ECC version, it looks like. Otherwise, audit may come in the dispute management. It comes both, I believe. Okay. Oh, yeah. You have RMS ID is used. Okay, when it comes to dispute, we'll discuss about it. Okay. So RMS ID is something that where you will define a record model. So RMS ID is record model section. It is used for the purpose of defining your own models. Some companies, they also define their own model when they use the case type. But otherwise, you can use the existing one because there will be around 36 steps that you need to follow. That's a one-time activity. You and basis will be using it, those record models. Otherwise, you may not need that one. Similarly, for the case type also, you can use the existing one. So define approval process. If you have a different credit segment, and you can use it different credit segment for different risk classes. Okay. So if you want to default it, no default risk. And if you want approval, you can use an approvabilities, and you can see the threshold value. Threshold means that if you want to put some minimum maximum amount that if you want for this particular credit segment. So these are all the values that you normally define whenever you make this configuration setting. Create forms, right? Where do you create forms? When you do sales, when you do sales invoice, don't use forms. I don't know how many you are worked on rise up objects, but for whatever reason, if you want to define your rules, and if you want to assign the documents for your audit purpose, you can use the type of forms that you want to use for the purpose of so and so internal form or external form, or for what form that you want to use. SAP provided some standard, but they can go with your development. Well, some of the credit decision you may need to have a hard copy, and if you want to have to convert into the PDF, and those PDF can be stored in an external drive or in archiving folder, then you can convert them into PDF and you can store them. So that's where for this rule, for this case type, you can say this is the form. For this, for B2C, this is the B2B. Okay, SAP all standard by default. SAP all standard by default. The difference here is different case types and different rules and different forms will be there. I don't know whether you are aware of or not, but you will have a conversion option. Conversion option means you can convert a SAP attributes or data whenever you want to print. Okay, that you'll use for PDF formats. Okay, so any enhancement that you want to do for document credit decision and attributes that you want to add for credit decision, that enhancement can be done here. For sure, there will be a lot of baddies. Okay, guys. Okay, now let's go to master data bag and looking into the formulas. Did we see this one? What did we do here? Yes, you need to do at least something in middle of the screen. You did something. What is that?
We need to, we have covered the things. Let's speak out.
Rating. Extra.
Rating. The rating process, the DNB, we decided as we define this and we maintain these values. Okay. This is little interesting topic. Let's go to business partner. Okay. You see this? This one we maintained yesterday, 26th March. Okay. Now the DNB, unless I maintain here in the configuration, I cannot maintain these values here. Okay. So your company, that is your ABC Corporation, when they talk to your DNB company, you want a rating of this business partner. They said that, okay, I can give you the rating 1, 1A, 2, 2A like this. These are our ratings. The maximum rating is, this is my maximum rating. Okay. You can put whatever the rank you want to put, you can put it. But this is my maximum rating from Dun & Bradstreet. Okay. Now, what happens is I put it as small, it can go as a capital normally. So what is the rating here for this business partner? 1. It's a positive trend. Positive trend means they're progressing and they're good. After 6 months, when I come to 26 months rated, right? So what I put it is a valid from here to here. So the default, they put it here, but otherwise I put it 6 months. Somebody asked during the call. So I put it for 6 months.
When it put it from valid from year to 6 months, after 6 months, I want to go to DNB and get the rating of this business partner based on their performance in the market. Okay, based on their performance in the business or based on the performance in the stock market. Their share may be growing well and they're really doing good. Okay. Now, DNB says that we rated them as a triple A, AAA. This is the rating. So from here to they came from 1 to triple A, absolutely high rating. Now I need to change this. I'll go to this DNB guide. They say triple A is the rating. You don't directly get the rating and update here. You will update using from here, but this one is getting the information from Dun & Bradstreet, the third party. They will tell, then you will do is you will pull this one and update here. That's how it happens through your interface. Okay. So, but using this triple A, they may give the scoring of this. So this give, you can assign points for this particular triple A to determine your score. The moment you change this rating, you also will make the changing to these rules. Okay. So it could be a premium customers or it could be a very existing customer with a low risk. Right now, high risk is a low risk.
Which of the following transactions is used to create a money market deposit in TRM? Option A, FMMD. Option B, FMMC. Option C, FMMR. Option D, FMME. Take a moment to think, and when you are ready, choose the correct option. Remember, each choice holds a key to unlocking the answer. Good luck! Type the correct answer in the comment section. Hey there! Excited about mastering financial supply chain management? Our SAP S/4HANA FSCM TRM course is here to guide you. You can learn at your own pace, right here on our platform. In this course, you'll dive deep into SAP S/4HANA FSCM TRM. It's like a toolkit for managing supplies, ensuring we have what we need where we need it. Covering everything from the basics to advanced strategies, our course is designed by experts who really know their stuff. Your instructors are seasoned pros, ready to support you every step of the way and answer any questions you might have. And guess what? Our students absolutely love this course. Just like you, they've found it incredibly valuable. The best part? It's budget friendly. This amazing opportunity to level up your skills won't cost you an arm and a leg. Ready to become a SAP S/4HANA FSCM TRM whiz? Enroll now. For more details, visit ZaranTech's website.
So these things will happen automatically in the backend. You have a mass programs that you need to execute. I'll take you their mass. I think we've seen that some of the mass programs. So when you have to update these using this, which is coming from your Dun & Bradstreet, all this get changed here. We want to put stringent rules and we want to classify this business partner as a high risk or low risk. If it's a triple A, it's going to be changed to low risk. You increase the score. The moment you increase the score, then what happens? It will have an impact on increasing the credit limit. And it can also so happen, there right now the AAA, but some point of time, because of the market fluctuation or recession, they have been gone into 4A. The rating has gone 4A. Then you will specify rules for this rating. Then according to what system will do is it will go to the business partner based on the DUN number. Sorry, you know the DUNS number, right, that we maintain identified. Using the DUNS number, if you get the rating from the business partner, which is a 4A, then you have to change certain fields here. Okay, so you update this particular DNB rating as a AA. Okay, you change it to AA. Then sorry, what I said 4A. Now it is downgraded. Then you'll make it as a medium risk. Then when you change the medium risk, the score the score get changed and your risk loss also get changed. And accordingly, what happens? Again, your credit limit will be reduced. First score will change, then your risk loss will change. Then you have to go and change your credit limit. It can be done automatically. It can be done manually. Either way, it's done. So that is the relation. The one which you see in the right side is the configuration, guys. Okay. So this is for sure important because your client will certainly look for this if they are going for automation. Automation of what? Automation of everything on the business partner fields to update based on the rating procedure and other rules that are defined in the formula. Now we will go to, this is nothing but define customer credit group is nothing but you will define corporate, small or medium test. It is also coming in your business and the business partner. You see the credit group, right? You can define them if you want. If you want to have more, if you want to define them more, you can add it. Then it will come here. Then you will maintain that information. It's not so complex. Now this is the one where you have complexity in FSCM. Okay. Now if you see formula parameters in the test system, there's several maintained, but you see the B2B, B2C. Interesting, guys. This S4HANA latest version, you have a lot of those. Okay. So before I come here, talk about parameters, we'll go to the formulas. Okay. So B2B, sorry, this is a virtual system, right? So moving these screens will have little difficulty. Okay. So you see here rules for existing customer private. Rules for existing customer for private. What are those? It should be score for private customers, score for business customers, score for existing customer. Where you see the scores for existing customers? Rules. Okay. Why are rules I see? Where they have? Okay. These are the assignments. Okay. So you see this rules for existing customer. Rules for existing customer private. Okay. So B2C exist. So the B2C exist, you see score for BC2. Okay. So B2C exist is assigned to score underscore B2C. Score underscore B2C. Okay. So this is what it is one. But I want to see this case there. Somebody change it. Let me see. Suppose the B2B existing, B2B new. I take B2B existing. So what they had? Score B2B. Okay, we'll go to score B2B here. Score B2B. Okay, we'll see this one. So if I have this particular formula, okay, this for particular formula is used for calculation of credit score. So we can have a formula to derive a score, or you can have a formula to define a credit limit. Do you remember what are the formulas? Do you remember this?
Parameters, functions.
Parameters and functions. Excellent. Good, guys. Where I have. Okay. These are the things that we are talking about. Why you need this? To have this. Since we are here, let me explain you. If a business partner is nothing but your customer of your client, approach your client and say that, hey, I am into business. I want to buy goods and services from you. Can you give a credit? To give a credit, the business partner information will be taken from Dun & Bradstreet, and they will get some data points. That data point means how long the customer in the business, what type of business they do, where are they located. If it is in Afghanistan or if it is any countries, those are more of, what we call dispute related or challenge related. Then they don't want to take up, they want to give 0 points. Okay, I don't want to entertain any customers from so and so country, because there are a lot of Ukraine is there. Nothing wrong with the country. Okay, but if I get a customer from Ukraine for $1 million of order, do you think that I will try to fulfill that order? And do you think that I can send my goods to a customer in Ukraine? I have to do a lot of analysis. I've got order, that's fine, got $1 million. And they said that, yes, it is a good company. That's right. But right now, the situation in Ukraine is not good. And the goods and services for transports are having an issue. And we don't want to take any risk. We don't want to take any risk. With nothing wrong with that. We don't want to take risk. So that's the reason I give you the 0 points here. Number of employees with that a company. It's a small company. You have only 50 employees. Then it is, and they're all contractors. I don't want to take a risk on that. It's a 500 employees. I mean, it is in the UK. And if they're doing a kind of a manufacturing company, and they have been 50 years, I will treat them differently. So what I'll do is first using these parameters and using of functions. Functions is nothing but your arithmetic calculations. Okay. Using these parameters and function, I will give some weightage. If it is 11 to 20 years of a business, then I want to give a 10% of weightage to this particular score. Okay. Then I'll give the points. Then all these points I will add it and I will come a formula. to derive the score. So if the score is from 50 to 70, I will give this much credit limit. If the score is 71 to 90, I want to give this credit limit. If the score is greater than 90 and up to 100, I want to give a different credit score. These are all the formulas that you define to give a credit limit. Otherwise, you have say millions of customers, and millions of customers, you pay the money to your DNB, they get the data. Do you expect someone to make an Excel sheet for million people to analyze this data and give the score and give the credit? Absolutely not possible. You need hundreds of employees to do this rather than automatic in the system. Are you with me to understanding the formulas and scores?
Yes,
At least in Excel. I'm not talking about on the system. I'm not there in the system. At least if you understand this concept, then it will be easy for you to how the formulas are defined. Okay. I assume that you are getting it what I'm talking about, this rating and the scoring. Okay. Now, this B2B, I defined a different type of scoring. For score for business to business, score to business to customer. What is the B2B and B2C? In SAP, we call both as in business partners. Do you remember if when a customer is an individual, we will define as a business to C. If a customer is a business, maybe a sole proprietorship or a partnership or limited company, public limited company, government company, non-profit organization, or export customer, they're all your B2Bs. Individuals are B2Cs. But similarly, when you do in your business partner definition, there is an option, right? You have seen that whether a BP is to be created as a personal organization. Okay. So you'll define that in the system, what type of business partner is. If it's the individuals, then I will have a B2C. If it is an organization, I will use it as a B2B. So I will, because why? The reason is, if it is in a B2B and B2C, how do you get an information? If it is a B2B, you will get information about the company formation and memorandum of association, articles of association, who are the directors, what are the background, what are their approval capacity, whether they are having an approval from the board that these guys, they can authorize and they can execute the contracts. Those will happen if you have an organization. You have a KYC, right? With the bank. Bank will ask you previously KYC. What will ask you at the most? Give your PAN card, give your Aadhaar card, give your residence proof, give your pay stub, right? But your company is also a customer to the bank. Bank will not ask you to give Aadhaar number, PAN numbers of employees or even the directors. They do the take directors PAN card and Aadhaar, but on top of that, they see that whether they are allowed to nominate as the directors, okay? Whether they have a power to take the decision, what level they can take the decision. So the directors, okay, if it's a new company or if you're coming newly to me, then provide me this information. All those things will be part of your KYC. So similarly, when your ABC corporation of your client goes to DNB, they will get in a different information from DNB, and you will use all those things in the formula. So when you come here, you click on the score B2B formula. Example, it is defined for business to business customer. Click on the formula editor. Okay. So you see those formulas defined here. These are all your parameters. Okay. So you see the functions here. These are all the parameters. In the parameters, you see that different fields are here. Bankruptcy, but and bankruptcy prior date and check permission of external information, the city and country, and you also have some of the house number, foundation, date of found date, foreclosure, date of foreclosure, first name, date of affidavit. Then you have your interim results to be stored. On the right side, you have a functions. These functions, if you see in the credit management, SAP says that you can use these functions. Okay, using these functions like age, annual income, annual sales, and subscription capital, total assets, debt ratio, dividend, equity capital. If you want to add, you can add few more. So these are all the functions and these are all the parameters. Now, using these arithmetical operators, either you can use these or you can type it directly. But if you use this this plus, minus, or all these attributes that at the time of creating the formula, then it will derive the formula properly. Okay. Now see that how these formulas are defined. So when you define a formula, you have to go to export mode. Okay, it's in a display mode. You can't make any changes here. This is your export mode. When you click on export mode, it will become editable. Okay. So what this formula will do, see guys, this formula is a techno-functional activity. Okay. If you are comfortable using it, you can do it, but you can take a descriptive form from your client and sit with your ABAP and come out that whether all the functions are available here and parameters are available here. If functions are not available, you need to get these functions added using your body. Okay, so let me go to, you see this here? Here you have a body. So using this body, I don't think what body, they didn't have any body here, but using this body, you can define new functions and parameters in your formula row. Okay, so using this for these functions and parameters, if you want to add, you need to get help from your developer because they add them into the method. Using that method, they try to get what are the functions that they want to check. Okay, so here you will see this. You are having a fixed value 0 if the native customer list. Do you see anywhere in the native customer list? Where is the native customer list? If the customer is here, you have in the, did I have shown this one? Okay, negative and premium customer list. If you define them any of the business partner as a negative blacklist, then you will have a condition here. The value of the points is 0. These are all the points that you normally give it, and it will store C_4 rating score. Okay, you have an option to store in a different interim results. Interim result 1, interim result 2, interim 3, interim 5. So these results will be stored here, and at the end you will have a final result how you want to do all your formulas. So you have a weightage, you have the weightage in the final result. Now, what are the various steps in the defining a formula? So you have a native employee. If the business partner is a native list and it is true, the rating will be 0. Okay. Similarly, if the customer is the premium list, then the formula is 100. I mean, the points are 100. Here the rating points are 0. Here the rating points are 100. Why? Because it is in premium list. Here it is negative list. Okay. Similarly, foreclosure. What is the foreclosure? If employee is running out of the business than expected, within 2 years, 3 years, they close the business. Okay. So it means running the business closed. If the customer business close the business means why you need rating here? No. In different companies, they have a different wording. Okay. This company earlier, they opened a business, same directors and under the same umbrella. They opened a business. Within the 2 years, they closed it. They opened a new. Now they're coming to us. So how do you think? That guy is 2 years back, he put a business in our scenario, in Indian scenario. Or this guy's 2 years, they did a business, he closed it. Now I opened another new business. He has to pay money to a lot of people. Somehow he filed a bankruptcy. Now he is coming out and he opened a new business. How do you treat them? You can't trust them, right? So if you have a foreclosure, means closing the business ahead of a time, then you will give 0. Okay, like that. If similarly filed any insolvency in the past, then there also you will give 0. Then external rating, you see the external rating true. If the external rating is having a less than greater than the value that you take it from this rating partner, then you will give a different points or here. Depends upon, because your ratings are different, right? 0, 1, 1A, 2A, 3A. So you take the parameter from the rating, this particular OXCT rating partner, business partner, and you take the OXCT, the value, and if the value is this much, then you take a decision how much you want to give. Okay. So then you finally give the weighment results. Weighing, you have to give the weight, how much you want to give the rate here. Then it is a legal form. So if it is a organization is illegal, if it this country, okay, is it true, then result is this much. And because the Germany, you're taking it's a legal form of the Germany. So limited liability company, then rating is 7. If it's a partnership, you give the rating is a 5. So all these you will do at the different weighments. I mean, weighing, you have to weight, right? Average or monthly, that what, just like that, collect all the points, then you'll put it your average at the end of the result. That result get updated based on this particular score underscore B2B. Any questions? This is SAP provided sample formula. Do you think I can do it or you can do it? Don't think in that way. Okay. When you start working, And when you understand this, when you work with the above part for some time, you'll be able to do it. Just you need to have an kind of experience with validation and substitutions with some basic programming knowledge. You will be able to do it, taking the parameters and functions. To enter this here, you need to go to expert mode. Okay. Then when a formula, if it is not right or wrong, what you can do is you keep your cursor here, just check it. It says if there is an error, it says that formula is having an error. If the no error is there, then you can go and save this. It will allow you to save the formula. It will create a transport request. Okay. I didn't make any changes. It's just asking, but otherwise it says that all that what you did, the formulas will change it. Then you can import into a different client. You will have functions and parameters. Using in functions and parameters, you define the formula, and the formula will have the points. Those points will be converted into score. Those scores will be assigned to this particular score B2B. This score B2B is assigned where? Guys, where it is assigned? Here, score for private customers. Okay, you see this all. External agencies, default scorecard, rules for existing customer, rules for existing customer private, rules for new business. So you will have in a different formulas you defined it. Okay, I'll just come out from here. So these are the different formulas that you have. And formulas can be defined for what purposes? And score and limit also. Okay. So this is for risk class. Using this risk class, you can say that where I can use the formula, you can tell what the credit limit that I need to get it. It all depends on the configuration. So using a risk class, see, if you derive the risk class, based on the risk classes, you will have a score. And using a score and risk classes, you can define your credit limit as well. Normally, in most of the clients, they use the score. They don't use the credit limit formulas because credit limit formulas are more complex than the score. In the score, you're not doing anything other than changing your risk classes. But whereas in case of limit, it goes in a different currencies. It goes for the different hierarchy of the customers. Okay. So using a hierarchy of the customers and the risk classes and the score parameter, considering you can define the credit limit formulas also. But my experience, I see the customers defining the score only, but not the credit limit. But SAP provides both. Now, if you're looking for the type of business, say there is a banking customer. If it's a banking customer, what they do is they just do only two things: as an individual or companies. Okay, but the companies, they don't give a credit limit like a credit cards. They will give you the loans, right? But as an individual, you will have a credit card. But if you're taking a credit card, the documentation and KYC, whatever you need, is not equivalent for your term loan, right? The vehicle loan, term loan, you don't need it. For your personal, for credit card, all that what they need your employee slip and Aadhaar card. That's it. You will get your credit card, right? At that time, the setting up of a rule or credit limit easy. So credit card companies, the way they do your credit score is different than for your term loans. Even if you have a less credit score, you are eligible for term loan. But if your score is less, you will not be given the more credit limit. Getting my point? If a score is not good, you will get a credit, but your limit will be like credit limit will be $1,000, $2,000. But if you go for term loan, they can give you even 20,000, 15,000, even if your credit score is little less. The reason is, if you're giving a term loan or any kind of a mortgage loan, they are secured. They will have their collaterals. But in case of the credit cards, if your score is not good, bank, they don't want to take risk of giving a more loan. At that time, the calculation of a credit limit, particularly for the banking industry, if they're using FSCM credit management, if they want to define a credit limit, it will be simple. If the employee is in a so-and-so organization, if the income is from this range to this range, you give this credit limit. But that is not the case in case of a score. Score means they'll get all the information. Since the score is strong enough to get the details, everybody prefer to go for score. Okay. So this is a 3-step assignment. We have defined the formula. Okay. So these formulas are assigned to rules. Okay. So we have seen the B2B existing. The score is assigned to score B2B to B2B existing. So this B2B existing rules for existing customer are assigned to your business partner. That is the relation. Okay. It's certainly going to be an interview question. And it is the main functionality of your FSCM credit management, where the big organization, they want to take full advantage of FSCM credit management. They certainly look for your skill set of your formula and formula builder. Now tell me, guys, what is your open questions here?
Here, whatever we created the rules, right? So the rules we can assign the credit profile, right? So means how the form means what is the score, all those things. So based on that, they check the credit limit on that case. How much they need to give the credit.
To get all the information about business part. Okay. Some of them can be internal and some of them can be external. Okay. What are the internal rating and what are the external rating?
External rating is
yeah. So suppose if you take your business partner is with you for 5 years. Okay. The business partner with you for 5 years doesn't mean that he is a strong guy in the business, or doing a 5 years business with you may be much stronger than you expected. Either one is possible. So what you do internal rating means how long you have been, how long that customer is with us, how is his payment behavior. Okay. And what is the oldest open item? What are the key performance indicator you have, right? Did he make any payment fails, or is he making any late payments? So those things are internal information, but that is not sufficient. You may not be doing good in the outside market, or maybe doing excellent than what you expect in the market. If he's doing really excellent, and if you give more credit limit, he will do more business with you. You're losing a business opportunity, right? Without properly analyzing and evaluating your business partner. If you evaluate it, right now his credit limit is $10,000. If you evaluate in the outside, he is doing very excellent business. He is also going to our competitors and buying material from competitors, because he is buying the material from competitors, they give a more credit limit to them. But whereas I never evaluated the customer, both from internal standpoint and external standpoint, and we gave him a 5,000 or 10,000 of credit limit, and he is doing a business only $20,000 worth at any time. Then what is the problem here? We didn't give more credit limit, and he's not doing more business to us, and we are losing the business. And it will have effect on your sales. It will have effect on your revenue. It will have effect on your profit. So for your ABC company, it is necessary that they evaluate the customers properly. At the time of evaluating, take all your internal information from your internal source, then go to the credit rating agency, get the external credit information. Okay. Once you have the rating, you have a parameters, right? We discussed about the parameters and functions. We discussed about all these parameters, right? So get all the parameters and functions, then do the rating, then do a formula. Okay. When you do a formula, then you derive points. Okay. Once you derive a points, you derive score. Once you derive the score, then change or update the risk class. Once you update the risk class, update the credit. This is a bottom to up approach. Okay. Is it clear?
Thank you. Thank you. Yeah, clear.
So do the rating, do a formula, derive points, use the points, derive the score, and use them deriving the score, change, update the risk class, then using update the risk class, update the credit limit. It could be a positive or negative, doesn't matter. Okay. So what the positive will do, what the negative will do, if you are evaluating your business partner properly, and if you're classifying it, if they are really doing good, give a more credit limit so that your business will grow. If that is in a negative, that is both internal and external is a negative, reduce the credit limit or put more stringent rules. Yes, I gave you $10,000 of credit limit. I'm still sticking on it to you. But the condition is you have to make payments on time, or I should not make any reminders for payments, and don't do big orders in a single request. Okay. So you can put so many check rules and stringent rules. Either way, the objective is one, improper performance. Customers who are not performing well should not have a more credit limit. At the same time, customers who are performing well should not have a less credit limit. Good guys will have a good credit limit, bad guys will have bad credit limit. That evaluation is happening through these particular steps. Rate them, put a formula, give a points, give a score, update the risk loss, and update the credit limit. Why I'm repeating is this is all the important things. That's the reason I'm putting it again and again. Okay, I'll give you a good example. It's offline. Okay, I don't know anyone tried for Canada immigration. It looks like silly, but I want to say how the point system they do. They will have point system. Okay, you are eligible if you are more than 5 points. I'm just giving you more than 5 points or 7 points. Okay, you are eligible for 7 points to apply for a Canada immigration. I'm just giving an example, guys. Don't take it seriously. I'm not an immigration attorney. Okay, you have a point. Your points are more than 7 system. They say how you get the points. 1, do you have a relative? Okay, then you will get 4 points. 2, do you have a master degree? You will get 3 points. 3, do you have a job in Canada, or did anybody offer? Then you will have, then you will have another 3 points. 4, do you have what else we can say? Do you have master degree? Do you have a relative? Do you have job? And they may say, master degree. Okay, take these 3 only. Okay, so if you don't have these 2, what is your score? You don't have any of these. What is your score? You have only 3. You have a job in Canada. You may say, how you can have a job without a qualification? You may get an agricultural job as well, labor job as well. You get a nurse job as well. Anything you can get it, right? Without degree, you don't have a relative, you don't have master degree, but you have a job. How many is your points? 3 points. Are you eligible for immigration? No. You have a master degree and job. You don't have any relative there. You will get 6. Are you eligible? No. Okay. And whereas you have your relative and you have a master degree, but you don't have a job. Are you eligible? I put it as equal to or equal to or
it's greater than 7.
Like equal to or say equal to or greater 7. So if you have a relative, you have a master degree, but you don't have a job. Are you eligible for immigration?
Yes.
Yes. Okay. This is a point system. Once you have points here, then you also have a score. Okay. How the score will be done? You need to see, I gave only 3. Okay. I gave you only 3. There are so many parameters there. Okay. You will have in a point system. In the point system, what they do is you have 0 to 5 points. You will be given 20 score. If you are having a 5 to 6, you will be given 30 score. Just to make you understand, guys, I gave the immigration system the points concept. Okay. If you have 6 to 7 points, you may give 30 score. You are having 7 to 8, then you may have you are having 40 score. Okay. So based on the score, they may change the priority of your application processing. Here they may say even are you a government employee? Example, are you a government employee? Okay. Or you say, are you from army? Within this also, you can say master degree. You have a medical master degree. You are having engineering. You are even a specialized PhD. Those things they may put it, and they will pay more point system. Okay. So you have 7 points means you will fall under this. So you will become either 30 or 40. Okay. 7 greater than 7 means you will fall here. If you are 7 means you'll fall here. They may give a different treatment. So this is nothing but your point systems. Pointing system, how to the pointing. Okay. Based on the point, they will come the score. It's the same thing that I'm explaining here, how this point will be done when you are having your business partner definition in the system. Okay. So if you are based on the point, if you derive the score, using the score, you say credit limit this score is this credit limit, this is a credit limit you will mention in the business partner credit segment level. So this is what it is. If you understand that what I mentioned here, this one you can forget about, guys. It is just explaining, but it's nothing to do with the business partner. How the point system works, I gave you. So you need to rating from external system. You have in a different formula using a formula points, score, risk loss, and credit limit. Okay. So the same thing that you will be doing here among your score formula, assigning it to roles, and this rule will be assigned to business partner. Okay, now let me do little more explanation like score formula assigned to, okay, then rule assigned to business partner under credit segment. Not general data, right? It should be general data, sorry. It should be or no?
Yes, credit profile, you can say.
This comes under credit segment. Yes, it comes under credit segment.
No, it's in general data.
It
These are the
is
general data, credit.
credit profile. Yep. This comes under credit profile. Okay, good catch. Okay, so this is what you do in case of formulas. So the acceptance of document credit decision, attributes of the document credit decision, data for snapshot of document credit decision. These are all the baddies that you will be using it when you are working on the credit decision screen, which we have shown that, like, putting a sales analyst, putting everything and sending it for approval. Now, credit exposure. What is a credit exposure? What is credit exposure?
Open orders, payments, deliveries, open deliveries.
Correct. So what you want to consider for your credit exposure, you will define them. So basically, there are only the 4 that we added, but subsequently SAP added S/4HANA several. But normally, most of the customers, they do only most of your clients, they do open orders. Then you have open invoices, delivery, and billing document value. You have agency document and service confirmation, and special credit exposure, trading contracts, subscription contracts. These are for specific industry like BRIM. I don't know how many of you have seen billing and revenue innovation management. Those areas that they will be seeing it. So subscription order solution and subscription contract and service confirmation and trading contract, these are all part of billing and revenue innovation management agency document. But otherwise, your regular is your billing document value, open invoice value, and the sales order and service. There's open orders, and we have what is the open invoices, billing, open orders, delivery. Yeah, delivery value. So these are the ones, those are used for your normal SD modules. Okay, so you can see that what you want to show in the exposure screen, that's where you put it. This is what you want to consider. The remaining will not be considered. Okay. Now coming to the process, define events and process on process. There are several events are defined. What is to be triggered for when it's to be triggered. These events will be used by your development guys. Okay. So workflow events and calculate score events. When it is to be defined, those things you will be seeing it in your development objects. So you need workflow, right? For sure, you need it 2 places. Okay. So you see the enhancements, several enhancements. I may not be able to talk on all of them because some of them are not relevant. Some of them are relevant. So additional attributes for business partner. When you are having a business partner, if you want to add additional attributes, you have to implement the enhancements. And similarly for blacklist and allowed list, formula parameters and function, ID search. You see that, right? ID case search, you have a limited 500. In case if you want to increase more, those type of things, you can use the baddie. Evaluate external credit information. So when you have multiple credit rating agencies, like I said, DNB, if a PDX will be there, Modi will be there. Using not its MOO DY, Modi is in a different company who will be doing your credit rating. Those things, if you want to evaluate, you can use this baddie functionality. Criteria for mass processing. You have mass processing, we have seen that, right? Yesterday, a lot of mass processing transactions we have seen. Do you remember any of the mass? These are of the mass transactions. Okay. Okay. So similarly, if you want to do individual step for credit check, we spoke about the steps. Okay. Step 1, step 10, 20, 30. So those steps, if you want to have any baddies, you have to do it. You can do it similarly for liabilities, payment behavior, and follow-on process. And then you have a partner number with the different procedures, partner number for customer numbers. So conversion of partner number with customer. This one was that we are talking about. Okay. So CVA, customer vendor integration, like is running a program. UK mass data reconcile. So when you have an existing customers and you don't have FSCM implemented, your business partner needs to be converted. So your customers have to be converted into business partners. Oh, okay. So you can do both the ways. You have a business partner to customer, customer to business partner. So basically what happens is you have an ECC, you have customers. You can set the system when a new customer is created, system creates a business partner. Existing customers, one-time conversion program, all customers will be converted into business partners. For the new customers, as soon as a new customer is created, system will create the new business partner. On the other side, you can also set in the system if a new system creates a customer. Okay, your tables are different and the data required for business partner and customer is different, but it will do at general data. If you do business partner general data, it will create a customers with the general data. Okay, from here, if you want to extend to company code, you can extend it. But here, when a customer is created, it creates only business partner general. Then you have to extend to UKM000 per role. There's a role. So to do this type of activities, you can use this convert option, CVI program. There is a customer vendor integration. That program you need to execute. There's a program name I can give you to sometime later. Don't remember, it's too long the program name is. That you need to schedule it in the background. Okay, so debt recovery score from information provider. I don't know what it is. I never used it. Save data from external credit agency. So when you get an external credit rating agency data, there are two types I spoke to you. It could be your credit cloud integration system or file-based integration. If also, okay. Normally, people don't prefer IDOCs, rather either SAP credit cloud integration or file-based interface. It means you will send in a request to the DNB. I need information about these business partners using so and so done numbers, and you download the file and you upload into SAP. You will have a template. I mean, either way, once you download the data, once you get the data from DNB, you can save the data. How you have to save that is this particular body will help you. Is a placeholder, basically baddies. Get value of formula parameters in credit management. So when you have methods to be done, how the values get it, you'll use this baddie functionality. Business add-on, baddie is nothing but business add-on is a piece of code that will be inserting in the existing functionality for your client's business needs. So then you will be using these enhancements. Okay. So this is the core, your credit management. Now you see the integration. There are three types of an integration. One is integration with accounts receivable management. Other one is integration with your sales and distribution. And the final one is your integration with services. Okay. So now, if you see this, some of them we discussed. Okay. So don't worry about that. We're going back again. So deactivating of a credit segment, deactivated credit management of the system. You just click this checkbox and the entire FSCM credit management get deactivated. If you want to activate our credit management, then you have to use this baddie. Okay. So earlier we didn't have this deactivation functionality in FSCM. It looks like they gave this one, but surprising that, but they don't want to do that one. If you deactivate it, everything get deactivated. Okay. Now, sorry, this is an SAP credit management, not an FSCM. Anyway, so this one is IMG activity. This function needs to be activated. Normally, this will be done by your basis and above guys. Okay, so a one-time activity that you do. Define credit controlling area. It's there even in your ECC system also. What it will have? Credit controlling area. What currency this credit controlling area? Data for updating. You will use a different type of update functions. Open order values, open delivery and billing values, open delivery value, sales order, open billing documents. So here we are doing open order value in delivery and billing document values. So for this credit controlling area, you will be using your data to SD. And if you have any automatically creating for new customer, you can define this category credit limit, but you will be having only specific information, may not be required to fill every information when defining a credit controlling area. Okay, so once the credit controlling area is there, you also define a segment. So this is our credit segment that you need to be doing it. It's a demo system, right? So there may not be something that defined, but even they're available. Assign credit control area and credit segment. This is one assignment you would be doing it. Okay. So credit controlling area and credit segment. If it is applicable, this credit controlling area to credit segment, you just click on all the company codes. Okay. Then you will have credit exposure categories. The one which are checked here, we are getting here those. How you want to do it. Assign permitted credit controlling area company codes. This is company code and credit controlling area. The other one is credit segment to controlling area. So define reconciliation accounts without credit management update. We don't use this. If you have a recon account that needs to be used without credit management, you'll use a reconciliation accounts. Particularly, you will be using this when you are having your S4 and some of our with credit management data that you want to put in recon account, you do it. But otherwise, I never saw using anyone this functionality. So you have some of the custom enhancement for line item credit exposure data, calculation of payment behavior summary. Where do you get this payment behavior summary? We spoke about it. Where do you do this? Under this this is payment behavior key figures and KPI behavior, key performance indicator behavior. If you want to update them, then you need to have a body to pull those as well. Okay. So using this body, you'll be doing it. You have a conversion of partner number with a different procedure. Basically, when you want to convert your business partner using a different procedures, that you'll be doing it. But it is, I don't think anybody using this. But in case if you want to use any of the different procedures you want to convert your business partner, you can do that. Otherwise, your existing conversion program will be sufficient. Okay. Authorization. Define document value classes, assign document value classes. This is basically to maintain authorization. You'll be working with your security guys closely to maintain this authorization. Define credit group. This is interesting. Okay. So normally business will insist for this particular setting because you have a different individuals assigned to credit groups, and there will be a lot of issues when you have this credit group defined. Multiple credit segments, multiple credit controlling areas, multiple company codes, and thousands of customers. Few people working in credit management. Who has to approve which block or sales order? Who has to approve the credit segment fields of business partner? Who has to approve the credit limit? There will be people that they will be doing it. They said that, hey, these customers will come under this credit group. These customers will come under this credit group. Only these guys have to release the sales orders. Only these guys have to do updating a business partner for this credit segment. Those things, when it comes to business, then you need to define that, hey, these are the different credit group that you will be using it. And accordingly, the analyst will fall under that credit group. Okay. Assign sales documents and delivery documents. Credit limit checks for sales document types. Credit limit check for delivery types. Okay. This is your check credit group. So here that you will decide who will be the one doing this credit limit, whether it's to be done. Run simple credit check and warning messages, run simple credit limit check error messages, how you want to do for this respective step. Okay. You may need a hard error or you may need it only for warning messages. You can specify it. It is not this elaborate in earlier versions. In the latest versions, SAP gave so many types and so many options. Okay. So this way, this credit check, like, run simple credit check with errors message, and it will be done by so-and-so credit group, the credit group which we discussed earlier. Okay. So similarly for at the time of delivery types also, who will be the delivery credit group, who is your G credit group. So that you have to define the delivery types and credit group that who are authorized to do what for what functionality, what delivery types and what sales document types. Define automatic credit control. This is another important thing. You will be working with your SD guys. Okay. Normally it will be done by FI guys, but you have a dynamic credit check, dynamic credit control. Then you will be working with your SD guys, how you want to do your credit blocks. Okay. Credit check and credit blocks. So reaction status here stands for warning. If it is a B, it's going to be error. So you are having this credit controlling and this update using with this particular risk category. this is going to have an effect. Your risk category is almost going to have all these things updated that it's going to be done when you do your credit checks. So the same thing, your risk categories is to be defined, and this is a part of your design. Credit control group and risk category, and by credit controlling area. Define risk categories. Different automatic credit control, different risk categories. And again, you also have some enhancements here. Credit exposure update, connection SD to credit management, conversion of partner number to different processors, sending document credit decision. So you have an additional enhancements in case if you want to do around this. So we have seen integration services, assigning credit controlling area, exposure treatment of services. These things also we have seen. What is missing here between here and here? You have some identical steps, okay, between this and this. Now tell me why there are two different steps here, but identical. Try explain, explore it, give some blind answer, doesn't matter. It is in a collaborative. Yeah, it's basically, yeah, it's a collaborative approach. Some handled by your integration with the AR, some are integration with the SD. Okay, so with SD and AR, sometimes you may not have SD process. Good examples, service industries, like your financial credit card industry. You don't have any sales order, right? You'll create an FI invoices. Are you with me? SAP is applicable for all, but you don't have any logistics process for your banking services and financial companies and insurance companies. Only manufacturing and where you have a goods delivered, those will have your sales and distribution. Okay, so keeping in gut, it will be done either here, doesn't matter, but some settings are applicable specific to SD modules. You will be working with your SD guys to define these settings. Otherwise, here it's going to be the same. Okay, you define credit control here, you define credit control, you define credit segment, you define credit segment. Doesn't mean you do both the places by SD and U. It's not like that. Okay, some of them are common, but if you don't have an SD process, you can complete them under the AR. If you are having an SD, you can work with that guide and you define whatever is required that you can define. So you have some of them similar for integration with the services. You may have an external systems where you will be integrating, and those services, if you have, including it could be your TPM related, or it could be Salesforce related, because Salesforce also integrated here. Okay, if you have Salesforce, that updates a lot of information within FSCM if they have integrated with them. Okay, any questions so far? Did we miss any topic? Okay, now what are the open topics here? We are talking about how the process works. Okay, let me explain it to you by PPT. Okay, so customer send a sales order deal. For customers, what is this? It's your ABC company. Okay, so it is your ABC company, and this is your customer. When customer sends something like, he wants to buy something, what is for him and what is for you? When customers try to send that they want to procure something, for them it is going to be, guys, you have to be at least a little responsive. It is for them, it's a purchase order.
Yes.
And for your ABC company, it is
sales order.
Sales order. Okay. So when you get in a sales order, what will happen when you try to create a sales order? What happens when you try to create a sales order? What system will look for? It will look for a few things. That is, the customer should exist, or your business partner should exist. What the business partner is looking for, that material that should exist. That is from your logistics standpoint. Okay. If you have made the settings for given credit segment and credit controlling area and company code, if that setting exists, then what you do, you define your customer credit limit. Okay, so if the credit limit is available, then at this time of sales order, the sales order is created, and this is basically your configuration, right? So then what system will look for at the time of creating a sales order, then it look for credit limit. So when you're doing a credit limit, then what system will check? Other check rules as well. For sure it will do a credit limit. Okay, so what other things it will look? Check rules. What are some examples of check rules? What are some of the check rules? Credit limit, okay, that's fine. What are the other checks that they will do.
Credit score?
Yeah, that credit limit. See, when you have a credit limit, means that credit score is passed away. Or credit score, using a credit score, we do a credit limit. That is immediate check it will do. So you have a credit limit, okay, but even the credit limit is there, the order can be blocked. Why? I gave you some examples. Try to remember. This one, what I'm drawing is in a high level to just as a recap. That's the one somebody asked for the process, right? This is what I'm giving it.
It can be blocked if a sales order invoice is overdue.
Correct. So the invoicer example we have taken, right? That is yes or no. If it is no, the credit limit is no, then what happens? If there's no credit limit, what happens?
Sales order will get blocked.
Okay, so this is no. Credit limit exceeded or no credit limit. Shit. Okay, credit limit, yes. Then, okay. So then you have a credit limit, yes. But what it does, so if a credit limit is check rules, okay? Check rules. This is also check rules. So do a credit check rules as well. It also do the credit limit check, then it also do a rules check. So some of the rules checks that what we're talking is examples of credit check rules. If the rules comes, then what it does, it will block here also. Because I'm doing very high level, okay? I'm not just giving a lot of details. So what are these rules? Past overdue.
Just open it.
Then, yeah. Oldest to open item, number of dunning level, number of dunnings. Some example we're talking about. Even the credit limit is there. It doesn't mean that that the sales order can be processed. Okay, so then if the rules are there, then again it also get blocked here. No, credit limit no block. Rules exist, yes, right? So this is exist. It will check the rules, and if they fall any criteria, so that also leads to your block. Then here it is no. Then it goes the sales order will be cleared. It goes for picking, shipping, and delivery. Okay, the delivery also you do the similar check. So next steps. The next steps is your shipping, picking, or delivery, whatever it is, or review, whatever the workflows you have, what will do that one. Okay, so this what it will do in the high level process here. This is what it does. Whether you do in FSCM or on ECC is the same thing, but you have a different type of a credit rules engine. That's what it is playing the role in FSCM. Okay. Now, if your order, there should be end for year, right? Okay. So what you do, you will have a release option. You have to release the order, right? Here the manual work will be there. Order once blocked, then your SD guys or your FI guys, they'll work together and find out whether the order should be kept logged or released. They have BKM 4, BKM transaction, depends on the version of SAP. You use the VKM or VKM 11 or VKM 4 transaction to resolve the sales order. Okay, so that what it will do. It's a block, then somebody has to review and release the order or keep the order till the next, any of these queries that are there to resolve it and release the order. That will be done during the VKM 4 decision. That's it, release it the order. If you don't want to release, nothing to do. Okay, so if you want to keep it blocked, it will keep the block. This is the steps. So these are the process normally happen in the credit management, not specific to FSCM. Now, if you are coming to the FSCM, then tell me how it is different. What additional advantages, like advantage of FSCM? Okay, so you see that whether it is in FSCM credit management, standard credit management, this is all your credit process. So why you have to have an FSCM then? This limit is driving your score, and the score is from your rating. Then again, you will have risk class that you have to do risk what we call credit risk class will be there that you have to do it. Where is the risk class in the config? Did I miss it? 1 second. Risk class, there you go. I think we missed this risk classes. So do you see the score with the risk class? No default risk, there's no score at all for this risk class A. If I'm having a risk class B, is a very low risk. It means you can give the score 99. Higher the score, higher the limit. Higher the risk, lower the score, and lower the limit. Okay. So this one we need to define in the system. So the score what we give is that we want to define in the system based on the formula that we define in the formula editor. In the formula editor, if the risk class, if the score is say 62, okay, the score that we derived in the risk formula is 62 that it gave. So it falls under this particular medium risk. If this is the medium risk score that customer has, you define so and so amount of a credit limit. If the score is like 20, so 19 is the score. So that particular business partner fall under very high risk. Or when it is in a high risk, then the score is low and the credit limit is also low. Higher the risk, lower the credit limit, lower the score. And the lower the risk, higher the credit score, and higher will be the credit limit. So this score, because we give an interval from this score to this score between a business partner is having in a rating, then you say that let us define them as a low risk. How your no default risk will come into the picture? We spoke about it. Simple answer. Whom do you do no default risk or no risk? What type of customers will get that?
Government customers.
Yeah, government, intercompany, and one more export customers also you can put it.
Yeah, export customers.
Yeah, intercompany, government, and export customers, because export customers are supported by bank. Okay, we discussed that. So that is based on that you will have the risk class. Where do you define the risk class? Where do you see that?
The master account. Yeah.
Master account.
In the profile. In the BP, under the BP, you will get this in the credit profile. When the credit profile tab get enabled?
After we use that role, SAP Credit Management, UKM00.
Correct. When a business partner is extended to credit segment role, this credit profile tab will be enabled. When it is enabled, you will see rules, score, risk check rules, and credit groups. Under this, you have a rating, and below that, you are also having information category, right? Yeah, information category. Okay. These fields are available on the credit profile tab. If you create a business partner, you are not seeing a credit profile means that business partner is not extended to credit segment. So these are the check rules used for your credit score. If your rule is changed, farmers are not, they put it properly. So your default credit score also get changed. You see this? Default scorecard is 0. If you are going to existing customer private, system will derive your score. This is coming from your formula. From formula, you are also having in a default risk. When you are high, it's supposed to be low. Okay, you can, using the body, you can make these settings. Whenever the rules change and the score is getting higher, based on the score, this setting, based on the score setting, then system will also change the risk class accordingly. That is another setting that you can do it. Okay, anything else that you see here on the risk class? This is an important was. This risk class, you will be working with your SD guys. Okay. One important thing here that you need to see is how your customers are categorized is not known to FI guys and FSCM guys. It is known to SD guys. When you are implementing FSCM credit management, understand it. Understand if there are having a sales and distribution module. Okay. So if the sales and distribution module is there, and if they want to implement FSCM, if you have an OTC process like creating a sales order, picking, shipping, delivery, billing, and invoicing, you need to work with SD guys. Then what do SD guys do is defining in a check rules like a dynamic credit check rules or static credit check rules, defining the risk categories, defining the risk classes. It is a collaborative work that you need to do with the SD guys. Once that is done, you need to work with the business from FSCM as an FSCM consultant. What is to be updated on the business partner master data and how that change will be done. Okay, so it's a collaborative approach as far as credit management is concerned. Okay, so I'm putting a lot of stress here, this because the entire your credit management goes around this. It looks simple, but when you started looking into the settings, there are a lot of steps involved. Okay, guys, anything that you want to see, and anybody any other question that you want to? I know that there's a one program Yeah, there's a one program that I want to show it to you. Let me check. Sorry, anybody have questions? Somebody commented it.
Yeah. Actually, can you go back to that one screen where you were showing that risk class? And you said that there will be an collaborative setting done with the help of SD team, where they will be also specifying the categories based on which the risk class will be identified, right? If I'm not
Correct.
wrong, if I understood
Correct. That
correctly.
is right. That's right what you mentioned.
So my understanding basically, so whenever a sales document is created, based on that categorization, whatever salespeople or SD people has done, system will automatically populate the risk category into the sales document number in the sales document, which will help to trigger the check based on the credit management, like what all, for example, what will be the risk category been identified. Based on that, what will be the credit limit to be checked, what will be the credit case to be identified or limit to be identified for that respect to sales document. Next, am I getting correctly, just to understand?
Yeah,
Because
to certain extent, right? The credit limit is not associated with your sales document. Okay, it's not like with your sales order.
Not, yeah, sorry to interrupt, not with the sales document, but the values which are being processed. Like if I have done the delivery and if I have done the billing for that, so those value will be triggering my credit management, right? Indirectly, it will be linking to my credit management. It will be fluctuating the values, which will impact my credit management.
Correct.
Okay.
Do you remember that we discussed whenever a delivery happens, whenever an invoice is created, whenever the sales order is there or the open sales order, system will automatically calculate the credit exposure.
Credit exposure, that's right.
Okay. So the credit exposure will tell you how much limit you used it.
Okay.
Whenever a new sales order is reached and if the credit check is at sales order level and delivery level, system will come and check this credit limit. If the credit limit is less than the sales order level at the delivery level, system will block that sales order or delivery. Okay. But I'm talking about the collaborative approach with the sales and distribution guys is when you make a new implementation, any enhancements, any changes that occurred in FSCM credit management, if your client is having an SD module sales and distribution, you need to sit with your SD guys initially to understand how these customers are categorized, okay, and which customer should have what type of credit check rule, whether to do credit check or not to check. They say that we have this many business partners or we have these many customers, and of this, these are intercompany, these are the premium customers, these are government customers, these are export customers, these are the private customers, these are the customers we have identified always a risk or that is classified as a negative. Okay, so you have this means indirectly you need to have separate credit rules, separate risk classes. Okay, so the separate credit rules means you have a separate credit check rules for your private customers, and you need to have a separate for your export customer, for government customer. You can have them separately, and similarly, you will have a risk class, and you will have a credit limit. Don't do any credit check for your intercompany. Okay. And similarly, the government also, if you want to do a credit check, you can do it, but it may not be as stringent as your private customers in the negative list. You can keep it even for government customers also, the credit check, but it will be simple or it may not be required to have a so stringent rules. If it is in a private customers, you do oldest invoice, you can see dunning ladders, you can see highest sales order. Those things you can do private customers, but you don't have to do with the government. Okay, like that you need to define your different rules and a different credit limits and a different risk classes. So that's the reason, because FI guy may not be knowing it. Even SD guy also, you would not be knowing it. When you talk to the sales representatives, when you talk about the sales area managers, they will come up with a different type of category. And you will not be involved, but you will be sitting there to frame your mind that, oh, I may need this many rules. Oh, I may need this many classes. Oh, I may need these many grouping of your business partners. Like that, you need to frame and make a design. That's the reason I'm saying it. You need to sit with your SD folks.
Okay.
There's a designing part I'm talking about. Otherwise, what happens, you cannot keep a universal rule for everyone, right? Customers don't like that one.
And okay, and one more thing. So credit exposure is, it will be showing the cumulative value of everything, delivery as well as billing and all. So if
Only
I want
open,
to see,
only open.
yes. So if I want to see split of those, then is there any report or something which I can use or something?
Here only you see that, right? Here only you click on that, it will come. We have seen that for a different business partner.
Okay. Clear.
Okay, we have seen this different business partner. When we click here, it will display you all the messages like credit exposure, what the credit export consists of. Open deliveries open. If you click it, it will take you there also. That we have seen that yesterday. But you are taken to the different business partner, not this business partner. Okay. So anything else?
No, I'm good.
Okay, there are two open questions. One is how to change the validity period of your business partner's code. I'll find that one. And the second one is what I want to show you. I saw it for 30. Okay, that's fine. So we have conversion of a business partner. Okay. We have cross application functions where you see the business partner. Okay, basic settings. You see all these settings here for basic personal organization. Okay. So here you have your master data synchronization. Yes. So this is customer vendor integration CVI. Okay. This is where you make your master data synchronization. You need to execute synchronization of master data, synchronization of cockpit. So this will, what it will do is, if you have only your customers and vendors, and if you don't have a business partners, you will execute this. Your business partners, you will see that what type of business partners you have. You have to do partnership relationship, business partners only, business partner relationship. Okay. What type of BP type you want to, personal or manager, employee, partner type 001. Grouping, you need to take the group for the purpose of taking the number ranges. Okay. If you take an internal number range, when it has to create automatically. Okay. So you will have that only specific business partners role you need it. You need to mention that, then you execute it. Okay. When you execute it, all your customers will be converted into business partner. So this will tell you if there are any errors, it will bring up, hey, these are the errors that you have. Example, your business partner doesn't have tax jurisdiction code. Okay. And loading zones, time zones or loading zones or tax jurisdiction code. If they're not properly maintained at the time of creating a business partners, it will give you the list of errors in the business partners. What we are doing here, we have a customer. Okay. So we have a customer, take this one, customer to business partner. When you convert your customer to business partner, system will tell you that I'm going to create like this, and the business partner will be created. You can monitor here if there are any errors. Remember, I was talking to you this in your session. Let me show it to where I put it back. Yeah, do you see this? Not this one. Where I put that one. You see this one? What it is? Existing customer, one-time conversion program. All customers will be converted into BP, right? And similarly, business partner to customer. It means if you have business partners and you want to convert them, you will take this option. If you have customers and you want to convert them business partners, you can take this option. Your ECC and you're doing it right now, your LFB1, LFA1, KNA1, KNB1, all your customer in ECC are there, but you're in FSC means in a business partner. So all this customer needs to be converted using this. Now, why you have a business partner? Why need to create a customers? It is possible. Sometimes when you're having an external system like Salesforce, when you bring the Salesforce data to FSCM, Salesforce will use a business partner. They don't use customer. So those business partners using that, you can convert into customers. Okay. When you have when you acquire a system that is having business partners and you want to convert into your customers. But whatever it is, it is possible to do both using this synchronization config. Okay, so CVA, customer vendor integration customizing, that you need to complete this customization before you do anything. Okay, for this is for customers. Okay, you can see what roles you are having, what business partner grouping you are having, and any legal forms, the legal status are missing. All these things that you need to complete the configuration. Then you do a check. Okay, you do a general check, tax classification, registration, connection to PPO. So all these things, once you're done, then you execute this particular program. Okay, so this is converting your master data, and this is called master data synchronization. There is a bilateral synchronization. Bilateral means customer to BP, BP to customer. Either way you can do it.
All right, let's test your knowledge. Here's a question for you. Which subcomponent of TRM is responsible for managing foreign exchange risks and currency exposures? Option A, in-house cash. Option B, treasury and risk management. Option C, cash and liquidity management. Option D, bank account management. Take a moment to think, and when you're ready, choose the correct option. Remember, each choice holds a key to unlocking the answer. Good luck! Type the correct answer in the comment section. Hey there, excited about mastering financial supply chain management? Our SAP S/4HANA FSCM TRM course is here to guide you. You can learn at your own pace, right here on our platform. In this course, you'll dive deep into SAP S/4HANA FSCM TRM. It's like a toolkit for managing supplies, ensuring we have what we need where we need it. Covering everything from the basics to advanced strategies, our course is designed by experts who really know their stuff. Your instructors are seasoned pros, ready to support you every step of the way and answer any questions you might have. And guess what? Our students absolutely love this course. Just like you, they've found it incredibly valuable. The best part? It's budget friendly. This amazing opportunity to level up your skills won't cost you an arm and a leg. Ready to become a SAP S/4HANA FSCM TRM whiz? Enroll now. For more details, visit ZaranTech's website.